when do they want me to play the intro?
She's gonna chat you.
Now. Go now.
All right. Hello, everybody. Welcome to our very first small cap conference here at Benzinga. My name is Luke Jacoby on the Benzinga team. I'm here with Elliot. Elliot, how are you doing today?
Oh, I am fantastic. I am so excited for today. This is going to be an awesome event. 2 days. We have 2 days of content. This is incredible. Everybody get pumped, get comfortable, get some food and coffee because we're about to go.
And here's what I love about the fact that we have enough content to fill up 2 full days. Is the fact that the reason that Benzinga got started about 10 years ago and the way that we really got our footing in the financial media space was with coverage of small cap stocks, right? There are so many amazing small cap companies that are changing the world, changing the way consumers behave, defining what the future of our earth looks like, and they just don't get the coverage that they deserve. Right. And that's the vision that Benzinga had when just getting off the ground was. There are so many amazing things out there. These companies don't get the coverage they deserve. And now I'm glad that we're able to bring this in this virtual event format to a mass audience.
Yes, it is our first one of these. Now, albeit being virtual, it is still the first iteration of the small cap event for us. But in so doing, I think we're bringing a lot of really cool, unique, and diverse content from market education to presentations to industry-focused panels. It's going to be a heck of a few days. But Luke, tell us a little bit more about Benzinga. Maybe the story, maybe what we do a little bit.
Cool. So for anybody out there who doesn't know, we are a financial media company. We get about 50 million readers of our content every single month, both on our own site and also to all the places that we syndicate content out to, from Yahoo Finance to all the brokerages and that sort of thing. And our whole mission is to make financial information easier to consume, right? We want to take the jargon out. We want to make information accessible. We don't want it to just be, a small group of elites in a room that get access to information and to these amazing companies. I mean, we want to bring this to the masses, get the stories out there, and help people to make better investment decisions.
Absolutely. And we couldn't do this today without the companies that are joining us. One specific shout out I want to make is to our title partner, Markham. You can see that logo right there. Markham Accountants and Advisors. They have been a huge help to us in creating this. They've worked with hundreds of small and micro cap companies. Highly recommend looking into what they do. But Luke, if you could give us a little bit of insight. Now, if you're an investor, I know you dabble in stocks here and there. Maybe dabble is a little too light of a word. But if you could give some advice to investors watching the content over the next couple of days, what should they be looking for? How should they approach this content? Any advice you can give us?
Okay, I'm going to start with my high-level piece of advice that I do for every event that we have. Have your notebook out. Here's mine. Here's my pen. I've got one of those nice gel pens. All right. There is going to be so much content over the next 2 days that as much as we'd love to trust our brains to be able to retain all this information, remember the companies, remember why they're interesting, how they make money, and that sort of thing, we're not going to be able to do it. I'm just telling you now, even if you're Mensa IQ, we're not going to be able to do it. All right. Have the notebook out, have the pen ready. And I mean, again, the whole point of today is to help you to make better investment decisions, right? We're going to have about 50 companies presenting, 50 amazing, interesting, different companies presenting throughout the course of the day. And we're going to have education as well, right? So on our track, this is track 2. They say first is the worst, second is the best. So welcome to track 2, everyone. But on our track, on track 2, we're going to be doing a charting seminar. We're going to be talking about how to evaluate and trade penny stocks. We're going to be talking about cannabis. We're going to be talking about how to use fundamentals to justify a company's valuation. So you've got dozens and dozens of companies presenting. You've got amazing education from some of the best presenters in the world, people that have proven track records, have been doing this a long time. So have that notebook out. You're not going to want to miss anything.
Now, if I'm not mistaken, maybe last month was one of the best months on record for small cap stocks. So I think this is a unique opportunity for any investor, retail, institutional, accredited, otherwise, to look at some companies that are either A, established, or B, up and coming, and may not be as highly sought after. And this is a place to get that information, to get what they're doing and deep insights into those companies. So definitely stick around for the presentations, along with the education, like our first presenter, the Lizard King. Incredible name. Kind of jealous. That's fine. But one thing I do want you to touch on, Luke, I feel like we have some giveaways, so some prizes. Is that right? What's happening there?
Right. I don't want to sound too much like I'm doing an infomercial, but if today, if it wasn't enough that we have all these amazing companies presenting, you're gonna be able to get a glance at them that other people can't. And we have the education. We're also, at Benzinga, we like to do our raffles, we like to do our giveaways. So throughout the day, heading into every educational segment that we do today, we're going to be giving stuff away. We have our Benzinga Pro. That's our news and data terminal. It costs $2,000 a year. We're going to have a couple of those subscriptions that we're giving away. We've got a Benzinga merch store, so you can get some cool Benzinga shirts. We have our options course. We're going to be giving that away too. If you want to participate in the giveaways, there is a form that's going into the chat right now. Our producer Shelby is going to drop that link into the chat. So you'll be able to all you have to do is give your email address and your favorite stock for the upcoming week. That's all we want to know, because we want to get some of these stock ideas out there to other people.
I was like, I want to see some of those.
Your favorite stock, you must be present to win, and we're going to be pulling out those names throughout the day.
You must be present to win. Emphasize that. Please stick around for the content.
That makes it more fun, right?
Yes. Yes.
It's not fun to do a giveaway if you're reading the email the next day. I mean, you got to be on the edge of your seat waiting.
Now, before we hop into our first content, I'll let you introduce the wonderful Lizard King here in a bit. I do want everybody to understand there are two levels of watching this content. So a lot of people are watching from the event platform Brella. If you are on Brella, there are 3 streams. There is track 1, track 2, and a video on getting started within Brella. I recommend watching that video at some point if you haven't already, to get the breadth of the event platform. You can also get instructions on the platform on the event homepage. If you have any issues, shoot us an email, events@benzinga.com. We can help out. There is also a YouTube level of watching this. So we are not forgetting about you all. There are chats on both levels of watching. We will try to monitor both for questions. We will try to have the contacts of these companies be in there to answer questions as well. We are going to do our best to engage you. That is our goal here, is to engage this audience and put them in touch and facilitate conversations. If you have any questions, drop them in the chats throughout the day. We're here for you. That's my spiel. Luke, shall we get started, my friend?
I think we should, guys. So again, jam-packed day. Have that notebook out. If you want to find alpha in the markets, small cap stocks is one of the best ways to do it. And without further ado, we're going to get started with an intro on trading biotech stocks. I think these are some of the most elusive stocks out there. Our first guest is, as Elliot mentioned, the Lizard King. Mr. King, I see you on the screen now. How's it going, man?
Guys?
Welcome.
Thanks for having me.
Of course. Nice green background. I feel like that goes with
Lizard
the whole
green.
the vibe.
Yeah.
All right. I like that.
Fantastic. Awesome. I'll let you all take it away. Have a great presentation, and we'll be back soon.
Awesome. Great. So can I just pull up my presentation?
Yes, sir. Hit it up.
Awesome. Great. Thanks, guys. All right. How's it going, guys? My name is the Lizard King. Today we're going to be covering a little introduction into swinging penny stocks. We're going to break down who I am, get into some small cap introduction, and then go into the tools that I use to be a successful trader, what I search for, how I set up my watch lists, looking for the right type of chart setups that I like to get to that I consistently win in, and then the mentality I use to stop myself from taking losses. So I'm the Lizard King. I'm a full-time swing trader. I started day trading back in 2016 with crypto when Bitcoin went crazy and the altcoins started really taking off. That's where I first started dabbling with trading. It was a very similar situation to this year's pandemic with the market just going crazy with new traders. And so, yeah, that's when I started. And then when that kind of started to cool off, I moved my profits into small cap stocks. And since then, I've been having a great time doing it, having a lot of fun. And I started Lizard King Trading Group. We're an online education community with over 7,000 members and growing daily. We have a lot of fun there. And yeah, and there's my social media if you guys want to follow me, Stock Lizard King. So why would anyone get into penny stocks? Why wouldn't you just stay with the large caps? So penny stocks trade from a cent to $5. That's the range I look at. I don't play OTC stocks. There's different rules for those. I try to stay away from those. The range I like to trade in is about 20 cents to $3 to $4, sometimes $5. There's more room for short-term gains, and you don't need a big account to start. So when I started, I was a college student trading. I didn't have a lot of capital to be, playing with, but I think when you start small and you take those losses, they hurt a little bit more when you're starting small. So it really teaches you how to grow as a trader. And I think penny stocks and small caps, it's a great way to start trading. I consider myself a swing trader. This is the style of trading I prefer to do. It's a style of trading where you look for short-term gains anywhere from a few days to a few weeks, maybe a month or two. I love it because I can set myself up in good positions that are low risk, high reward, and I can protect myself from losses. So where do you begin? Every trader should have a toolbox that they use almost daily, if not every day, that you're using to set yourself up in good plays. So a few of my favorite tools, finviz.com, stockcharts.com, and stocktwits.com. These are free tools. If you're a completely new trader, these are the three websites I suggest you check out, start playing around with, and digging in and seeing if you can get something out of them. And then once you're comfortable with those free tools, you can jump over to the premium side. There's Benzinga Pro, Trade Ideas, Finviz Pro, Stock Charts Pro. Finviz.com, if you're a new trader, this is the place I believe you should start. There's a pretty simple scanner. You can look at the charts and you see top gainers, top losers. It's a very good place to start if you're just getting into it, and it's nothing too crazy where it's, intimidating and too much to look at. So this is where you should start and play around with these scanners and start putting this into your daily routine. Stockcharts.com. This is another great tool I use. This is where I get my charts from to share on social media, to share with friends, my community, to get feedback on the charts. They also have a pro service that has a great scanner that I use almost every day. And you can customize these charts to how you want to use them, different indicators and everything. And it's just a clean way to get charts to share around. So you start off on those websites, you're starting to get some new ideas. The first thing you should be doing is starting to create watch lists. Watch lists are such an important tool because it allows you to save different ideas, cover different sectors, and look back on your ideas and see what's working and what isn't, when you're right and when you're wrong. It's important to create watch lists to track your scans for swing plays, and this will allow you to pick up on winning patterns. So you're probably, if you're a new trader, you're probably on Twitter looking for, what should I buy? All these traders throwing out ideas. But really when it comes down, you need to get out there and you need to apply yourself and start digging around for these plays, because that is how you become successful. That is how you turn this into a full-time gig. You need to start looking for these ideas and find what the style that you like to trade in, how you win. So we're going to cover how to scan for plays on finviz.com. And again, I'm just using Finviz because I think this is a great starting point for new traders. And the foundation that you need to build this on is support and resistance. Support and resistance is like the building blocks for becoming a successful trader. You have to understand support and resistance. So support's where the market believes that the stock is oversold. Resistance is where the market thinks that the stock is overbought. People lie, charts don't. You need to find support and resistance. They're your best friends. I use moving averages. I use the charts to look for support and resistance. And this could be an entirely separate video. On my Twitter, I have a 1-minute clip right on my pin to my profile that gives a basic breakdown of support and resistance. But this is something you need to really hammer in and get into your head to understand how to protect losses and how to take profits. Because if you're just blindly going into a play, you're never going to have a plan. And support and resistance is the building blocks to create a plan around a trade. Moving averages. This is one of my favorite indicators to find support and resistance. Right here, I have a daily SPY chart. And you can see this is just a quick little example of how these moving averages can play as support. So it comes right down. This red line is the 200 moving average. It bounces. So when you see it start coming down here, and it's coming near the 200 MA, I might want to, I could pick up some calls or play this move up. And then same thing here, it comes down, it breaks. This would be another line of support right here at the 50-day moving average. It breaks, so it breaks that level of support, comes here to the 100-day moving average and bounces up. And then these are resistance. You're watching it to break or hold these and look for bounces off that. So that's a very basic breakdown of support using moving averages, but it is very important to dig and learn more into that. So we're going to go into some scanning things. What do you scan for? I think when a lot of new traders get into scanning for new plays, it's like rocket science. You don't know what you're looking for. It's like too many options. It's scary. It's intimidating. It doesn't have to be scary and intimidating. It is just a tool that you use. There's no secret formula for throwing in codes and everything and finding a 500% winners every single day from a scanner. That's unheard of. This is just a tool to get new ideas and new plays from. And there can be many different scans. So there's some things you can scan for. The price. We're trading small caps. I'm going to search for anything less than $5. Sometimes I'll set up a scanner for less than $1. Sometimes less than $3. It depends on what I'm looking for. The float of a stock is the number of shares available for trading. So I like to look for low floats because the low floats, if they don't have a lot of shares available for trading, these can really take off hard. MACD, this is another, I can search for MACD reversals because the MACD is a great indicator for spotting a reversal in a stock chart. Moving averages, again, this is my favorite indicator. This is the fundamentals of how I become a successful trader, the moving averages. Relative volume, this will show you if there's a little bit more volume coming in than usual on that stock. So maybe something's about to happen. That's a good sign. You might want to pick up a position in that stock. And then patterns. Charts lie. People lie, charts don't. And you want to follow these patterns and you'll be able to start seeing these same patterns throughout stocks over the time as you continue your growth as a trader. And then another way to track winning stocks is sectors. A sector is just a category of stocks that all fall the same type of companies. They're all similar, like clean energy, electric vehicles, oil, marijuana, biotech. It's one of the most important things to pay attention because if we get a big move in one of these sectors, a lot of the plays in that sector are going to take off, especially in the small cap world. We're seeing this a lot this year. This is how I've got some of my biggest winners this year. It's all off of these sector moves. It's really important. I have a watch list created for every sector you can think of, because if I see one of them taking off, I'm going to start looking around to see if there's any other potential moves in that sector. So a big sector move. This is one way that I like to play these small caps. In September, we saw SPI jump from $1 to $46. That is 4,700% in one day. Of course, people are going to start looking for the next one. So you want to start looking around, and I go right to finviz.com and I search SPI. And if I scroll down, I'm going to see a chart for SPI, and then I'm going to see some financials and information about the stock, the float, the volume. But then it gives you a little breakdown of the company, which would be right below the chart. And I start to dig for keywords. And this says the company also develops, owns, and operates solar projects that sell electricity to power companies and other electricity off-takers. So I want to find a keyword that could potentially, send people coming to other stocks. Solar. So I just go right to FinViz and I search solar. And off of that, you get 117 different items found just from that one quick search. So then you can take those 117 items and put them into a scanner on FinViz. And I just click the price and I do under $5. And there you go. There's 12 plays from this. Literally takes 3 minutes, if that. You have 12 potential plays that you can start digging into. And I can tell you, like, from this one move, there was at least like 4 to 5 50% gains back in September when this happened. So for one example, I saw Sun W. They're also a solar play. So I went and started digging around, and right on FinViz, when you search for that company, you can click on the name of the company and it'll bring you right to their website. And then I start digging around. If I look at how their website is built, does it look like these people really care about their branding? Does it look like a company I would like to invest into? So then one of the first things I do when I'm on one of these company websites is go to the investor relations tab. This is where you're going to see if they put out press releases, how often they put out press releases, when the last press release was, and you can start getting a good idea of what this company, what you see, if you see any value in this company. So this day in September, when SPI completely took off, that 3-minute search brought me to this play, Sun W, right here. It was at about 70 cents. I caught it when it was already starting to move. People were a little bit quicker than me. That's okay, as long as you have a plan. So I had a feeling that this was going to happen because we just saw a 4,700% move on SPI. So I was like, I'm going to be a little bit more risky in this play because we saw this massive move. So I got into Sun W at around 90 cents, and this thing just absolutely took off. But I see that this 200 MA here is at 70 cents. So that I can use as a backing to my plan. So I get in at 90 cents. I say, all right, I'm going to set my stop loss at 69 cents because, there's some support at 70 cents, and that's what I'm willing to risk. And you need to take your position size and calculate that with your stop loss area. It could be a mental stop loss. It could be an actual stop loss. You need to calculate that. So if I'm in for this amount of money and it comes down to my stop loss, I'm going to lose this amount. And you need to be okay with that because that's going to take the emotion out of your trade. That is going to make you feel calm. And I can sit there and I can watch this thing either rip or it comes down. I take my L and I move on to the next one. So I get in 90 cents and it takes off. I started scaling out around $4. And one thing a lot of new traders think is they need to buy all their shares at one time and they need to sell all their shares at one time. That is not how I play. A lot of the times I'll scale in. I'll take a starter position in a swing and add to that. If it dips or I'll exit it, it gives you a little more leeway. And again, this is a big mental game. You need to be calm when you're going through these trades. You can't be, if the stock goes down 3% and you're going, this isn't why does everything I buy go down? You can't be acting like that. You can't be a big crybaby. You need to be calm and relaxed when you're playing this. It's like trading is like any sport you've ever played. So I'm starting to scale out as this thing rips at $4. And again, people like to hold but what if it goes to 40 like SPI? Oh, well, I just made 400% in one day off of this trade. I'm going to take some of that profit out and secure that, but I'll leave some in case it does. So then it goes up to about 850. The next day buy, I sold at 650. I was like, all right, that is plenty profits for me. I'm happy with that. I took it off the table, and that's a successful trade from a 3-minute long scan off a big move. So that would be something that happens during the day or maybe pre-market. You catch something moving big like that, and you play that during the day. So that's when you're on the court, you're playing. But then at night, this is the time you need to practice. And this is when I'm scanning and I'm taking notes for new plays. So scanning should be a part of your daily routine. Consistently trading will allow you to find new plays and ideas and see what works and what doesn't. What to scan for. I covered a couple of things you can scan for: price, float, signal, volume is a good one, relative volume. But here, this is one that I set up. Simple, 3 things. There's all this information. Don't get overwhelmed by it. It's really, a lot of it I don't ever even use, but I just wanted to go with a really simple scan to show you that you don't need to be doing all these crazy things to find good setups. Is really the most important thing is taking notes and seeing and writing down your patterns. Like if you see something that you think is going to move in the next week or so, take down a note, take down the items you scan for, so you can go back and look at that in a week. And if it works, that's going to build that confidence up for you, so you can feel safer going into these plays. And you're going to eventually, that's going to build your mental strength going through these trades, so you can really take what you're putting into action and then actually make money from it. Because again, a lot of people are scared. They don't know, they don't believe in themselves enough to go into these plays. So you really need to take notes and figure that out and believe in yourself. So yeah, I searched for price under $5. I put the signal as a wedge up. That's a chart pattern. And then the flow under $50 million. So I got a couple results, but I ended up finding this one, TAN-H. This was back in October. I noticed that this, since July, was just riding this the 20 MA really nicely. Every time it would bounce, it would come down to the 20 MA. That's this green line. It would bounce, go up, come back down, bounce. And I said, oh, this is following a nice trend. I want to get in around 240, which was at that 20 MA. I want to get in there, and I want to set a stop loss at 230. So I understand how much money I'm going to lose when I get into this trade. And I have a good feeling that it's going to bounce, so I'm going to make money. And within 5 days, it makes a move from 240 to 299. That's 25% gains in 5 days. That is awesome. That is like so good. That is such an easy trade right there. You don't have to have any emotion. You don't have to be checking it like crazy. You have your stop loss set up and it plays out. You let it play out. It doesn't have to be stressful. So then I take some off the table there. I sold half of my shares at 299 for 25% gains, because I felt like it would pull back, because I was looking at this pattern and it goes up about 25% every time. So it bounces down and it comes right back down. I said, I'm going to add some more here. So 250, I add some more shares back into it. This is how you swing. You sell, you buy the dips and you sell the rips. So I add some more here at the 20 MA. And then we get this big move. This was from the election, because this is another clean energy play. And so 250 to 365, that's 45% gains in about 9 days there. So like that is just a 2-week swing where you're taking profits, you're adding dips, you're selling the rips. And you can't get greedy. You need to understand, like, anytime I have like, I start to look for profits at like 10 to 15%, at least take some off the table, because you want to take the risk off. And here's just another breakdown. You can see how this was riding that 20 MA, bouncing 25% gains from this move. It comes back down. You add at that MA, which is your support, and then you let it ride out. And this red line would be your stop loss. And so I set my stop loss at 230, and it doesn't even come close. The entire trade, it doesn't come close. So I'm just chilling. Like I'm not scared. I'm not stressed. I'm chilling and making money. And then one more setup I like to do is trading the breakout. So this is where we're going to look at MAs instead of support like the last two. We're going to be looking at MAs as resistance. When a stock breaks resistance, that means it can run free. It's free to fly, especially in a play like this where we're seeing, this big dip come down, and the 200 MA, it just can't break this. But then we see a couple days ago it broke this, and I just played this 2 days ago, so this is a fresh one. You can go look at the chart. This just happened. I saw that we had this breakout here at the 200 MA, and it dips down, and I was like, and on Sunday, I found this play, just scanning the same type of scan I just showed you guys on FinViz. And I see it's breaking it again. And I see that volume is slightly increasing. So I said, I can get into this with, it's a little more risky than playing at support, but it's a risk I'm willing to take, because if this thing does break the resistance, it's going to fly. So I get in at 30 cents Monday during pre-market, and I said I'll set a stop loss at 28 cents. So that's my risk. So I'm a 2 cent risk to potentially, big gains. And yesterday in after hours, they got news. This thing rips. It hit 54 cents. I believe it's 80% gains. That was I wouldn't say it's luck, but that was just a perfectly set up resistance break. Played really well. I took my profits off the table there. Sometimes it doesn't happen that fast, but when you're playing around these resistance levels, you don't want to hang around too much. If it can't break it, you want to get out. And that's why you need to cover your, you need to manage your risk. So like I've been saying, the big part of winning in this game is all about your mentality. You need to stay calm. You cannot be over trading. And one thing that I see a lot in new traders is they say, "Oh, I just bought this. It's going to go down." Or "I just sold. Now it's going to rip." Like, don't ever say that. That is so bad for your game. Like, you don't want to be doing that. You need to believe in yourself. And that's why you need to understand how these charts work, so you can feel confident that this is either going to play out in the way I believe it is, or I'm going to protect myself from taking a big loss. And the two biggest things I think to keep you calm in this game is position size and having a plan. Position size, like I was saying earlier, if you're feeling overwhelmed by being down in a trade like 5%, especially in swinging, that means you're going in way too big. You don't want to be doing that. Like, start playing smaller, especially in swing trades. I can have up to like 12 different swing trades at a time. And I won't say never, but I very rarely go more than 20% of my entire portfolio into one swing trade, because I don't want to feel like, if the stock goes down 5%, I don't want to be like under pressure. I want to be calm, and like, it is what it is. If it hits my stop loss, then I'll take that out and move on to the next one. But I don't want to be stressing and sweating on my computer screen all day like a big sketch ball, thinking I might lose all my money. And one more thing on that. People are always stressed that they're going to miss a big move, so they go too big on plays. Like, I put a tweet out a couple months back that said, I would rather hitchhike to the gas station 1,000 times than catch one rocket ride to the moon. Just keep chipping and chopping away at these gains, and you will see big growth in your portfolio over time, opposed to just trading emotionally and hoping for a big gain on a big lotto play. That's not how you become successful if you want to take this game seriously. And then it all comes down to having a plan. This removes all the emotion from the trade. It sets you up to win. So the plan: I scan, I look into the plays, I do my due diligence, I create a plan, and then I watch my account grow. It's as simple as that. You need to take notes, and you need to be putting in the effort, just like any other thing in life. Like, this is all a game, and you need to play it. If you play it the right way, you can become very successful. I just want to give a shout out to my community Lizard King trading group. Love you guys. Thanks for everything you guys do for me. And then here's my Twitter and Instagram and my email if anyone wants to shoot me any questions. I'm glad to help out with whatever you may be wondering. So yeah, thank you guys for watching my presentation.
Mr. King, that was very insightful. Really, really excited to have you. You got through that 5 minutes quick, man. Most people are like, "Oh crap, it's the end." No, that was great.
I'd rather provide the quality.
Yeah, no, honestly, I'm a newbie. I've recently opened up an account to invest, probably later than I should have. So admittedly so, but I might ask you for your deck.
Did you start trading this year?
Yes,
Yeah,
I did.
yeah, a lot of people did, and that's when I'm trying to teach, I think of the people that started trading this year, because I know how it feels when I started trading in crypto and I was just blowing through my money. So
I'm trying not to.
Yeah. And so is everybody else. So I remember back at how I felt when I first got into crypto, and I try to convey that to people in the simplest way possible, because this isn't rocket science. It's a game.
Right. Yeah. Well, the game must be learned. It's we'll say it's acquired taste, I feel like.
For sure.
But I think I mean, you may have touched on it a bit in your presentation, but looking into next year, are you seeing some exciting movements into 2021? Are you a little bit more hesitant? I guess it could be a variety of feelings that you have, but any thoughts you can provide us there?
I think things are looking pretty well right now, but again, this world's crazy. Like, anything could happen any day. We don't really know. So I'm taking it, I'm taking it slow, and I don't expect anything. I play it how I see it. I look at the facts. I don't get overly emotional with my politics into this. You can't bring politics, personal opinions into the stock market. So I really, because everything is so unexpected, right now, I think it looks good for the next year. I think going into next year, it's looking pretty solid, and I think we're going to have a lot of fun. But again, anything can happen. It's a crazy world.
You got a new follower on Twitter from me, my friend. Hey, make sure to hop into the YouTube chat. I think there are a lot of people who would love to chat with you there. Everybody, make sure to follow the Lizard King first and foremost. Hit up his channels. Lots of good stuff there. But other than that, any other final thoughts you want to leave our team with?
Thank you guys for having me. I think this is a great event, especially this year when there's so many new traders. If you're just getting into the market, don't get discouraged if you're taking L's. This is something that you need to build on. You really need to grow. And I promise you, if you don't quit and you keep putting in the effort, you're going to win in anything in life. But if you're in trading stocks, like, you got this. Just keep working and take notes and practice. It's a game.
Yeah.
You got to have a plan.
It's a game that requires money.
Hey,
esports at its finest.
Yeah. Hey, don't go out to dinner every week and put that $50 in the stock market.
Hey, there you go. Awesome. Hey, it's a pleasure to have you, my friend. We'll get you back on one of these very soon. Make sure everybody to tune into our future boot camps. I think Lizard King will be back to give us some more expertise. But be well, stay safe, stay healthy, sir.
Have a good one. Thank you.
Awesome. All right, y'all. We are moving right along. I believe we are getting our first presenter up on board. Very, very excited about this first presentation. Delta 9. If you haven't heard of them, they were one of the very first cannabis operators licensed legally, of course, in the country of Canada. So I believe they were number 4. So they have a vast array of expertise. He's still joining us. So I do want to, I want to bring some attention to some things that we do throughout the week, throughout the months, throughout the years. We are starting a lot more content on our YouTube channel. So where a lot of you are right now, we have a daily show with Luke, who you all saw earlier. He will be back, and Jason, our CEO. They do a midday show talking about stocks that they love. Albeit we are not a financial advisor, but these two are very, very adept at what they hear in the markets, at who they work with. So definitely recommend tuning into that. It is every day, I believe, at noon. You can watch it live on LinkedIn. Also, we do every Thursday from 4 to 5 p.m. We talk about the cannabis industry. It's called Cannabis Hour, bzcannabishour.com. Just a few of the things that we do. Obviously, I hope all of you are tuning into pre-market prep every day, daily, with Spencer, Joel, and Dennis. They do an incredible job talking about the day in the markets ahead, what they've seen in the previous week. I really think there's a lot to be had there. Hopefully, we'll get John from Delta 9 over soon. But, looking ahead, looking into 2021, Benzinga is planning a full slate of events. So a lot of you are familiar with our Benzinga Bootcamp. The Benzinga Bootcamp is a place for education. It's a place to meet people like the Lizard King, to hear expertise from people like Neil and Luke, Nick Shaheen, brokerage leaders, trading tech leaders, the people who are behind the industry. benzingabootcamp.com. This is an iteration of that, if you will, just combined with a few company presentations. After that, it sounds like I have a little theme music here. But we also host 3 cannabis capital conferences a year. So this is a place where you can come in what's bound to be a federally legal market, probably sooner rather than later at this point. It looks like he's hopping over here soon, John, that is. So stay with us, please do. We also have track 1 as well, presentations in both tracks all day for 2 days. But anyway, we talk about the cannabis conference, or the cannabis industry rather, at these conferences with several public companies, a lot of up and coming private companies, pre-IPO companies, the investors, the people who have put money into this space already, what they see, what they want to see, what they think is going to happen. February 25th is the first one of those. So there is so much content to be had at Benzinga. As I said, I'm a new trader. Where I get most of my ideas, and thus far successful ideas, has been from Benzinga News. And I proudly say that. So we are going to head into a video here. I'm going to stop rambling, but alas, please keep in tune to us. We have grown exponentially this year, and we really want you all to be a part of this family and engage with us. So let's take it to a video, Shelby, if you want to cue that up. And it appears that the video has not started yet. So my face again. Alas. So Delta 9 is next. Stick around, because after Delta 9, we're going to have Coro Global. We will talk to CloudMD, incredibly cool company. All these companies, save maybe 2 or 3 who are pre-IPO, are listed. So, I mean, this is just an in-depth seminar. Looks like Luke's coming back on, and we also have a video. Shelby, if I'm right, let's hop in. All right, John, are you with us? Can you hear us, sir? Looks like you're on. We might be having a little bit of technical difficulties there. John, feel free to, all right, he cannot hear us. So we'll get him on shortly. We will try to get whatever's happening there set. And it looks like Luke's having a little technical difficulties with his mic as well. So we're great. Fantastic. So, Benzinga, we have grown, as I was mentioning, exponentially this year. I believe we are up to around 6 to 7 million uniques a month on our website. That's all thanks to you all. You all provide us the ability to do this content week in, week out, day in, day out. Luke, can you hear us?
Yep, I can hear you now.
Fantastic. Awesome. So it looks like we're having some technical difficulties with John. So I've been talking about our video content. I've been talking about some of our upcoming 2021 schedule. Why don't you give us a little bit of insight about what you and Jason talk about every day on your live show? What can people look for from Benzinga?
Stock picks, baby. Can I do a couple stock picks?
Go for it.
That's what it's about. So our daily show, it's all about ideas. I mean that's the name of the game, right? We're doing it because we want everybody to make more money. We want to throw ideas out there. And really get stuff cooking. So let me give you 2. I'm going to give you a SPAC play, and I'm going to give you a small cap stock. How's that?
Perfect. Hit me.
All right.
I'm gonna write these down.
All right. Yeah, write them down. Because these are. Well, I guess I shouldn't say they're winners. These are stocks that I own because I think they're going to be winners. All right. First one, PSTH. That's Papa Sandy Tango Hotel. This is a stock that I picked yesterday. It is a SPAC. It is Bill Ackman's SPAC, right? And if you don't know do you know who Bill Ackman is, Elliot?
I'm new. I'm new, Luke. Hit me with the education.
Picture Jamie Dimon in your mind, and the guy looks basically the same, but different backstory. Okay, so
Okay.
Bill Ackman is I would say like the next generation's activist investor, right? So there was Carl Icahn back in the day. He was the corporate raider, and then next came along Bill Ackman. Those two dueled it out and feuded. And when I say he's an activist investor, basically what that means is that he gets involved in companies, right? He doesn't just passively buy a stock and then sit back and hang out. I mean, he is in there tearing up the CapEx budget. He's getting dividends out there. He's making deals. He's doing mergers. He's returning capital to shareholders. I mean, he is involved, and he's not one of those hedge fund managers that buys 100 stocks, right? He's got like 5 things in his portfolio at once, and he is deep and dirty with them, trying to get those 2, 3, 4x returns. Okay, so of all the SPACs out there, I like Ackman's because I think he's going to be super diligent with the process, and he's only going to take a company public if he thinks that he can drive some serious value to both himself and his shareholders. Okay, so that's one reason. And I will say Ackman does have, you know, some losing picks. Of course, we've had the Borders blow up, the Herbalife blow up, you know, some high profile ones. But again, generally speaking, I like him for the SPAC for that reason.
Now, PSCH?
PSTH. That's Papa
TH.
Sandy Tango Hotel. All right, Papa Sandy Tango Hotel. So here's the next reason why I like this SPAC, right? Is it's going to do a mega deal, and we think that it's going to be in fintech. All right, so let me tell you some of the names that could be coming for this deal. All right, you have Robinhood is a rumor, Coinbase is a rumor, Stripe is a rumor, Bloomberg is a rumor. All right, these are all household brands that will, if announced, will pop the stock. Absolutely. Right. So it's going to be a mega deal. We know it's going to be a deal of probably at least $3 billion. It could be much bigger. So it's going to be a mega deal. And it's very likely that it's going to be one of these household brands like a Robinhood, Coinbase, Stripe, and Bloomberg. Your downside is relatively capped, right, at around $20. The stock's at 25 right now, but your upside is 100%. So that's why I like that one. That's my first pick of the day.
Fantastic. You said you had a small cap one too, right? So you had SPAC?
Yep.
Did I make that up?
No. SPAC, Special Purpose Acquisition Company, SPAC pick, and then I've got a small cap pick as well. I'm going to get an air horn. Boom. All right. Now, this is where I have fun, okay? The next one that I like is Voyager Holdings. Okay, this is a stock. I've been in this stock for a long time. I think the company is actually presenting either today or tomorrow. It trades TSXV, so on the Toronto Exchange. The ticker is VYGR. Voyager Holdings. This is my crypto play. All right, I'm a big stock guy. I've got several stock accounts. I don't have a crypto account. But I wanted to get some of that crypto exposure, especially with all the momentum behind it, right? Crypto is back just like it was in 2017, where you're out at the bar and you have people talking about crypto, right? So I want to participate in part of that momentum. So VYGR, Voyager, is one of the ways that I've been getting into that. I was in the stock at 66 cents. It's up to $2 now, so it's had a hell of a run. The thesis is played out. And basically, here's how I've been able to trade this stock. Is you'll see a run up in crypto and the stock will lag, right? So if we see Bitcoin when it exploded from 12,000 to 15,000, the stock didn't really move. Mm-hmm. That was a great opportunity to get into the stock. So watch out for that, right? If you see Bitcoin now go from 19 to 22 and the stock stays flat, it's another opportunity for the stock. What they do is they are a trading platform for crypto. So sort of like a Coinbase, you can buy and you can trade crypto on there. Voyager, again, VYGR, it's on Toronto. That is another sort of derivative play to get into those crypto stocks.
Perfect. I think we're going to try to get our Coro Global presentation a few minutes early, confirming that now. But regardless, obviously, no, not yet. I'm waiting for. We're good to go with David. So let's move him over. Luke, I'm kicking you off, buddy. I appreciate you coming in and giving us some awesome picks. Don't go too far. I think we'll want more of those.
All right. I'll be around all day.
You better. David, how are you, my friend?
I'm doing well, Elliot. How are you?
Oh, we are doing it, man. We are trying to live up to what we do through technical difficulties.
Hey, that's all right. It's a new world we find ourselves in. You guys are managing well.
Thank you. I appreciate it. David, I'm going to let you take it away. Tell us about Coro Global, my friend.
No problem. Let me pull this deck up on screen for you guys. This is going to be exciting, I think, for your audience, because you guys have so many people that have affection for crypto. They believe in the philosophy behind it, but they probably haven't seen some of the real opportunities when we get to the next stage of the technology and we really start talking about how digital money moves. And this is the concept behind Coro. So I'm going to jump into this deck and really just peel this wide open for your audience. So the first thing is, what is Coro? So what is our company about? Coro is a new way to use gold as money. And the key to this is that it's a marriage between the timelessness of gold, which has been serving humanity for 5,000 plus years, and the financial technology of the future. This is effectively what Bitcoin was originally trying to do. And the purpose behind Coro, our mission is as important as what Coro is. Our mission is to make sure that we can democratize access to gold and bring forth a more sustainable financial system. And all of us living through a pandemic right now can certainly relate to the volatility and how that's impacting our lives. Now, with our business, we have a very clear business philosophy. Whether you're running a lemonade stand or you're running a fintech company like Coro, it's very important that you define your problems that you're solving. And for us, there's 3 problems out there in the world that we're very focused on resolving. The first one is that we're seeing increased currency instability through devaluation. This is something that's starting to spread globally. In fact, today, some of your listeners may have even seen in some of the news articles out there that negative yielding debt worldwide has just touched a brand new high. It's now $17.5 trillion of sovereign debt has a negative yield. So we're debasing currencies everywhere, emerging markets and developed markets. Second problem that we believe is very important to address is that financial technology has not yet created financial inclusion. This is what the United Nations calls the unbanked or the underbanked. In the year 2020, we all deserve better and we can do better. And so Coro is going to deliver on how to solve that. And then the last piece, which is as important as the first two, is that when we look at transferring money across borders, the fact is it's slow and it's expensive. Now, putting some numbers to that last slide there, just last year alone, this was all pre-pandemic, there were 6 countries that had inflation rates greater than 50%. That means that if you had $100,000 in your bank account, by the end of the year, it would only have the purchasing power of $50,000. And this is a big issue, whether you're looking at Venezuela, Lebanon, Somalia, and eventually emerging markets. This type of inflation in currencies is absolutely deadly. And again, this was all pre-pandemic in 2019. We'll probably see a dozen countries this year before the year closes out. When we look at the number of smartphone users worldwide, there's 1.2 billion people on the planet that have more technology in their pocket than what NASA used to land a man on the moon. This is incredible time that we live in. However, those same people with that same technology don't have any access to basic financial services. This is tragic. You got the technology there to access it, but there's still a gap in that access. And we're going to explain to you how Coro resolves that. Last but not least, that point about moving money across borders, according to The Economist, the average cost is 8% worldwide. And of course, in countries where that friction is higher, in between countries in Latin America, Southeast Asia, Africa, those fees could be as much as 30 to 40%. Now, if we were to imagine gold returning as money, it's an incredible opportunity set. There's 3 billion smartphone users worldwide. As we identified, 1.2 billion aren't even accessing financial services. But of that 1.8 billion people worldwide that are connected to financial services, last year alone, they conducted over $1 trillion in mobile payments. If we look at LBMA data, that's the London Bullion Market Association, and we look at physical gold transactions, it's still dominated by the jewelry business and people investing in gold, not actually using gold as money, which is its original heritage. There was still $340 billion in gold transactions. But when we look at mobile gold payments, nobody's out there. Nobody's doing that. And what we would submit to all of you is that that's going to change, and it's going to change in a dramatic way. Now, when we look at gold maintaining its value, most of the audience may know the story, and if you don't, in 1971, President Nixon took the United States off the gold standard. It's one of the things that people cite as an important historical moment when looking at crypto and Bitcoin and everything else. Just looking at the dollar versus gold has fallen 97% since that time. So 97% of the purchasing power of the dollar when priced in gold has been lost since 1971, and it's only getting worse. Now, even if you do like to look at gold as an investment asset class, most people just think about it as a small allocation, maybe put 1-2% of their portfolio there. But I would imagine the audience would be surprised to learn that when we look at gold over the last 20 years, even benchmarked against the largest index in the world, the S&P 500, Gold outperforms, up over 500% the last 2 decades versus just a little over 80% for the S&P 500. So moving on, this now begs the question, how do we bridge the past and the future? The whole reason paper currency was invented in the first place was because it wasn't convenient nor safe to carry around big bricks of gold in your bag. And so in today's world, we need to bring that forward in a digital manner. You want to have real gold, but you need a digital manner to bring that forward. And this is where the rubber really meets the pavement and our business gets exciting. We license a technology which is called Hashgraph. And for those of you in the audience that are familiar with distributed ledger technology, you're well aware of the features that Hashgraph possesses that make it exponentially more exciting than any other blockchain technology. So Hashgraph is a distributed ledger technology, but it's truly next generation. And there's 4 things that we're able to do with Hashgraph that you can't achieve with ordinary blockchain. Number 1, mathematically, it reaches consensus 100% accuracy. And this is because the method that it uses is completely different than blockchain, which is a probabilistic method. So if you've ever done a blockchain transaction, you're usually waiting up to an hour to be able to get through that transaction. Well, with Hashgraph, you can do those transactions absolutely instantaneously. Second piece, the speeds are blazing fast, capable of speeds of 500,000 transactions per second. Again, this needs context. If we look at Bitcoin, that's 3 to 7 transactions per second. If we look at Visa and MasterCard, large commercial networks that we all trust, they have speeds of around 25 to 35,000 transactions per second. So this makes us nearly 2,000% faster than those networks. It's also the only one that's super cyber secure, being what's called in computer science, asynchronous Byzantine fault tolerant. Very, very, very important component. And last but not least, there's no mining. So you don't have to set up a big giant server farm in Iceland where energy is cheap to power the network. So this is very potent technology. I'm proud to share with you guys, those of you that are looking at this map here, we released Coro in the United States. We are a highly regulated business since we are in the business of money transmission. We allow our customers to transact in dollars or gold in between those, exchange between them. You can send, spend, receive in both those currencies. And soon we'll be offering the ability to transact in Mexico and Canada. We're already in 19 states in the US, plus regulated at the federal level, and we're also a public company. So triple regulated in the US. Our revenue model is very straightforward. One of the exciting things about being in fintech is that fintech should have a very clear path to the bottom line. Now, fintech's a very hot sector. I came from the sector before that was even a term. And it's very important when evaluating fintech companies, do they have a clear path to the bottom line? And this is something that we focus on an enormous amount. So we have 4 components with the way that Coro generates money. It earns on the FX exchange fees, which are quite robust. When you're exchanging between fiat currencies and gold, we can offer our customers much lower spreads than they would ever get anywhere else. And yet those spreads are quite wide and juicy for our business, much wider than you'd find in normal fiat currency spreads. Second, we earn a transaction fee. Anytime somebody's sending gold on our platform, we earn a fee for them being able to do that. Third piece, we earn a nice spread on the actual physical storage of the gold, which is important. So our customers have their gold held in title in their name, whether that's $1 worth or $1 million worth. That title is always held in their name. There is real physical gold that's held in separate custody and insured. And then last but not least, we earn the interest spread on the fiat balances, the original model that was set forward by PayPal. Now, looking at the competitive landscape, just to conclude this for you guys so you understand where we're different than the rest of the money transmitters out there, there are 3 things that separate us. Number 1, we're built from the ground up to deal with physical gold. Number 2, instead of relying on the old banking system, we're building the rails of the new banking system, thanks to Hashgraph and its robust ability to settle in real time. And just a data point for you guys, real-time settlement is something that eludes the average currency market. The average currency settlement time takes 2 days. 6 trillion in currency traded on a daily basis, 2-day settlement period. And this is because of the old banking system. And third, our third value proposition and differentiator as a business is that we're hyper focused on a full stack of anti-money laundering and compliance. I came from a highly regulated business in fintech prior. It was a significant edge for us to have technology as an advantage there. So we're able to do full compliance on our customers, which means you can do transaction sizes of any amount, microtransactions to multi-million-dollar transactions without having to leave our system and go to the old banking system. So this is those 3 features right there, how important they are, taking those advantages, distilling them down to benefits. And then I'll just wrap this up very quickly with these last two slides. Our leadership team, you see myself and my brother there in the middle. We're co-founders of the company. My brother and I have got 25-year background in capital markets and fintech with a particular emphasis on global macroeconomics, hence the affinity for gold. Mark Good is our chief executive officer. He's a financial colleague of ours for 15 years, and we're very, very, very proud to have him leading our way. On the right-hand side, we have Nikki Noel. Nikki Noel has been with us for 15 years. She's been in the small cap, micro cap space as a director and officer for 15 years. She helps liaison between us, our attorneys, our auditors, and the SEC. And then on this last slide here, this is very important. No fintech company would be complete without an extraordinarily talented chief technology officer. So I want to take a moment to share a little bit about Jonathan Beck. Jonathan Beck was one of the first technology officers working with Hashgraph. Hashgraph is really, truly, it's a breakthrough technology. We're the first out there in the market to license it as well as commercialize it. Sitting on Hashgraph's board now is Google, IBM, LG, DLA Piper, Boeing, and many other S&P 500, Fortune 500 companies. Jonathan also served 15 years on the cybersecurity side, serving in the United States Air Force. This is very, very important. We are a SOC 2 certified fintech company, something that you rarely see. That's usually the domain of much, 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 much larger companies. We spent $250,000 just doing our cybersecurity audit. So our cybersecurity infrastructure is second to none. This is something that will become more and more important as the years go on and people realize that cybersecurity is a very key threat vector. So we're very proud to have Jonathan. He's been with us since we started 3 years ago. In the center is Anna Maleva. She leads as our chief marketing officer. Her background is in an emerging field of growth hacking, which is a marketing technique that is highly, highly data-driven and has emerged over the last 5 years. So she's an expert in that domain and leads our customer acquisition strategy. And then last but not least, as I mentioned, we are a highly, highly regulated business. This is part of our team's edge against our competitors. We understand deeply very complex regulation. It's why we built our own tech stack for anti-money laundering and know your customer systems. That's led by our Chief Compliance Officer, Lorenzo Del Zappo. He's one of the most sought after experts on money laundering and teaching regulations to policymakers, banks worldwide, speaks 5 languages. He's got his Master's of Law degree, and we're very proud to have him as well. So these are all our members that we've had since the very beginning. And with that, I'll conclude. So I know that's a very speedy overview for Coro, but hopefully useful to everyone out there in the audience.
That was very insightful, David. Thank you very much, sir. As one of the chats said, I believe it was a Michael M said, blockchain tech, baby.
That's right. And the note for your audience, the big thing for your audience to learn, since crypto is such a good field. So you guys are giving great trades out there, right? And part of what you guys look for is differentiators. I want to leave you guys with just one final thought so that you guys understand this gap, because it's an arbitrage that your audience can play. The difference between blockchain right now and Hashgraph and technologies like Hashgraph, which is a directed acyclic graph, it's like the difference between Blockbuster of the 90s when they were on VHS cassette tapes and Netflix high streaming definition content. It's that big a difference. But here's the gap. The market doesn't know that yet. Silicon Valley doesn't know that yet. Wall Street doesn't know that yet. But this gap is starting to emerge. So that's a very, very, very important message to share with people. I encourage them to do their due diligence on the tech out there and to watch for these great arbitrage opportunities.
Yeah, absolutely. Actually, I believe we just had a question from the chat come in.
Sure.
How much will you be charging to store per year percentage-wise? Also, how
great question. So we currently charge 50 basis points on an annualized basis. And what we do so that that's balanced out for customers is their balance changes. That's calculated on a daily basis for them. So they don't have to worry about getting dinged like other vault providers do, where you get charged up front for a quarter or a month. So if their balance is low, it's always proportional exactly to the balance that they have.
Fantastic. And how do I get the app? I'm assuming probably from your website or.
No, the good news is you can go, the app is available on both Apple phones and Android phones. The key thing, so everybody can see it, it's in the stores, download the app. The only differentiator is what states you're in. So if you're in a state where we haven't yet received their license, you won't be able to use it, but go ahead and download the app. It'll put you in the queue. And we just added 4 licenses just in the last 10 days. So we'll be by the end of Q1 next year, we'll be in all 50 states. So just go to the stores and download it. It's free to download and set up. We look forward to having you guys all as customers.
And you're triple regulated.
We're triple regulated.
I like that phrase.
That's important. You know, we've all seen what's been going on out there, and you know, there's a lot of fraud and all types of other stuff. So we really feel strongly that the regulatory and cybersecurity component are critical. I mean, if people are trusting us with their physical gold, we need to make sure that every possible infrastructure piece is there to support that.
I love that. Fantastic. David, thank you so much for being here. I'm sure there are other questions that will come up. If you are able to engage with some of these, please do Umbrella and in the YouTube chat, but I've also given an email as well for them to reach out with any questions. But David, thanks again for being here with us, sir.
My pleasure. Thank you guys for the opportunity. Have a wonderful day.
Appreciate it. You as well. Luke, you're back.
I'm back, baby. I got word from producer Shelby that I can come back. I wasn't sure if I'd be allowed, but they let me back on the screen.
Yeah, that was a really cool company. Honestly, I wasn't super familiar with Coro Global, but I'll definitely be looking more into them after this. Really, really cool company. So due to a few sorry, go ahead.
Oh, I was just going to make this point that I made earlier, right? That if you want to find alpha and generate alpha in these markets, I mean, the small caps are I think, a key way to do it, because you get some of these emerging technologies. There's not a lot of recognition on some of these names. They don't have a ton of analyst coverage, right? So you can find these before Wall Street does, before all the money piles into these stocks. That's why I love these types of companies.
Amen. And we have a whole day, 2 whole days of them. Luke, so due to a few technical difficulties at around 9:45, we have 3 minutes. 3 minutes before our next presentation. Can you drop some knowledge bombs on us?
Should I do a stock pick? Another one?
Yes.
Yes,
please.
All day. All right. I'll have a small cap pick the next time that I get to do a pick, but I'm going big right now. And the pick that I'm making, this thing has been a dog for 10 years. It's been an absolute loser for 10 years. I'm making the bold call on it right now. Ticker F Foxtrot. That's right. It is Ford Motor Company. 2 things going for it. One, you got the story side of things, right? They have a big EV platform rolling out next year. We've seen how these EV stocks have done. We've seen all the money pour into EVs. Once that story gets kicking, that will be good for Ford. Story number 2, you have the Bronco. The Bronco is going to be a very sexy vehicle. It's sold out in pre-registrations. Once the Bronco gets rolling, again, another sexy story. So that's the story side of things. Moving over to the numbers, and I'm doing this fast because you only gave me 3 minutes. But moving over to the number side of things, there's a ton of room for multiple expansion. The stock is cheap. Compared to its auto peers, the stock trades at 0.25 times price to sales. I know price to sales isn't great because they do a huge lending business, but again, 0.25 times, guys. EV to EBITDA is 14 times. That makes it a value stock in these markets when we see some of these things trading at 200 times EV to EBITDA, especially those high-flying EV names. So that's why I like Ford. I think you've got 2 stories that can work really well for the stock. And then if the stories don't work, the valuation is still very, very fair, so you're not going to get crushed on it. There's the pick. There's the air horn.
Oh, you Kramered us. I will say, are you sure you don't just have to pick Ford because you live in Detroit? I'm just pointing out the obvious.
Hey, let's face it. I am in Detroit, Michigan. I'm not picking Tesla.
Wait, don't tell Jason. Don't tell Jason. Awesome. So I think we're just going to hop into the next presentation. Luke, you're a pleasure, man. I'm so excited we get to do this for 2 days.
Giveaway. We'll drop the link in the chat, but the first giveaway, it's happening at 10:30. So stay on the stream for that. We'll drop the link in the chat again for you to be able to register. Beautiful.
10:30 is the first giveaway. All right. Next up, we have a very, very, I think is a super exciting company, CloudMD, Dr. Esim Hamza. Did I say that right, sir?
Yes, thank you.
Fantastic. Awesome. I'm going to let you hop right into it. Please let us know what you have going on with CloudMD.
Sure. Can you see my screen okay?
Yes, sir, we can.
Okay, great. Thanks for having us again. I'm going to go through the slide deck relatively quickly and then open up to questions that might happen right after that. A little bit about our company. So on a high level, we are a health tech company, really revolutionizing the way healthcare is delivered, definitely North America, but around the world as well. We have a very experienced management team with over 100 years of medical experience on our team. And that's where the company comes from, the foundations and the understanding of the space. We are strongly positioned in that space right now, and it's ripe for disruption. In the US alone, it's about $3.5 trillion. We changed the way healthcare is being delivered by focusing on a patient-centric approach. So really turning it on its head, where it's the patient in the middle of the healthcare team, not the doctor or the clinics and so on. So you get a much better team-based integrated approach. We have B2B solutions, and we also have B2C solutions and enterprise platforms as well. And we are expanding extremely quickly right now across North America. We're well-funded. We have over 50 million in the bank right now, and we are still at a big discount despite our move in the market. Why are we here? I mean, healthcare, as everybody knows, is broken. It's broken everywhere. It's definitely broken in North America. And the concern has always been the costs are going up, but the care has gone down a lot of times. And it's because it's been a very siloed approach in the way that healthcare is being delivered. So for instance, I'll give you an example. I mean, if you have a problem, what do you do typically, historically, right? I mean, you always have to call in on a Monday morning, try to get through to a staff person who might answer the call, and then make an appointment, and then wait a few days to see the doctor, take a day off of work or drag the kids out of school, and then go across town, sit in the waiting room, people coughing around you, and then you finally get in about an hour later, maybe you're delayed, and then you go into a smaller room even, and the doctor only has 5 minutes with you because the last patient had a heart attack or had a big issue. And then they give you a piece of paper, and you have to repeat the same thing again at a pharmacy or a specialist office or a radiology department and so on. And guess what? Nobody talks to each other. So the healthcare system is not set up to share data and help you as based on teams. So you got to repeat everything again, and you sometimes will get a medication that maybe shouldn't have been given to you and so on. So costs are going up. Governments around the world have tried different things by producing more doctors, trying to increase access, and that's never been the solution. We've always said technology was going to be the great equalizer, telehealth in particular. We've been doing this for years and years now. And then obviously with COVID, it sped up our business plan by about 10 years because people bought in. So now we don't have to convince people. We don't have to convince patients. We don't have to convince practitioners. We don't have to convince governments. They've all bought into the idea that this is the great equalizer. So, on a high level, what are we talking about? We're talking about using technology where the patient is in the middle and everybody in that healthcare team is around them, from the pharmacists to the hybrid clinics that we have, to the specialists, to the counselors and so on, and using, patient education tools and engagement tools to actually get them as part of the process. And then because we own this platform, we own this whole ecosystem, actually, we are able to provide this platform to other practitioners. So we have thousands and thousands of practitioners across North America using our platform to take care of their own patients so that they can have a life as well. They don't have to worry about running businesses a lot of times and what platform to use and different vendors. They can just use our platform to do everything that they need to do to see patients and provide good care. So one of the kind of an overview of the platform that we have, if we want to make sure this is very intuitive, this comes back again to our history and our experience in the space. And we made it so that it's very intuitive on both the practitioner side and the patient side. So the patient, you can download the app, you can do 24/7 real-time online booking. You don't have to wait until Monday morning. You get instant confirmation, automatic reminders. You can, have your chart with you, and you don't have to repeat things. You don't know what medications you're on. You get the lab results. Secure chatting so that you can talk back and forth with the clinic or the professionals, because you're not allowed to text or email patients because of privacy and security reasons. Connecting health monitoring devices. All these devices now are incredibly smart. I mean, the Apple Watches and so on, they're getting smarter. Lots of rich data but again, very siloed in different devices. Bring it in-house, one app, provide it as part of the team-based sharing knowledge and so on. And then we have 2 AI products built into it as well. One we created with IBM Watson, which is a virtual medical office assistant that can do anything clerical that that front office person at the clinic usually will do, like changing appointments or giving directions or anything like that. And then a virtual nurse asking you why you want to see the doctor, so that what happens is if you make that appointment, you can now it'll ask you why you want to see the doctor, and you'll say, I don't feel well, and it'll ask you the same questions I would or a nurse would, and go through it and be able to provide that information to the doctor ahead of your appointment, saving a lot of time as well. And then even when in the app, we made it so that you can use telemedicine to connect to that doctor as well, and you don't have to sit around. The doctor initiates the call, so even if they're running late, you can continue working or taking care of your kids and so on. And then reordering prescriptions, especially in COVID now, you can even get it delivered to you from our pharmacy partners. So we kind of thought of all the different parts of it that were that are important for healthcare. We own the platforms, like I said before. And so we own in Canada a platform called Juno. It's used by 3,000 practitioners, 376 clinics across Canada. In the States, it's called Benchmarks Systems. And again, together we have about, I think, about 8.5 million patient charts in our system as well. So a lot of patients, a lot of practitioners, a lot of data, and very convenient integrated care. One thing I mentioned earlier about that whole ecosystem is the importance of the hybrid clinic, meaning we do, like again, our company is telehealth, but the whole idea is telehealth is going to be 100% virtual triaging, but about 15, maybe 20% of the time you have to be touched. You have to have an abdominal exam or get a vaccine given to you, and so on. So it's very important in the future and now, basically, that you have a footprint on the ground to take care of that whole person. You can't do 100% virtual care, and any company that only does 100% virtual care will run into problems with continuity of care and true good care if they don't.
All right, we may be having a few technical difficulties. Dr. Essam, if you can hear me, I'm not sure if we can hear you. So weird, right in the middle. And here's my face again. It looks like we froze. CloudMD, super interesting company. I hope he can get back on here shortly. Let's get Luke over, though, if he is ready to go. But, you know, I think telehealth, there's something to be said about it. I'm very excited to see where it goes, especially, you know, with the year we've had in 2020. I think it remains to be seen, which is what he was touching on. So hopefully we can get him back over soon. Again, CloudMD, that is OTC DOCRF. They're on the TSXV at DOC. That's DOC. Again, that is CloudMD. Also, make sure you check out Coro Global. That's OTC CGLO. Delta 9, I believe, will be presenting either later today or earlier tomorrow. More to come on that rescheduling there. But they will definitely be presenting, so please stay tuned for updates. Luke, looks like you're back, my friend.
I'm back, baby. They can't. You know, I keep getting pulled off the screen. You know, but they're letting me back on. You know, it's my lucky day.
I don't think you should move. You shouldn't move from that spot for the rest of the day. I think is the best option here.
There we go.
Now, we could hop right into Izzy, but I know you wanted to. I don't even know if he can hear me when he's pulling off his mic. Can you hear me now?
Oh, there we go. Sorry. My
All
right
right.
and left, I still have a hard time with it. Okay.
I
I can do the stocks. I have a hard time with my right and my left.
We're in the world of technology, my friend. You got to catch up a little bit. Just picking on you. All right, man. So I think you promised us a small cap stock, or we can save that and hop into the next ideal presentation here. It's up to you.
What about a giveaway?
Oh my gosh. Are you teasing us? He's teasing us. I think it's time.
It's time for the giveaway. We're doing the giveaways 10, 30, 11, 12, 32, and 4 must be present to win. Again, these are Benzinga Pro memberships. These are Benzinga Options memberships. We might even get some stuff out of our merch store going. But the first giveaway that I have, all right, and I did not ask permission to do this. I'm just going with it. It's a lifetime membership to Benzinga Pro. Okay, we sell this for $5,000. All right.
Wow.
Decent giveaway, right?
This deserves like a drum
Very
roll.
big, baby.
Do
Let's
we have
go.
a drum roll?
This is what the Benzinga. Yeah. All right, Rohan M in the chat. He filled out his favorite stock. His pick was Microsoft MSFT. Sort of a boring pick. Also didn't give us a reason, but that's what it is, Rohan. If you're out there, email events@benzinga.com. You have 10 minutes to claim your prize. I've got, let's see, it is 10:27 Eastern. You got till 37 Eastern, and then you are SOL, and it's going back into the pool of prizes for the next one that we're doing at 11.
Fantastic. All right, one more time. Who does he have to reach out to?
Events@benzinga.com.
Got it. All right, Rohan. Take it, man. Like I said, I am a new trader, and I utilize Benzinga as my source of confidence, if you will, in investing. So ideally, you're here, that, but claim that, man. That's awesome. Luke, you are Santa Claus of the day, handing out candy. That is
my favorite time of the year.
That is beautiful. All right, y'all. So. We'll figure out what happened with Dr. Essam. Hopefully we can maybe get him the question that was in the chat, maybe finish his presentation at a later time. But Luke, perhaps we can hop on to the next one. Are you ready to introduce?
I am. All right, guys. So we just heard from a couple of companies. Next up, we're going to be doing some education. All right, and specifically, we're going to be talking charts. We're going to be talking technical analysis. So I want to bring Miss Izzy here onto the stream with me. The presentation is called Chart Patterns That Actually Work. I know that a lot of you out there are chartists. I'm more of a fundamental person and then leverage charts to find my entries and my exits. But Miss Izzy, if you are there with us, pop onto the screen. I don't know if our producer has to get something going. But again, we're going to be doing chart patterns that actually work. That is the name of the game of the presentation. And again, I love finding those for my entries and exits. All right, Miss Izzy, I see you. Do you see us? Do you hear us?
Hi, good morning.
Good morning, good morning. How's your trading been so far today?
It's been kind of hectic this morning.
Yeah.
Pretty early for pre-market. I had probably way too many positions going into today, so I was trying to close out some positions before getting started on the presentation here. So
awesome. Well, I appreciate you closing those out for us. Again, I know that we've got a lot of chartists out there and a lot of people who want to learn technical analysis. So I'll go disappear and let you take it away.
Okay, awesome. So I'm going to be doing a presentation slide today on how you can spot specific chart patterns that may actually work for you. And in addition, I've also incorporated a few candlestick patterns that you can combine in conjunction with chart patterns. So I'm just going to get my slide going here. Probably should have practiced this in the
You are good, Izzy. We can see it.
Okay, awesome. Okay, so I'm just gonna start from the beginning here. Again, also thanks for having me as a presenter for the conference. It's super exciting to be doing another one for Benzinga again. All right, so just like in simple concept, for those of you that don't really use charts for trading, which a lot of people don't, it's really just a graph that's highlighting the underlying security that you're purchasing, historical price action on any given time frame. And the most common types of charts that most traders use are candlestick charts, line charts, or bar charts. I personally use candlestick charts because I am a candlestick trader. And when looking at charts, there's multiple timeframes that you can look at. So for instance, you can pull up a daily chart, which is exactly what it means. It's per day. Weekly, which combines the 5 candles of the week displayed on a chart. And then the monthly chart, or for day traders, you can even use a minute chart or an hourly chart. Like I know sometimes people are trying to catch a bottom off like a 5-minute, looking to sell at maybe some resistance within an hourly time frame. And I guess a great thing about charting, in my perspective, is that the data presented, it doesn't change. I mean, it's the same data given to everyone. Prices historically haven't changed, but the way a trader can, kind of turn that into their own analysis is what makes it really unique. And this is the art of technical trading. So technical analysis, that's my form of, that's my preferred method anyway of trading, obviously in combination with a few other factors like some fundamentals and whatnot. But this is primarily what I'm using when I am looking to go either long or short on a stock. And you can use this to your advantage when making a day trade or even long-term swing trades, which I know a lot of people, specifically investors, think that just because they are investing in something and they believe in the company, they don't have to actually even look at a chart. I disagree with that. I think that there are a few benefits of actually using technical analysis, whether you're looking to hold for a short period of time or a long period of time, because you can capitalize the trade either way. So, and these are some really common chart patterns that many traders can profit from, whether you're going long or short. A bull flag is super popular. I'm not going to talk about that one today because it can be a little bit confusing for and I'm not too sure on the crowd today. So I've kind of picked some pretty easy to read or spot patterns because sometimes these can be, they could be misrepresented on the chart. You might think you're spotting a flag, but there might be a criteria missing there that actually changes the formation of that. Same thing with triangles. There's ascending triangles, descending, symmetrical. I personally like using like pennant patterns when things start pinching a bit. A bearish pattern is the classic head and shoulders. And you can also reverse that and go long if you're looking for an inverted head and shoulders pattern, which RKT, double and triple bottoms or tops, tops obviously being the bearish side. These are great things to look at, whether you're looking on a weekly time frame or a daily. For double and triple bottoms, I usually prefer these on a weekly view. I find that the reward is a bit higher, so that's kind of my approach there. But the one I'm going to talk about today isn't on this list here, so if you're ready, we can move to the next slide. Okay. my boyfriend didn't understand this, so hopefully some other people do. You're probably just wondering what it is that, which specific pattern I found successful in my technical trading career. There is one that I like to use a lot, especially because I'm primarily a swing trader more so than a day trader. And I found that this pattern is really helpful when you're looking at kind of doing like the buy and hold and just timing your entries. So if you kind of caught that there, cup and handle. So this is the pattern that I kind of find as my go-to for swing trades. And I just personally think it's super rewarding because if you don't have the luxury of trading full time, you can still spot these patterns on a chart and maximize the full potential of the trade. So just like a cup. So you know that's what the object was for. But you want to kind of have more of like a U shape versus a V bottom. If it's shaped into a V, that's too deep. You definitely want it to be a bit broad in forming that base. Once that base is formed, so just that bottom part there, you do want the cup pattern to have equal points on both ends. So just think of it like an actual cup. I mean, you're not going to have a lopsided cup. Otherwise, that could get pretty messy. So you do want the two ends to kind of meet, which obviously is your resistance points. And same thing with the base. You do want this. Think of this as your support area. So you want that to kind of align pretty well with previous support. Sometimes it can come a bit lower, which is fine as long as it stays within a pretty tight range. The depth here should be around 30 to 40%. So unless markets were bearish, which they were earlier this year, so the few that I'm going to show you today, they are a bit more than a 40% dive, but that's considering the market sentiment that happened around March. So ideally, you do want to have at least a 30% depth because you want the risk reward levels to be quite high when you're looking at a cup and handle pattern because you're trying to take advantage of a swing trade. So once that volume or once that base has formed, you do want that volume to start to minimize a bit. Like you'll see that when these patterns are forming, it generally has quite a bit of sell volume and then some spikes in buy volume when it's trying to find its base in terms of bottoming out. You do want to kind of have a bit of a wider time frame. So 6 to 7 weeks is usually ideal, but I mean, it does depend on which time frame you're looking at. If you're looking at a daily chart, for sure, at least 7 weeks. If you're trading a cup and handle on a weekly, you definitely need some like a few months in there. So I'm going to show you actually two examples today, one of a daily chart and then one of a weekly. So that way you can kind of see the formation and how long it took to form. Once that's formed there, so once you've created your base and then you've created the cup, you should start seeing a handle form, which once the handle's forming, you do want to kind of start seeing any weak hands shaken out of there. So anyone that was looking for it to break this resistance point and it failed is going to get shaken out once that handle starts to form. And you do want that volume to be pretty minimal. So there's a few interesting points actually that I don't have on my slide that I'm going to share once I pull up some examples here. Ideally, once the handle has begun to form, you do want to see the volume begin to increase once it starts to break that cup point, or I guess like the peak above the handle where the cup ends had aligned. All right, so I'm going to use Potbelly, which apparently is a pretty good sandwich shop in the Midwest because everyone always tweets me that, but I'm Canadian and we don't have this here. But when the markets began to crash back in March, I was looking for some really, value trades in the airline sector, CCL, Delta were my picks, Boeing. In the restaurant sector, I kind of wanted a few names that were kind of overlooked. I didn't really see too many people tweeting Potbelly at all on Twitter. I kind of spotted it back when it had started to base out down here. I played that first move, and you can see how it failed, that resistance right there. And then I looked to go long once again here. So this here is a weekly chart on Potbelly. I played this name quite a few times, and I actually ended up buying it back more recently because of the handle that was forming here. So you can see that this here is the cup. That's the depth there. So this was where that sell-off started. That was back in March. You can see that sell volume there. Depth here is definitely more than 30 to 40% because of the sentiment around the market then. Once we've began to bottom, you can see I was kind of using that $2 mark as a really strong area for support, building that base. Once we began to bottom out a bit, you can see that it held that support area there, tried again and then failed, and then it held it again there. And you can see that it started to create these higher lows here, right when it was forming off that base. And some steady increase in the buy side. So that's that volume increasing. And then once we reach that peak here, so this is our handle, you can see where that top wick is. I'm not sure if you guys can see it. It's kind of pretty hard to see there, but you can even pull it up on your screens. PB weekly chart. This is the candle, or sorry, this is the cup's top. So this is where the two ends meet, kind of around that $5 mark where that wick had tested and it failed. So interestingly enough, once that failed there, you can see some buyers getting shaken out because people were expecting it to ramp over 5 and test 550, 6. And that wasn't the case. So you can see the sell volume though, and the buy volume even is significantly lower than it was back here when it was forming that base. So kind of like what I was saying before, when the market's trying to decide which direction to go, it could be a little bit more volatile. Once that handle begins to form, you want to look at it exactly like you're looking at a cup. I mean, you don't want this coming really any lower than, which this actually ended up being the 50 days. So I know on Twitter, I kept using the 50-day on the weekly and the 200-day on the daily as in like a key area of support above 350. I know I was using those moving averages, but what I was really looking at was the handle that was forming here. And ideally, I wanted it to trade above that 350 mark and really hold support. So this here was probably the big shakeout when it breached that 50-day. But if you're looking at this from a technical perspective without factoring in the moving averages, you could see that it still held that relative support above the 350 point. So that's how I knew that the handle had began to form, and then it confirmed by having the green bar to follow. So you always want to see the green handles, or the handle begin to form some green candles once it's held that relative support area there, and retest that previous point. So I think PVPV is actually trading a little bit higher than it is now. It's kind of in the breakout point right now. This was the buy range. So ideally, that's where you wanted to be looking at for going long if you had missed the opportunity back here. Me personally, I traded it back here and I had traded it to the upside, and then I looked to go buy it back in this range here. So I am still looking for more on PVPV, so put it on your watch list. And once we get that the breakout above the peak, that's when you can start to see a retest of that breakout point, and then hopefully some steady incline on the chart. So another example of a recent play that I've been in and have kind of been all over on Twitter is Red Robin. another restaurant name that I really liked for a swing play. This one is actually on a daily time frame, so you can see here that it's a little bit different than when you're looking at the weekly. I was kind of using the gap here as my cups peak versus using this point here. I know sometimes if you're looking at this from a broader perspective, these gaps here may not look like it could be the I guess the end point where the cup could meet, but you're just really looking at it from a support and resistance factor. So this here being key resistance just below that candle. So you can see same thing here, some really heavy volume at the beginning. It started to kind of settle down and then it started to increase again. Just like PBPB, some increase here in volume on the buy side. And once it tested that that peak level around 1450, 15 was the mark I was using on Twitter. It failed, and then you can see that it began to again form that kind of handle pattern. And I wanted to point out here at the bottom that the decreasing volume that you can see. So you can see how the volume was decreasing. Ideally, this is what you want to see when that handle is forming. You don't want to see some extreme volatility there, because this is supposed to be, you know, the weekends getting shaken out and, you know, institutional investors or retail investors starting to position a bit here in this range. And then once that handle begins to form, you do want to see that increase in volume here. So you can see right above that handle peak where we had that increase. And this was a beautiful gap up play. So it had opened above that key $15 mark. You can see that the top here was around just below 15, and it had opened above that here, and it kind of just has been rolling along. This one actually on a weekly time frame still has a lot more room. So really interesting chart. It wasn't a really popular hot name, which I kind of like looking at some of those sometimes and just doing a bit more of a deep dive. I wanted to point out one last thing here on the PVPB chart. I also noticed that there was a lot of insider buying in this area here. So that was one of the key things that caught my interest. So kind of like what I was saying before, you'll usually see like the institutions buying in that handle range. So check the SEC filings, kind of keep up to date as you should with whichever positions you're holding, and just look who's buying or selling when you're looking at these patterns, because it really is important, especially when it's in the formation stage. That's pretty much all I'm going to cover on specific chart patterns, but I did want to look at a few candlestick patterns because I am a candlestick trader. That's my primary way of looking for trends when I'm day trading or scalping a trade, or even looking on a shorter horizon, I guess, just whether I'm bullish or bearish. And there's several different candlestick patterns. I'm not going to go over all of them today, but my favorite one is the tweezer bottom or top. Usually for the bull side, I like using the tweezer bottom. On the tops, I kind of like using like a bearish engulfing candle instead, but I'm not going to highlight too much on that today. So you can see here this on the left side being the tweezer top, and then that one there being the tweezer bottom, which I did kind of go over a brief example on my first Benzinga webinar with Ryan when we looked at Home Depot and just my style of trading. So you can definitely use these to your advantage. The tops usually happen at the end of a bull cycle, so you'll usually see that the candles are usually the same size. You definitely do want to see them within that same range. I always get tweets on Twitter asking me like, Izzy, is this a tweezer bottom? Is this a tweezer top? And you know, like really ideally what it is you just want two candles that are similar in size and similar in the length and the lows. So if you're looking at a tweezer top, you want the top ideally to be quite the same. And then if you're looking at a tweezer bottom, you want the lows to be within the same level there. So you definitely don't want something that's a lot lower or higher, because then that would be a different pattern there. And then usually when you're trading a tweezer bottom, you do want to see it follow up with a bullish candle the following day. That is really important, especially if you're looking at a weekly chart. I always look to see that they've opened higher the following week. So the Friday close and the Monday open are a key point that I use in my trading strategy. And it's mainly because of the candles that I'm trading. So I'm going to show you a few examples of recent examples, actually, of when I've used the tweezer bottom. So SPCE, which I was trying really hard not to watch that right now. This is kind of where I spotted it. I had spotted that nice tweezer. So you can see that they're quite similar in size. And that low was pretty much the same. So that really caught my interest. And if you're looking at this this is a weekly chart. This is what I mean when I say you can actually use, candlestick patterns with a chart pattern to kind of take full advantage of the trade. So this kind of did look like a double bottom, which is kind of a W shape. So that being that first leg, and then the middle peak, and then the bottom there, and it kind of just lifted off from there. So these tweezers to me kind of confirm that sort of double pattern, the double bottom pattern on the weekly chart, and kind of how it just lifted off the lows. So I looked for an open above this candle the following week to confirm that that trend, and that's exactly what happened there. And I've kind of just been following along, and this has done super well. And again, you can combine this with some fundamentals too, and some other analysis. I did see that this one got sweep down here. I saw some alerts on Benzinga Pro for some January options. So I immediately pulled up the chart, and once I pulled up the chart there, I saw that this was it looked like a pretty good buying opportunity. So that was kind of my take on that one there. And I mean, of course, you can keep digging deeper and look more into the fundamentals of the actual company and what they're doing and any catalysts that they have going on. I mean, that's super important. I did look into that too, and I saw that they had an event happening within this time range. So it was kind of just like another motivator to buy this play and go long. So some more recent examples that I've had, we've got DraftKings, which this one was kind of a failed breakout. And one of my key points that I want to highlight here is it did have that nice tweezer, and it kind of followed through, but typically I like seeing a nice green candle to follow, kind of like how we did with SPCE, is what I like seeing here. And I didn't quite get that, but the play was still in, and you can see how it kind of just failed at resistance there. So just something to look for and highlight, I guess, when trying to find these patterns. The follow through is super important for the play for the pattern to actually play out. So AYRO, this is a really popular one. I had spotted that tweezer there, and this one, same thing, had opened above. I really liked how it had that nice solid green candle, and this one was kind of a bit outrageous, but just some examples of some recent trades that I've had where I've spotted those patterns. So just some takeaways here. You can use these in any market trend or time frame. Specific patterns can be unique to your trading style, whether you're a day trader or a long-term investor. Candlesticks can also be used in junction to a chart pattern, kind of like I was showing you there with SPCE. You do want to look for that depth of at least 30% when you're looking for that cup and handle pattern. Volume should begin to increase once that breakout occurs above that handle. And with tweezer bottoms, like I had just mentioned before, you do want to try to make sure that they follow up with that bullish candle. Otherwise, you could have a failed breakout like DraftKings. And lastly, if you're a fundamental trader, just try keeping an open mind in learning technical analysis to maximize your trades and investments. So that's it.
Thanks, Izzy. So I think we had a couple questions if you just wanted to answer them real quick before we jump to the next one.
Sure.
One of them was, what was the entry point on the Red Robin chart?
So for Red Robin, I had spotted it a bit later than I would have liked to. I kind of spotted it towards this area here around, I think it was like $10.50 or $11. So I had taken my first position around 11 and I played that breakout to that 15 test. I was looking for it to test that resistance point at 14. And then I actually had traded options that time around too. This one does have some options. They're not super liquid, but it was just kind of my way of playing that resistance point. And then I had went long again within the handle range there. So a little bit different than PBPB. PBPB, I spotted it way earlier, but it's kind of a good example too of how you can still capture a really great trade. I mean, even though you're not buying Red Robin at $8, you're buying it at between 12 to 13 and it hit almost 22. So still some really great upside potential on that there.
Awesome. And then the second one, does the quality of the company come into play or sole technicals for swings? Restaurants, tough sales, especially fast casual.
Yeah, so I mean, for PBPB, I kind of like the restructuring of that company. They had a Wendy's executive come in and take over. They were looking to kind of decrease their debt levels there to save the company during the COVID stages. And then, like I had mentioned before too, even like the institutional buying, it was heavy institutional buying and insider buying at that handle there. So I kind of like going in the direction that money is going, similar to SPCE when I had spotted those really big leaps going into January on the call side.
Awesome. Thank you. I think Luke is going to be joining us again here in just a moment. He might have some other questions for you as well, but okay. Luke, are you here with us? Can't hear you, Luke.
Man, there we go. It's that darn mute trick, you know, we're like 9 months into COVID and I still get caught up with that old mute trick. But you can hear me now?
Yeah, I can hear you.
Okay. Let me ask this one. When you see some of these names just running away, like we're seeing with some of the EV stocks and that sort of thing, and there's not a whole ton of history, it's sort of just like this ramp up. How do you think about those types of stocks?
So I've been really active on Twitter with Plug. That was probably one of my biggest swings this year. It actually was my biggest swing this year. I had spotted that one back below $4. From Benzinga Pro, I got like a huge alert that there was a massive block buy that came in. Anytime I see those block buys, I immediately pull up a chart and I start looking at that. It looked like it had a really nice bottom base. And I've just been playing it to the upside. So with PB or with sorry, not PB, with Plug, I've just kind of been using I think it's the 20 or 30 day support on the daily chart to kind of just test those areas. So that's when I began to kind of tighten the range of candles that I'm looking at. I'll start looking at a shorter time frame. Neil was another one. I know that one was super popular. I've just been trading off that support area around the 30-day, which it bounced off of. I was probably one of the few on Twitter that was bullish actually when it looked like it was going to crash because it's held that 30-day support. So I like using the
right.
Pardon?
So it seems like you played that one right.
Yeah, for now. I kind of like playing more on the the stock side once they start really increasing in volatility. So with Plug, one of the key factors in that one was the options. Like the Greeks were really great. There was really high deltas, really low volatility, insanely cheap premiums. You could buy like 6-7 months out and you weren't really paying a whole lot. Whereas now, obviously, they've inflated a bit. The premiums are a lot higher. I've just kind of been playing more on the common side. So that's another thing I like doing too. Once they start getting at those high peaks, I'll usually switch from options to common. So the risk is also a lot lower when you're looking at, the short-term trades on some of these really hyped up names.
Awesome. And let me ask you one more question. So are you using stops at all? Or are you just watching and doing the trades yourself manually?
No, I'm just watching and doing them myself manually.
Yep. Yeah. I think that's definitely better if people can be active.
Yeah. I mean, I for someone that's not really watching, I mean, for sure use your stop losses, and try using those close to support. So I think one of the major problems that a lot of traders have is that they put their stop losses right at support, and then they get stopped out right before it reverses. So that's part of the reason why I like to watch, because I want to see the volume that's coming in when those candles are forming on a 1 minute, 5 minute chart, and they're hitting those support levels or resistance on the sell side.
Awesome. That's great. But we get, I know at Benzinga, we get so many questions about how to use stops. That's an awesome tip right there.
Yeah. Thank you.
Awesome. All right. Well, Ms. Izzy, thank you very much for joining us today.
Right,
awesome presentation as always.
Thank you so much. It's a lot of fun. Thanks again.
Absolutely. All right, guys. I promised you that we would be doing another giveaway at 11 o'clock. The time has come. Last time we did a lifetime membership to Benzinga Pro. This time we're in giveaway round number 2. We're doing a year to Benzinga option. So you're going to get coaching on how to use spreads. You're going to get 3 ideas per week. I've got the winner written down here. It's Andrew Lamp. His favorite stock that he put in the chat. He did pick a small cap one. It's way more fun. Ticker IDEX. If you don't know that one, it is one of those hot EV stocks. IDEX, Andrew Lamp. Again, you have 10 minutes to email events@benzinga.com. That's events@benzinga.com to claim your prize. Otherwise, it's going back into the pool and we're repicking. And JC, I see you here with us.
What's up, Luke?
What's up, man? Guess what? They gave me a soundboard. Check this out.
That's pretty sweet. Ready? Here's the Benzinga cup I'm working with today.
Boom. There we go.
Repping the zingers.
There we go, man. All right, what are you going to be talking to us about today?
Well, you told me you wanted to talk about small caps, right?
Of course.
So let's talk about small caps.
Let's talk
I got
about
plenty to say.
And if you guys don't know JC, check him out on Twitter. I mean, he's one of the best. I mean, he's built a name and a following very, very quickly for a reason. I mean, I don't want to make you blush, JC, but you are a great educator, great at analyzing markets. So I'll go hide because I'm not as great at analyzing markets, and let you take over.
Thank you, Luke. And feel free to jump in and ask any questions at any point. Can I see the chat? I can see the chat.
I can pop in with questions.
Cool. So any questions, just pop in, interrupt me. Otherwise, I'll just keep flowing.
Cool.
I'll be here all day, so you need to stop me, all right?
All right.
All right. So you can see the screen, Luke, right? We're good?
Yep.
All right, sweet. So we're going to go over a bunch of slides. I've got 30-something slides. So if this is something that you're interested in, email info@allstarcharts.com. And the password, make sure the password is Emperor Raznik. So make sure you enter the password Emperor Raznik when you email for the slides, info@allstarcharts.com. So Luke, this is it, baby. This is the chart. This is the one that tells the story. Our friends over at Stock Charts asked me to present what the chart that I thought was the one that told the story of 2020 the best. And I think it's this one. So here's what's going on. On the y-axis, over here on the left side, it's the drawdown in the first quarter. So in other words, the further up it is on the chart, the better it held up during the COVID crash. The further down it did, the harder it got hit. So what do you see up at the top? Large cap growth, NASDAQ, triple Qs. What did the worst? Mid caps, small caps, micro caps, right? Now, on the x-axis, what are we looking at? We're looking at the return since September the 2nd, when the S&P 500 peaked and we started to see this market capitalization rotation. And what are the best performers? So in other words, the further to the right it is, the better it's done since early September. The further to the left, the worse it's done. So as you can see here, the best performers over the last 3 months are mid caps, small caps, and micro caps. And who are the worst performers? Those large cap growth, NASDAQ, Qs, right? So when people were talking about how money has rotated out of tech, money's rotating out of communication and going into other areas, that's just simply not true at all. As we're going to show you now, small cap tech, mid cap tech, they've been breaking out. They look great. They've been going parabolic. So if you're telling me that money's been rotating out of tech, like you're obviously looking at your charts upside down, because that's simply not the case. What's actually taking place is rotation out of the mega cap names and into the smaller cap names. That's the rotation. That's the story. The laggards at the beginning of the year, transport, small caps, right? These were the worst. These were the leading indicators that we were going to roll over in the first quarter in February. And now those same leading indicators are the leaders. They're no longer the laggards. So it's two different tapes completely. People are like, oh my God, the next big crash is coming. Well, the evidence is suggesting the exact opposite. All right. So you remember, it wasn't too long ago when you had these yahoos telling us that it was only 5 stocks that were driving this market. Remember the audacity of these people to say such a thing? Obviously, it wasn't true. And then here are your 5 stocks driving this market as the small cap Russell 2000 index breaks out to all-time highs, by the way, and mid caps breaking out to all-time highs. Not to forget the micro caps. I know this is a small cap conference, but let's throw in the micro caps in there. Let's throw anything not large caps as money is rotated into these smaller capitalization areas, new all-time highs in the micro caps as well. Now let's talk about the breadth divergent, the breadth thrusts. These breadth thrusts, we've seen a ton of them, particularly in June. We saw a lot of them in the large cap space. We saw breadth thrusts that we hadn't seen in 30 years. And historically, particularly from a momentum standpoint, these breadth thrusts historically come near the beginning of uptrends, not at the end. These bullish thrusts are not, they're not evidence of exhaustion. They're evidence of the beginning of trends. And as you can see here, the percentage of stocks in the small cap index hitting new 63-day highs. We just got the highest readings in over 10 years. And then we saw the same thing in mid caps. Here's the S&P 400, the list of the percentage of 63-day highs. Again, the largest in 10 years. These breadth thrusts historically come early in the cycle, not late in the cycle, which again, these aren't, it's not like some sort of holy grail or anything like that. This is just further evidence that suggests the same thing. We should probably be buying stocks. We should be looking at small caps. We should, the defensive areas are the ones struggling the most. So, something like this, it's not like, oh my God, wow, big shocker. It's like, oh yeah, that makes sense, right? So it's more like that, just to be clear. So now we're looking at the two opposites. We're looking at the mega cap Dow components versus the micro caps. So micro caps versus Dow. And what do we see here? I see an epic failed breakdown. As Brian Shannon, alphatrends.net, friend of Benzinga, likes to say, from failed moves come fast moves in the opposite direction. And that's precisely what we've seen here. Tremendous outperformance out of the microcap space, something we haven't seen in over a decade. And then here's the small caps versus large caps. Again, rallying off those lows and now getting back to former support. So really curious to see how small caps react here towards large caps. My suspicion is, as we see in the micro caps, they continue higher. All right, so I think it's an interest rate story, Luke. I really do. So we're looking at small caps versus large caps in black, and then above we're looking at the U.S. 10-year yield in blue. Tell me they don't look exactly the same. I think the interest rate story, interest rates going up, small caps outperforming, I think that's the same story. So here's the 10-year yield going out last week at new 9-month highs. This is a rising rate environment. So Luke, we want to go and see what the other asset classes are doing, right? Are stocks and commodities confirming what the bond market is suggesting of higher interest rates? And as it turns out, not only are they confirming that, they were pointing to that before interest rates spiked, right? So we're looking at regional banks versus real estate investment trusts, and we're looking at copper gold ratio. Notice how all three of these lines look exactly the same. So if the market thinks that interest rates are going higher, you're going to get a sympathy bid in regional banks, particularly on a relative basis. The market believes that rates are going lower. Fixed income investors aren't able to get their yield in the bond market. So you're going to see a sympathy bid in the higher dividend paying stocks. REITs obviously near the top of that list. So a ratio of regional banks to REITs is going to look exactly like the US 10-year yield. Copper gold ratio, same thing. Copper, you're looking at growth, inflationary factors, all that stuff. Gold's more defensive. Needless to say, regardless of any of the reasons, the regional banks versus REITs and the copper gold ratio both look exactly like the US 10-year yield. And in fact, in 2018, when interest rates were making new highs and it were above 3%, and everyone's like, oh, this is it. The 30-something year bull market in bonds is over. Rates are now going higher. Well, stocks and commodities were calling fugazi, right? They were like, that's not happening. And that was a big indicator for one of the reasons why we're so bullish in October of bullish bonds, bearish stocks in October of 2018, because of these divergences. Stocks and commodities were calling BS on the move above 3% in the US 10-year yield. So all this, I believe, is part of the small cap story. As we talked about, the US 10-year yield and the small caps look very, very similar. So we really want to, if you think small caps are going to outperform, which we do, we're looking at the interest rate market. And then here we're looking at the equities for rising rates index, EQRR, which is a basket of stocks that looks to outperform the S&P 500 in a rising rate environment. And this one has also already been pointing to higher interest rates. And I'll show you one more bond chart, and then we'll bring in Luke. This is the 30-year bonds going back 30 years. And I'm not like Mr. Trend Channel guy. Like, I'm not that guy that's always drawing trend channels. That's not me. But man, this one's pretty clear. So this one to me screams lower bonds, higher rates, small caps outperforming. That's how I see it. Luke, what do you think?
All right. I like it. Can you hear me, JC?
I hear you loud and clear.
You see the Rocky behind me too?
I see the Rocky. He's not moving. I take it it's not the real Rocky.
You never know. But I just want to hop in really quick because you mentioned these small banks, right? The community banks, the regional banks. There's a ton of these that are listed both OTC and on the major exchanges. But the other thing that I think they have going for them, and tell me what you think of this thesis. This is a little more on the story side of things. Is that they're great takeover targets, right? So a lot of these banks, right? They've had rising regulatory costs since basically 2009. They have strong balance sheets. They have good assets that they hold. But with rates at zero, it's so hard for them to make any money. So they could get scooped up by some of the bigger firms that can sort of weather the storm of the slow interest rate environment, and then we'll have all those assets to start performing for them once interest rates go up.
Yeah, that's a great story. I mean, it makes sense to me. For me, I'm more price oriented, as you know. The story doesn't really matter to us, but I'll tell you this. You're probably right. That makes perfect sense to me. But I just want to reiterate that while we're looking at regional banks versus REITs and we're looking at outperformance in regional banks, it doesn't necessarily mean we want to buy them. We're using that as information to confirm that, yes, in fact, we want to buy small caps, because just because they're outperforming shitty REITs doesn't mean they're like, they're the next tech sector or whatever, right? Like, yep. Remember what the denominator is in that fraction, right? We're setting the bar pretty low. So we're using it more so as information. Does that make sense?
Yep, totally get it.
I got some ideas for you, though, that I think you'll like. And one of them is in the capital markets. So that's a little right up your alley. All right, so why don't we talk about credit spreads? Because the truth is this rally in the stock market has nothing to do with coronavirus or vaccines or any of that stuff. Like, people are like, well, JC, the stock market can't keep doing what it's doing. The economy is dislocated from the stock market. Like, what are you talking about? Like, the audacity for people to say that the stock market is dislocated from the economy. Like, what are you babbling about? The stock market is a leading indicator for the economy 6 to 12 months down the road. So for you to sit here and tell me that the stock market is dislocated from the economy, that means you're telling me that you can see into the future. Like, you have like this DeLorean that takes you into the future, and you know what the economy is going to look like. You don't know anything. So you can't say it's dislocated if you don't know what the future looks like. So the bottom line is we're going to look at price. And whether you think that the stock market should be doing what it's doing or not is really irrelevant. The one that matters is the bond market. Does the bond market think that the stock market should be doing what it's doing? And the answer is a resounding yes. With stocks all over the world breaking out, we're getting more countries making new highs, more stocks, more sectors breaking out to new highs. We're getting expansion in breadth. We're getting breadth thrust. Is the bond market confirming that or not? And the answer is yes. As credit spreads continue to decline, we're at the lowest level since February, which makes perfect sense. Stocks keep making new highs, credit spreads keep narrowing. They are not blowing out like they did in the first quarter of this year. Okay, fine. So we talked about the copper gold ratio. Now let's take that one step further and look at a basket of base metals: copper, zinc, aluminum, tin, lead, right? Nickel. And those are the base metals. And then we'll compare them to a basket of precious metals: silver, platinum, gold. And what do we see here? I see a crazy failed breakdown below the 2012 and 2016 lows, and now we're absolutely ripping. Let's also remember what took place in the summer of 2012 and in early 2016. Interest rates bottomed. So if interest rates bottomed last time these things were ripping, what do you think is going to happen now? I think the exact same thing: higher interest rates. And then here's a closer look at that copper gold ratio, really setting up a trade much higher. To me, that suggests interest rates on the US 10-year yield going to 1.4. By the way, the GLD fund for gold is worth the least amount it has ever been worth relative to the NASDAQ 100. It's never been worth less, continuing to suggest that the trend in gold relative to stocks is down, right? And it makes perfect sense because gold hit our target. These were the 2011 highs. We hit those highs and we stopped going up from there, right? It makes sense. There's an overwhelming amount of supply relative to demand under 2000 in gold. We know that. It's not JC's opinion or Luke's or Jason Raznick's. Like, these are facts. Every time we come up here, twice now, there's more sellers than buyers. Prices go down. And then we've seen the same thing in Bitcoin, right? This is a small cap. Let's call it the small cap of gold, right? Gold is the large cap. Bitcoin's the small cap. See what I did there, Luke? So Bitcoin getting back up to those highs of 2017. Those were our targets, right? Upon this breakout, our targets have been hit. Now Bitcoin is somebody else's problem. So you can see as we look closer into this small cap gold, if you will, and look at Bitcoin on a 30-minute time frame, these are those 2017 highs, and you could really see the struggle is real underneath those levels. So I actually do think, by the way, that both gold and Bitcoin, notice how they look exactly the same. I do believe both gold and Bitcoin do break out. They do make all-time highs. I just don't know how long it's going to take. Could take a week. Could be tonight. Could take a week. Could take a month or a couple quarters. Could be never. So we're going to sit tight, and then as soon as the market makes new highs in gold and or Bitcoin, then we'll buy it. And we'll know because my computer will start making all sorts of funny noises. It'll play. I have the Gangman style song. It plays when new all-time highs are alert. So it'll be Gangman style telling me that we need to be buying it. What do you think about that?
Yeah, that's good. Also, BitCap being the small cap of gold, or Bitcoin being the small cap of gold, that's awesome too. But let me ask you this: how do you know when it's a breakout versus a fake out? Like how much are you looking for it to break out, or how are you playing it? Are you throwing stops on?
Yeah, you don't know, right? You don't know. My bet usually is that first test is going to fail, right? Like the first test of former resistance, especially something that goes back a decade in the case of gold, in the case of Bitcoin going back 3 years, which is a long time for that particular asset class. You know, I don't know how long it's going to take. So I think we be patient. But yeah, however you define it, and everybody will define it differently depending on your time horizon, your risk tolerance, your overall objectives, of course. But the bottom line is, if we're not above the 2017 highs in Bitcoin, can't own it. If we're not above the 2011 highs in gold, can't own it, right? Sit tight. There's plenty of things doing well. There's plenty of things making new highs. And what do you think what do you think about me showing you some of those, Luke?
All right, let's see them.
All right.
Let's see the hot ones.
So, by the way, this just reiterates stocks over precious metals. This is just a different way to look at it. The small caps of gold, we can argue that it's silver. The small caps of stocks, Russell 2000. So when you compare Russell 2000 to silver, we're making new highs. So suggesting we should be continuing to buy stocks, not precious metals. So this is what I meant before, Luke, when everybody's like, oh my God, the market's rotating out of tech. I'm like, what the hell are you guys talking about? Small cap tech is literally going parabolic. What rotation out of tech?
For it? That's the ETF for it?
The ETF is PSCT. There's no mid-cap ETF, so this is the index also going parabolic. So people that tell me that money's coming out of tech, it's like, are you looking at your charts with your eyes closed? Or like, are your charts upside down? Because like, I don't know. I see parabolic moves across the board. How about small cap materials pressing up against those highs? And by the way, these aren't gold miners. Look at the chemical names breaking out to new all-time highs. And then I think it's important, Luke, since we're, having a conversation about small caps, to understand the difference in components. On the left, we're looking at the small caps. On the right, we're looking at the large caps. Notice how real estate is substantially larger in the small cap space. Technology is much smaller. Industrials are about twice the size in small caps. So keep in mind the differences. There's a lot more financial services in small caps as well, a lot more regional banks, as you touched on, biotechnology as well. So just keep in mind what some of the differences are. So we have a list, Luke, that we call a 2 to 100 club, that we're buying stocks as they graduate from small cap to mid cap, cross that $2 billion threshold, and we're looking for the next $100 billion companies. That's the 2 to 100 club. So this is a list that we've kept internally until today, until right now, actually. And these are the minor leaguers. So these are the names between 1 and 2 billion that'll get called up to the mids. What's that?
Is this the debut of this list?
This is the official debut of the minor leaguers. I like that. You're good. You're getting good at this.
Yeah, I'm working on it, man. All right, keep going. Keep going. You're on something good.
All right. So these are stocks between $1 and $2 billion. They're gonna be mid caps. Our bet is that we want to buy the next mid cap stocks, right? Because if they're graduating from small cap to mid cap, it's not because they're making new lows, right? So we're sorting it by proximity to new all-time highs, and we're doing that because in this environment we're making new all-time highs, so it makes more sense. If we were coming off a key low or something like that, then perhaps maybe 63-day highs, 126, maybe 52-week highs would be a better sort. But since we're making all-time highs, why not look for the best, right? So let's go over a few names. So here we're looking at a $1.3 billion healthcare diagnostics and research company, PSNL, breaking out of a year-plus long base for above 30. I like this stock long with a target of 46. Here's Syndax Pharmaceuticals, SNDX. It's a $1 billion biotech. Biotechs are breaking out to all-time highs. Look at the IBB breaking out of a 5-year base to new all-time highs, the XBI as well. And here we're looking at a $1 billion small cap biotech, SNDX, or above 22. I like it long with a target of 33. We're about halfway there. Here's UCTT. This is a semiconductor equipment company, 1.5 billion, well on its way to mid-cap status. We're above 31.5. I like it long with a target of 50. By the way, again, let me just remind you, if you're interested in these charts, I'm happy to send them to you. Peter will send them to you. I won't send them. Peter will send it. But to make sure that he sends you the right slide deck, so he doesn't send you like a slide deck from India or something from one of the presentations I do out there, make sure you use the password Emperor Raznik, info@allstarcharts.com. All right. So, all right. QADA, this is a software company, $1.2 billion. We want to be long if it's above 62 and taking profits at 82. FLGT, this is a $1 billion healthcare diagnostics research company, hasn't broken out yet. This one came to me from a client of mine, FLGT. If the stock's above 50, we want to be long with a target of 77. And then here you go, Luke, this one's for you, baby. This is a $2.8 billion financial services company. It's a capital markets. I cheated a little because it's a mid-cap already. It already graduated. But the relative strength can't be denied. If the stock's above 71.5, we want to be long with a target of 100. Here's Pennant Group, PNTG, making new all-time highs on a relative basis. Medical care facilities, $1.5 billion company for above 52. I like it long with a target of 78. And then finally, last but not least, it's a $1.8 billion semiconductor, has its heart set on turning into a mid-cap, SITM. If the stock's above 106, we like it long with a target of 160. So, Luke, this is the chart.
That was like 20 stock picks in a minute. You're like Jim Cramer lightning round right now. That was awesome.
Hey, easy. I'm a little younger. Come on.
Hey, maybe you'll call Bear Stearns next, but who knows?
Come on.
But I mean, that was awesome. I love how many names you just gave us.
I could keep going if you want, but no, we'll stop there. I just, again, want to reiterate, this is the chart of the year, Luke. This is it. Yeah. The best performers in the first quarter, you had the leaders, you had the laggards. It's now the opposite. Those laggards are now the leaders, guys. And those laggards are transportation stocks, industrials, small caps. And then small caps have twice the weighting of industrials than their large cap counterparts. Keep that in mind.
Yep. And so can I hit you with a few questions?
You can hit me with as many questions as you like.
All right, let's hammer them then. So when you're seeing a stock breaking out, how far above the previous high are you looking for? How much above the previous high before you buy the stock?
It's not so much how much above the previous highs. How is it reacting to those levels? Like, are we getting to the previous high, consolidating a little back, back and filling over a couple of weeks or a couple of months, depending on the time horizon that we're analyzing, and then getting the breakout, right? Because if it's just the first retest, chances are, it's probably likely to fail because the market has yet to prove that there's more demand than supply. It's actually the opposite. So, again, it depends on your time horizon. For me, it's not so much how much it's above, but how it's reacted. How many times have we tested that level? Is this the third or fourth test, right?
Yep. Okay. And then the next question was going to be your candles. Are you looking at dailies?
Dailies, weeklies, monthlies.
Okay. So you're not going anything shorter than that.
I mean, I did on the Bitcoin chart just to show the kids, right? So on the Bitcoin chart, this is a 30-minute candlestick just to show how the market is reacting below overhead supply from 3 years ago, right? It's obviously the struggle is real below that. Like, it's not like, it's not like you or my opinion that there's overwhelming supply here. Like, these are facts, right? We're seeing in the market. But I'm not really looking at 30-minute charts or minute charts. Intraday charts give me headaches. I'm not a good day trader. I don't know any old day traders. I know a lot of retired young day traders and broke young day traders, but old day traders, I don't know any. So it's not for me. I like looking out weeks and months. I don't need to make money today. I don't care what happened today. I don't care what happens next year, right? Weeks and months, trying to make money this quarter. That's the goal.
Okay. And then when you're wrong, right? You're getting into something, the stock doesn't move your way. What's your cue to get out?
Well, we have to set the parameters, right? So if we are buying XYZ, if it's above 70, let's just say, and XYZ is not above 70, then our thesis is invalid. There's no reason to be long. So we'll set those parameters prior. So let's just say, we say, all right, we want to buy XYZ if it's above 70 with a target of 100. Well, if the stock's at 71, buy it all day long. We're good. Right? If it breaks 70, maybe call it 69 and a half. You set your stop a little bit below, give it some wiggle room, depending, because you could set tighter stops, but you have to be willing to get back in. If you're not going to be willing to get back in, maybe you're an engineer or a teacher, you got other things going on that you're not in front of your computer. Maybe you want to set a stop further away, have a smaller position size. That's where position sizing comes in. And I'm not a teacher or an engineer. I'm looking at charts all day. So for me, if I get stopped out and I have to get back in, so what? I'm happy to do it. I'm here.
Yep. Okay. And so you are using stops then, right? Like you're going into the trade with, are you putting the stop on when you get into the trade?
Yes.
Okay.
Unless we're buying like a call option, because that's your stop. You can't lose more than what you paid for, right?
Yep. Okay. So let's say, the same example, right? You want to be long the stock above 70. Let's say the stock's now at 80. You're looking for 100. Are you getting out of the position if the stock starts to go back towards that 70?
No.
Take that money and running? Okay. You're hanging on to it.
Unless like, for example, let's just say that there was resistance at 85 from like 6 months ago, let's just say. Yep. So maybe in that scenario, we'll say, okay, we're going to buy it at 70. We're going to take half off the table at 85, and we'll take the rest off at our ultimate target at 100. In a case like that, but we're predetermining those levels. Because if you enter the trade and you're in the position and then you're making decisions when you're already in the trade, that's bad news, because once you're in the trade, you're taking crazy pills, right? Like, it goes back to evolution, man. You can't put yourself in a position to let yourself screw up. So you want to set all the parameters before you enter the trade to take your crazy mind out of the equation. When I say your crazy mind, I mean mine, all of ours.
Yep, absolutely. Okay. And then last question. I think this is the last one that we're gonna have time for. But how do you know where to look, right? I mean, there's let's say 5,000 stocks. How do you know which charts to look at?
Well, we look at them all, first of all. Okay. So that's step one. Look at all of them, right? There's no, like, people who build scans and like build all these things and they start with that, like, they're selling themselves short. Like, there's no, if you want to cheat and cut time and all that stuff, you're going to pay for it, right? If you just put on some good music, open a bottle of wine and just sit there going through all 5,000 charts, you know what? You're going to start to recognize trends. You're going to be like, whoa, those keep going up, and those don't go up, right? Like, you're just going to notice those things, and then you're going to look at maybe one or two stocks in a crappy sector and be like, whoa, that's unusual. The other stocks in that sector aren't doing that. Like, you're going to notice things because you're putting in the time, you're putting in the work. And somebody can do it maybe one time, 1 week. I've been doing it every week for over a decade. So, like, for me, it's just turn the page. So, I mean, I could draw most of these charts for you.
There you go. Yeah, you're dreaming them. You just see this happen in your dreams, you know. Hopefully not this way. But
unless we're short. If we're short, I hope it goes to zero and the company files for bankruptcy tomorrow. No
boom.
shame.
That's the move.
I don't care. It's not my problem. It's not my fault.
Exactly. But all right. So how do people find out more? How do they keep in touch with you? How do they further education with you, et cetera?
Yeah, I mean, obviously, as you know, I'm easy to find. All-Star Charts on Twitter, StockTwits, Instagram, YouTube. Just follow me at allstarcharts.com. And if you want these slides and you're interested, I know I flew through some of these stocks quickly because I knew we'd be offering the slides. Like I said, email info@allstarcharts.com. And make sure to include the password Emperor Raznick.
Emperor Raznick. Boom. All right. And then the picture behind you, what are we looking at?
That's a picture from Mike Tyson's Punch-Out. I think you're a little young for that.
Yep.
It's autographed by Mike himself. I don't know if you saw that fight a couple of weeks ago. He's in good shape. He's looking good.
I know. I didn't know how they were going to be going into it, but I mean, they went into it aggressive.
Dude, Roy Jones Jr. was huffing and puffing like in the second round, and Mike Tyson could have gotten another 10 rounds. Dude is in good shape, man. He's a scary man.
Yes, he's scary. All right, JC, thanks for joining us, man. Again, I love that you gave us so many stock names. You educated us. You told us about your strategy. Awesome to have you here, as always.
Absolutely. Tell Raznick I said what's up.
All right, will do.
Later, guys. Good luck with the rest of your conference. Thanks.
All right, everybody. Next up, we are going to be rolling back into some of these small cap company presentations. We have some really interesting companies coming up in just a couple minutes here. And again, I want to reiterate this point that I made earlier. If you want to find alpha in these markets, small caps are a key way to do that. I mean, you can identify stocks that aren't already getting all the attention and all the coverage. And that's the whole reason that we're doing this event today, right? We didn't want to do hear about Apple, right? Everybody already knows about Apple. We want to identify companies that you may not have heard about and are really interesting and have amazing things going on. So I want to bring on our next speaker. He's from Citius Pharmaceuticals. The ticker, I've got it written down here, is CTXR. That's Charlie Tango X-Ray Romeo. And we're bringing on Leonard Mazar, who is chair of the board. Leonard, thank you so much for joining us today.
It's a pleasure, Luke. Thank you very much. Thank you to Benzinga for organizing the conference, and thank you for all the participants that are on the call here with me or will be joining me. I want to thank you for taking the time. So let me get into it. It's Leonard Mazar. I'm the executive chairman of the company. So first of all, hang on. Okay. So just a disclaimer, what's really important for all the investors that are on the line today with us is that you consult any and all information that you can find on our company. A good source of information is sec.gov, where we have all our filings that are up to date. Also, our website, citiuspharma.com, where all our press releases, everything, all the information you could possibly want on the company is also on the website. So with that, let me get into the company overview. So we're a unique pharma company in the sense that we have a late stage lead asset that I'll describe for you shortly called Minilock, which is an antibiotic lock solution for the treatment of catheter-related bloodstream infections, which is a mouthful, I realize. We've gotten a favorable review from a data monitoring committee that looked at our data twice. The last analysis was conducted in in September for safety and efficacy. The markets that we are presently in are large markets with unmet medical needs. The catheter-related bloodstream market is estimated to be somewhere around 1.8, possibly $2 billion worldwide. The tissue expander prevention, infection prevention market is somewhere around $500 million worldwide. And then we also have an entry in the in a hemorrhoid market, which is somewhere around $2 billion. So the team that we have, the management team, has a strong history of transactions in pharma M&A over $1 billion in about the last 10 years, probably. We have scientific advisors who are key KOLs in infectious disease, breast surgery, and pulmonology. And the management team is different from any other management team that you're going to hear from in this entire conference. And that is because we have personally invested $26.5 million into the company. 22.5 came from myself, 4 million came from Myron Holubiak, our CEO. And you're not going to find too many companies where the management team has the degree of confidence that we have in our portfolio and our technology. I always get the question about where's that name Citius come from. So it comes from the Olympic motto, which was Citius, Altius, Fortius. Citius stands for faster, and of course, once we're approved, we'll be higher and stronger. So the management team is myself. I have a background. It's a mix of large pharma, mid-sized pharma, and then I went entrepreneurial a number of years ago, formed a number of companies with very successful exits. Myron Holubiak, our CEO, is the former president of Roche Laboratories. Jamie Bartushak has 20 years experience, our EVP and CFO in corporate finance M&A. A recent addition to our team is Dr. Myron Chuchman, who is our chief medical officer. He spent 23 years at Roswell Park Cancer Center in Buffalo as the chief of lymphoma, and then went on to join Celgene as the vice president of lymphoma research at that company. Joined us after Celgene merged with Bristol Myers Squibb. He's not only has a great background, but he's a KOL in his own right, which means key opinion leader. He's published more than 180 peer-reviewed journal articles. Gary Tallarico is our EVP operations, has a big background in pharma as well as Alan Lader, who formerly was an instructor in medicine at Harvard Medical School. Andrew Scott is our vice president of business development and also interacts on the street for us. So our key scientific advisors, I'll just highlight one, Dr. Isam Rad, who's the chair of MD Anderson's infectious disease department, is also the inventor of the drug that we licensed from MD Anderson, Miniloc, and is highly regarded and well known in his field. You can read about the others after my presentation. So the pipeline that we have, as you can see, Miniloc is our lead asset for the treatment of catheter-related bloodstream infections. It is in late phase 3. We're estimating that our last patient visit will be somewhere in the first quarter to second quarter of 2021 for our trial. We also have some other events that I'll describe a little bit later for you relative to our data monitoring committee and what we can do by looking at the data at the 75% completion level, which we estimate to be somewhere in the first quarter of 21. Now, some of this is, I have to caveat somewhat because of the fact that COVID-19 has impacted a number of the hospitals where we were doing our clinical trials, but nevertheless, we still have a handful of hospitals that are enrolling and we are getting patients. Our next asset is the Halolido, which is a prescription therapy for hemorrhoids. We expect to initiate a phase 2B trial somewhere in the first quarter of 21. Minorap is another product that we licensed from MD Anderson that prevents infections associated with breast implants. That's at the pre-IND stage, and we've had positive developments there in our meetings with the FDA. City 401 is our latest asset that we licensed in just several months ago from a company in Cambridge, Massachusetts, Novellus, for the treatment of ARDS associated with COVID-19 or ARDS on its own. So Miniloc, our lead asset, is a combination of minocycline, which is an antibiotic, EDTA, which is a chelating agent, and ethanol, which is alcohol. It's an antibiotic lock therapy for salvaging catheters that cause bloodstream infections. So let me give you an explanation of that. Most of the time, primarily cancer patients, as well as dialysis patients, have long-term catheters implanted in them. Those catheters are implanted surgically, as you can see. A lot of times they're implanted subclavically or by the collarbone, and then they're inserted and connected to the superior vena cava at the heart. The reason for that is so that it has a large enough portal to be able to accommodate all the meds, all the nutrients, everything that chemo, everything that a cancer patient would need. These catheters may remain for months at a time, and over time, what can happen? They'll get infected, and when they get infected, what you see here is something known as biofilm, which I would describe for you less elegantly as bacterial slime. And it's a slime that coats the inner walls of both the catheter as well as the line. These pathogens have an affinity to plastic. They grow and exude this fibrous glycocalyx, as it's called, to protect their own organisms from antibiotics or anything that would be sensitive to that. So these kinds of infections, when they occur, are devastating. They're dangerous. There are 7 million catheters inserted annually in the United States, and almost 500,000 of those catheters become infected. There's morbidity anywhere from 12 to 25% associated with a catheter-related bloodstream infections. The standard of care is to remove the catheter and replace it somewhere else in the body. So you have to go through 2 surgical procedures. These surgical procedures are highly painful and discomforting to the patients, and they're already severely immunocompromised to begin with. There is a significant rate of adverse events associated with the removal and replacement of a catheter. So there is no treatment for this at this point in time. So I'm going to go through this quickly. This shows what a catheter removal looks like, and as you can see, it's a very complicated procedure that produces all these side effects. Whereas with Minilock, what we have is you basically insert the Minilock into, the nurse will inject it into the catheter. It'll go into the patient. It'll go to the line. It gets locked. This does not go into the patient's body. So you lock it for 2 hours. The nurse comes back, aspirates it out, and then resumes the IV treatment, so that the patient has 22 hours of uninterrupted IV flow. That you do this 5 to 7 days in a row, and that line is completely sterilized, and the patient does not have to be subjected to those surgical procedures. Now, the cost of doing those 2 for removal and replacement is about $10,000, whereas with our product, we believe that the cost will be somewhere in a range of $1,400 to $2,000 for a whole course of treatment. Will be cost savings. We do have a phase 3 trial underway, and due to the shortness of time, I'm not going to be able to go into all the details of it. Suffice it to say that we are close to the 75% level of being completed through with the trial. So with that, as you can see here, our plan is that our data monitoring committee is requested, which was unique in what they did, requested a third look at the data at the 75% level. If they see exceptional data, and we're hopeful that that could happen, they could call for the cessation of the trial, and we would then go to the FDA and file for, begin our process for filing for the NDA. So as you can see from the development plan and calendar, we are close to filing and filing our NDA. We anticipate it'll be somewhere in 21, whether it's in the beginning of the second half or in the middle of it somewhere. It all depends upon what happens with that DMC committee, but no matter what happens, we will have a filing in 21. So there's a large opportunity, 4 million collapses around the world. Worldwide, our plan is to out-license this for the rest of the world, and then we do have an ability to market this ourselves. So just to summarize, about Minilock, it treats catheter-related bloodstream infections, it penetrates the biofilm, salvages central venous access, and we have worldwide rights, a lot of exclusivity as far as the regulatory side. The FDA has given us something known as QIDP, Qualified Infectious Disease Product, which is a special status only given to antibiotics that have a breakthrough or represent a breakthrough in therapy. So with that, I'd like to move into our Novacite IMSC ARDS drug that we licensed from Novellus. As you can see, there's a picture, a depiction of that SARS virus, and those spikes, as you see, what they do is they've been described as being a killer with a crowbar that's breaking and entering into cells and with impunity and injecting them with RNA into the human cells. So we set up a transaction with Novellus where we put this into a separate subsidiary company called Novacite Biotherapeutics. Our intention is to keep this completely separate from the rest of Citius. We will finance this through the sub and try to be as non-dilutive as possible to the Citius shareholders with this. So I'm not going to go through, I've got about a minute and a half left, so the opportunity here is significant. We think we have breakthrough iPSC-derived MSCs that are different from everybody else for reasons that are cited for you on this chart. As you can see, it's basically our master cell bank comes from a single donor, one time and one time only. We never have to go back to another donor again. We have a manufacturing process that is already underway. We've got preclinical data that we just announced today. We issued a press release on the fact that as far as an interim look at our data, that we had showed improvement in clinical parameters such as improved oxygenation, less systemic shock, and reduced lung injury as compared to a control group. This is a significant advance for us. We think that the model that we had approximated the human model. So with that, let me get to just an overview of the company. So and I'll skip through MineralWrap. You'll have to read this on your own, and Halo Lido. So presently we have 55 million shares outstanding, 55.4, 26.9 million warrants. And basically, as you can see, because of the significant number of investments that Myron and myself made, we have about management has close to a third of the shares of the company. We believe we are significantly undervalued at this point. We know that once we start generating data, which we're very close to, that we should have an improvement in our share price. We have many milestone events that are going to be upcoming, as you can see by today's announcement that was made on the animal trial. We have additional announcements that will be coming in the coming months. So with that, I want to thank everybody for your attention, and look forward to further interaction with all of you shareholders. Hopefully, at some point in the future, it'll be on a person-to-person basis. Thank you.
Leonard, pleasure to have you, sir. Super, super interesting. A lot of positive response in our YouTube chat to what you all are doing. Several questions over there in the YouTube chat. Unfortunately, we don't have a lot of time to go through them here, but I know you got a lot of positive retention from this presentation. So very excited to have you, and thank you for being here.
Hey, thank you very much, Luke. Really appreciate it. And again, thank you to everybody.
Of course. Again, that is Leonard Mazer. He is the chairman of the board at Citius Pharmaceutical, NASDAQ, CTXR. Put it on your watch list, make it a position, do what you do, but definitely keep them in your sights. Super cool company. We're going to move right along to maybe what we could consider another form of wellness with Fabian Monaco. I hope I said that right. I believe he is coming over now. Fabian, let's make sure to get your video and mic turned on so we can all see the wonderfulness of the presentation here. Fabian, how are you, sir?
Doing well. How about yourself?
Good, good, good. Pleasure to have you. Let's hop right in to what Gage is up to. I'll let you take it away, sir.
Sounds great. Hi, everybody. How you doing? Just going to share my screen, and just give me 1 second, please. Okay, great. My name is Fabian Monaco. I'm the president of Gage. I'm here to talk to you about an exploding brand in the state of Michigan. We're particularly excited about what we've been doing in Michigan over the past couple of years. And I'm just going to start outlining that right away. So Michigan in and of itself is a dominant cannabis market. It's been one of the most dominant cannabis markets for over a decade, frankly, when they had introduced their caregiver model back in 2008. We had been following Michigan for quite some time and started the company a little over 3 years ago and had the sole focus on, the Michigan market. We knew it was going to be a big market come around, 2019, 2020. And like I said, solely focused on that market over the past couple of years. If you take a look at, the introduction of adult use sales back in December 1st, 2019, so just a little over a year ago, they had an explosion in sales. They're up over, 502% this year. Michigan went from being out of the top 10 in terms of a cannabis market to now in the top five cannabis markets in the U.S. So just a phenomenal growth. If you look at also how big the medical system was before the new state system had come into play, at its height, it had, close to 400,000 medical patients. And now still today, even with an adult use program, you're seeing this, still a strong medical base, about 245,000 strong, which again is just indicative of how much the adult use market can continue to explode as it continues to capture that great underlying medical patient base that was already in place, as I mentioned, for over a decade. The population in Michigan is also extremely attractive. You have over 75% of the population that is of age to consume, 21 plus. It really creates an exciting dynamic just in terms of observing how big the Michigan market can get over the next couple of years. A little bit about Gage, obviously, now that I've touched upon, the Michigan market. We have an experienced leadership team. We have over 15 years of cannabis experience, not only in the US, but also in Canada. We've applied for, built, and operated licenses both in, Canada and United States. When you take a look also at the significant public and private market expertise that we have in our company, we know what it takes, to have a successful and interesting company at in a private stage, and then move into the public market sphere, and what needs to be done in order to essentially execute on that in the best way possible for shareholders. We're vertically integrated in Michigan, which I think is extremely important, especially nowadays in the cannabis market, to fully capture the margins that we're continuing to see improve in the space. So we actually cultivate. We operate cultivation assets, operate processing assets, and operate retail assets as well. We have 5 operational retail assets, 3 cultivation assets, and 1 processing asset, all operational at this time. And I'll get to those a little bit later in the presentation. The MRA in Michigan has done a phenomenal job at really creating expansive rules and really welcoming the new legal program in Michigan in order to obviously combat the illicit market. In Michigan, you can really, get your hands on a variety of products, and we offer those products within our dispensaries. A little bit back, on Michigan. It's estimated, Michigan is going to be over a $3 billion market over the next couple of years, which we're particularly excited. We actually think that, has a potential of exceeding, $3 billion. I talked earlier about, the medical patients, historically, a very, very strong underlying base of medical patients that were in Michigan for over the past decade and continue to be, quite strong. If you just look at the graph here, just a phenomenal ramp up in comparison to last year. Last year, as I mentioned, Michigan was outside of, the top 10, I would say, for cannabis markets, and has simply, catapulted itself into a top 5 market rather quickly. You hear a lot about, some of the other larger markets like Florida and Illinois in the media. You just don't hear enough about Michigan. It's a phenomenal cannabis consumer in Michigan in terms of population. And we're really seeing just phenomenal numbers coming out of Michigan over a month basis since we started this year. When it comes to COVID as well, we were lucky as, like most other states, to have cannabis as, considered an essential business, essential service. And we executed quickly early on in the year our curbside and delivery program. And so far, we continue to execute quite well, despite, the unfortunate events that, continue to unfold when it comes to a COVID scenario. We ourselves have had exceptional growth this year. We've expanded our monthly revenues from, 1.5 million in January to over 4 based on August numbers. We continue to perform exceptionally well on a month-to-month basis. You take a look at our monthly capacity. We had started off with about 400 pounds of monthly capacity, or sorry, 200 I should say, in monthly capacity in January, and have since exploded to over 1,000. We actually just had our first harvest at our third cultivation facility that was licensed back in August. We had that harvest last week. I would say it's transformational for us. We're averaging now, or we anticipate averaging approximately 1,000 pounds of production on a monthly basis, which again is a transformational event for the company. We sell, each pound at approximately 6,500 a pound. So obviously with the easy math, it can kind of give you an indication of what we're looking at starting in January. We'll actually have the product, that we just harvested on our shelves. In fact, we may have a little bit of that product at the end of December. But again, just taking a look at the month of January, we fully anticipate to have a full-fledged, approximate 1,000 pounds of production available in our stores, which should obviously translate to phenomenal top line and profitability starting right away in 2021, January 1st. Our average basket sizes continue to, frankly, lead the industry. Starting in January, we had about $131 in basket size, average basket size. I would say that's a very, very reputable number in and of itself. When you take a look at, the fact that we're now been averaging, I would say at least 175 for the past 8 months. It's just, I think, a great indication of what the Gage brand is all about, how we have been executing in 2020. And what are the outlooks now in the outlook, I should say, for the company in 2021, now that we've ramped up our cultivation so much. It just really gets me excited about, what our average basket sizes may look in the new year and how we continue to execute on those average basket sizes. A little bit on our operating stores, as I mentioned, we started a year off only with 1 operating location, and now already we're at 5. We plan on opening a variety of stores in quick succession over the coming months. We had waited a little bit just for our cultivation to catch up. And now that that is, caught up, we're going to be quickly executing on 3-4 store openings. We have, 3 to 4 stores, I should say 4 stores that are fully complete from a construction standpoint. They could really be turned on quite quickly. And you'll see those open, if you do follow us already, you'll see those open in quick succession starting in the new year, which we're really excited about. As I mentioned earlier, the state program has done a phenomenal job at ensuring there are a variety of product SKUs within the market, really combats the illicit market in such a big way to have that variety. You look at other states, sometimes there's, scenarios where you cannot really provide a wide array of products to the consumer. Michigan's not like that at all. It's grown so exponentially in this year, mainly because, again, the regulatory system has been so welcoming to the fully legal state program. Our brand portfolio, I would say, is second to none. We've partnered with industry leaders. Cookies, a brand out of California, in my humble opinion, one of the best brands in the space, bar none. They've done a phenomenal job and continue to do a phenomenal job with their business. We've also partnered with Slang Worldwide, again, with the Open Vape brand that they have within their portfolio. Really, I think, a top 3 brand historically in the legal market. With Open Vape, which we think is going to, really transform the market that we have in Michigan when it comes to extract-based products, and we're particularly excited to start launching some of those Slang products in early 2021. So it's great to obviously tell you about how great the Michigan market is, but it's another thing to obviously indicate how great our product is and how we are capturing that Michigan market. We continue to have simply just a phenomenal welcoming consumer. We sell on average, for 15 to 18 a gram at retail. We focus on ensuring that, all our product is indoor quality. We hang dry it, we hand trim it. The post-production process, it's something that often gets overlooked in this space, and we continue to obviously execute on that particularly well. I touched earlier upon our 3 cultivation assets. These are all operational cultivation assets. We are producing approximately 1,000 pounds of production per month, starting this month. And so we're particularly excited about how that's going to continue to expand as we move forward. Quickly on the customer experience, as I mentioned, the Michigan average is about $85 per basket size. I would say that's, quite high for the industry generally. California itself is roughly in the high 60s. So it really shows you just how strong our brand is, just how much the retail experience, I guess, is a pleasurable retail experience for the Michigan consumers when they come into a Gage store. And that's, again, indicative of our average basket sizes. I quickly talked about cookies. We have an exclusive partnership with them in Michigan. Again, a phenomenal brand. We operate one of their medical dispensaries on 8 Mile in Detroit. It's probably one of the top medical dispensaries in the state. We will continue to expand on that relationship and plan on actually opening up another cookie store in the January-February timeframe. So obviously be on lookout for that. Quickly, just a summary on our asset portfolio. We have 19 Class C licenses that spread over 3 operational facilities. We have 3 processing assets. One of those processing assets is already operational in Harrison Township. Our Monitor Township processing lab will be operational by the end of Q1 2021. We have 13 dispensaries across the state. We can reach 90% of the population within a 1 hour's drive radius from our 13 locations. And we have 5 operational locations, as I mentioned, and we're going to be opening up the remaining 8 in quick succession starting in 2021. A little bit about our board. Bruce Linton is our executive chairman. Obviously, he brings an immense amount of experience and not only on the operational side, but also on the capital market side to the business. When you have a chance, you could also visit our website at www.gageusa.com to learn a little bit more about the company. Also, my last point I want to make, we are live with a current financing. I encourage investors to go to our website, www.gageinvestors.com. That's gageinvestors.com. You'll see our offering circular that's available. You get to know a little bit more about our brand. You can actually review our full presentation there as well in detail. If you do have any questions, you do have any comments, feel free to reach out to us. We're at ir@gageusa.com. Again, that's ir@gageusa.com. Generally, and most of the time, I would just say I'm the one who responds. And I look forward to hopefully having a lot of you that have viewed the presentation contact me to get to know us a little bit better and ask a bunch of more questions. But I think I'm close to the end of my time. I appreciate Benzinga, obviously, for having me. And if we do need anything else, like I said, reach out to us at ir@gageusa.com, and I'd be more than happy to have a discussion with any of you. Thank you.
Awesome. Thanks so much, Fabian. I think there was one question in the chat just about the difference between the state markets. I would imagine you're probably going to cover that in the panel at 12:30 a little bit and what it looks like going into 2021. But, such a cool brand, Fabian. We're so happy to have you. And we look forward to seeing you again very shortly, my friend.
Yeah, no, most definitely. Thanks a lot for your time. Appreciate it, Elliot.
Awesome. Be well.
Take care.
You as well. All right, so cool. So we do have some cannabis-centric content today, going from Gage to Clever Leaves. Very, very cool company as well. Catch both of these companies at 12:30 in our cannabis-centric panel, but I will throw it to Kyle Detweiler, who is the CEO of Clever Leaves. Kyle, did I say your last name correctly? Detweiler?
Yeah, that's right.
Perfect. Awesome, sir. Good to have you. Once you click into your presentation, I'm going to let you take it away, my friend.
All right, great. Yeah, thanks for having us. So I'm Kyle Detweiler. I'm the CEO of Clever Leaves. Just so people understand my quick background, I'm a Harvard Business School graduate. I spent most of my career at KKR and the Blackstone Group, focusing on investments in healthcare, natural resources, and Latin America. And really, Clever Leaves was built around a very simple idea, and that is that cannabis production facilities have been built not where they make economic or environmental sense, but where they were just first legal. And I spent a lot of time in the agricultural space, and you can make sugar plantations in the United States. It doesn't make economic sense. It's not good for Mother Earth to do so. You should be moving it to the equator, follow the trend of blueberries and asparagus. If you're looking at the generic drug industry, for example, as well, most pharmaceuticals, 50, 60 years ago were produced in, places like Germany or New Jersey. And then there was a couple of disruptors in Southeast Asia that created low-cost pharmaceutical grade API or active pharmaceutical ingredient, and they forever changed the industry landscape. And that really is what Clever Leaves is. We're trying to disrupt this space because we are one of the largest, lowest cost pharmaceutical grade cannabis companies in the world. I enjoyed the presentation by Gage, and just, kind of just compare a little bit the footprint. Clever Leaves has 1.9 million square feet of cultivation. In Colombia, they ration the amount of THC which can be produced. As a single company, Clever Leaves has almost half of the entire national quota for the country. So while American cannabis companies are trying to secure their brands by best retail locations or the best vape pen, when you're talking about federally legal cannabis in the international markets, Clever Leaves is arguably the best company in the world because it is the only company which has an EU GMP certification, an INVIMA GMP certification, which is the Colombian FDA, and also has what they call the GACP certified cultivation. So when you look at the footprint of Clever Leaves, we're probably best known for our Latin American presence. Again, the continent's only EU GMP certified operation out of hundreds of different operators. We also have an operation in Portugal. So Colombia, we can only produce extracts and other isolates, whereas out of Portugal, we're allowed to produce flower. Or dry bud product. There's probably less than a dozen material European-based flower producers, and Clever Leaves is one of those. But now that we've been able to produce in a world-class way at a grade above most peers, this is about distribution. We have a number of exciting distribution partnerships in Latin America. The most recognized one, of course, is with Canopy Growth, where they shut their LATAM production division down to focus on commercialization and power it by Clever Leaves product. We also have German importation businesses. There's no domestic production of cannabis in Germany today, so it has to all be imported. So owning that piece of the value chain is helpful. And then lastly, we have a U.S. nutraceutical operation to prepare us for entry into the U.S. So when you think about the big picture of cannabis, go to the Southern California greenhouses and that are growing cannabis today and ask them what they used to grow in those facilities 30 or 40 years ago. Most of it was red rose production. But where did the roses go? It turns out that today, Colombia is responsible for 7 in 10 cut flower imports brought into the United States. So, we kind of like to joke that, cannabis facilities, whether it's in Michigan or Canada, you're really just trying to trick cannabis into feeling like it's in Colombia. And we've seen this in other industries. In oil and gas, you can extract hydrocarbons out of the Canadian tar sands, but it's terrible for the environment and it's very expensive. It's cheaper to do it in Saudi Arabia. Manufacturing tells a similar story, but those industries only offer a 3 to 5 times cost advantage, whereas in cannabis, based on our 2019 US GAAP PCAOB audited numbers, Clever Leaves cost production was 20 cents a gram when we were, kind of subscale. And now that we're in our stride in Q3, we were at 13 cents a gram. And that compares to the Canadians who on average produced at $1.89. That is a 9 times cost advantage over other possible sources of supply. And most people think it's just because we have low cost labor, but it's also about those environmental advantages that we have. We also grow at 8,000 feet of elevation. That's a huge advantage when one of the most problematic issues with cultivating cannabis is trying to eliminate pests and spider mites, so that altitude helps a lot. If you also think that this is just beginning, you need to think if every cannabis company, how do you become an Airbnb? How do you become an Uber? How do you become a global dominator? Well, you might need to expand your capacity. And one of the most interesting things is that whether you're a very large American cannabis company or a very large Canadian cannabis company, even when you're spending hundreds of millions of dollars on your facilities, it still is prohibitively expensive over the long term to go do that. So the Canadians have produced capacity at $200 a square foot, and Clever Leaves has built it for $14. That will help change the game. And so when you think about, sort of our international relevance, we are one of the largest in the world by footprint today. Beyond being one of the biggest cultivators, we're also one of the biggest extractors. But it's also important to stress this EU GMP certification. We've raised approximately $130 million of financing as a private company. We are in the process of going public through one of the only, I think it's only 2 cannabis SPAC transactions that are live. Ticker is SAMA today. And one of the things that the private capital that invested in us was interested in was, making a moat, making sure that other people would have difficulty replicating the Clever Leaves business model. And 4 years of work and $130 million of capital, one of the most important advantages we have is this EU GMP certification. There are only 4 cannabis companies in the world, by my estimates, that have the same type of certifications and ability to produce products as we do. Yeah, just a quick visual. You know, this is one of the largest cannabis production facilities on the planet. Again, 1.8 million square feet. I think when you start to see, you know, facilities like this, you start to realize this is what the Chiquita or this is what the Driscolls of cannabis is going to look like. It's not going to be a small assemblage of, you know, indoor cannabis operations spread throughout Canada and the United States. That's not the way that the future industry will look like. We also have a 73 million square feet outdoor operation that's prepped and ready to go. You know, this itself would be 5 times larger than all the other large Canadian licensed producers put together. You know, maybe just to skip forward a little bit, you know, here's a quick overview of our Portuguese facility where, you know, we acquired KKR's Sundrop Farms, Portugal to build this site. You know, we got this license in August. We should be able to begin generating our first sales in Q1, Q2 of next year. But again, this puts us in Europe where, you know, the American market's very mature. You know, the European market is much more nascent, but it is quite interesting. You know, when you compare the European market to Canada and the US, you find some pretty interesting statistics. First, the population is bigger if you count Russia. The GDP is just about as high. But because of how hard it is, how much work goes into getting these European GMP certifications, there are fewer players. And what does that do? If you're a card counter, the way you're thinking about investing, that means we have higher unit economics. The average price per gram of cannabis in Germany is $22 a gram compared to the US, which might on average be $5. But aside from Europe, you know, also keep in mind that prohibition is ending globally. We're not just talking about, you know, selling to a single state. The virtue of the Clever Leaves business model is that we can sell anywhere in the world where it is federally legal. And take a look at Brazil. Brazil's just come out with its regulations this year, and here's some interesting facets of their program. First, there is no domestic production allowed, period. Second, everything is in extract format. Third, it is prescribed or sent through the pharmaceutical channel. And therefore, number 4, you have to have a GMP certification ratified by Anvisa, which is Brazil's equivalent of the FDA. And fifth and most important, in Brazil, if you're talking about pharmaceutical products, you have to have a shelf life study that's been run on your product showing what your product is like living in the Amazon. And you could understand that an American pharmaceutical company probably hasn't prepared its products to list, you know, be down in that environment. And as a result of that, I don't think there are many companies, if more than a handful, that could do what we do in Latin America. And our biggest advantage is our cost structure is, you know, 90% lower than those. And that's why, you know, we have one of our largest contracts signed to date in Brazil. It's a $4 million take or pay. And that's also why we partnered up with Canopy. So Canopy had invested over $100 million in its own domestic operation in Latin America. And they decided that when David Klein took over the organization, they were going to shut it down. Canopy wants to focus downstream. They want to control brands. They want to develop products. They want to run clinical studies. They want to be good at distribution. Clever Leaves is a great ingredient producer. It's probably producing one of the most valuable ingredients there is today, and that was a natural partnership. So we announced this earlier this year. We're starting to ramp the program up, and that's why I think when you look to our financial projections, you know, in 2020, we're going to end the year with about 13 million of revenue, and we're targeting about 57 million next year. You know, I think it's important for people to know that this year was a very bad year in Colombia. COVID basically shut down air cargo flights, so we were not able to ship product for most of the year. So that will go away and has gone away in 2020. So we get a full year of Colombia. We get another layer of GMP certification, which is higher pricing product and better markets, and we also get to turn on our Portuguese operation. Also, it's important to note, I won't get too much into details, but you know, as you think about the end of prohibition globally, whether it's President Biden win the election or the United Nations last week, you know, removing cannabis and cannabis resin from Schedule 4 of the 1961 Convention of Controlled Narcotics, we're going to be able to sell THC at some point. And this is the most remarkable thing about our business. You know, good investing is finding good call options in life. And in this example, if we're able to sell our THC quota that we have been granted by the Colombian government, if we assume we sell that in 2022 and we sell it at the cost that the Canadians take to produce the cannabis, we will add $30 million of EBITDA to our bottom line. If you put a 10 times EBITDA multiple on that, that's $300 million. That would be more than 1.5 times approximately of the current value of Clever Leaves today. So we're very excited about the U.S. legalization. Just ending quickly, we are in a SPAC transaction. If people have any questions, they should visit our website or the SAMA website. Again, the shares of SAMA are publicly traded, and we anticipate the closing of this transaction to occur in just about a week or two. So I think it's a very exciting moment for us. And I see we've got a couple questions on the chat side. Oh, I guess no questions on the chat side. Yeah, so that's it. My email address is kyle.detweiler@cleverleaves.com. Would be excited to field any questions and help you learn more about Clever Leaves.
Fantastic. Kyle, we really appreciate you presenting today. Again, that is NASDAQ SAMA, S-A-M-A, is that correct?
That's right.
Fantastic. Awesome. Everybody make sure you watch list that, position it. Awesome company. We're thrilled to have you with us. You'll be back very shortly, I believe in 15 minutes. So we'll look forward to continue talking to you then. We'll see you soon, Kyle.
Great. Thanks.
Thank you. Awesome. So we are going to keep pounding away with a really, really good friend to Benzinga, Steve Ehrlich. I hope I said that last name right. I feel like I'm having trouble with last names today. But this is Voyager. I do believe this is the stock that Luke threw out earlier in this stream as one of his favorite small cap stocks to be in. Now, Steve, are you with us? Shelby, are we moving him over? All right, he is being moved over. Okay, I think I see it popping up now, Steve. There we go. You might want to turn your video and microphone on for us there. There he is. How you doing, sir?
I am good. How you doing?
Good. We are pounding away here. Excited to hear what you have to tell us. I'm going to let you go ahead and dive in.
All right, let me share my screen here. Hopefully everyone could see the screen now.
Yes, sir, we can.
All right, awesome. Why am I? There we go. All right, so first, thank you for having me. I'm really excited to be here again with the Benzinga crew, great supporters of us, and we appreciate everything that they do in the world of crypto and support Voyager. The previous slides were our forward-looking statements and disclaimers. You can access that on our website and read through that if you so desire. But take you right to where we are today and what makes Voyager, different from everybody else, and what sets us apart, and why everybody should invest in Voyager. First and foremost, part of the Voyager difference is our easy-to-use mobile app, and next week coming out with our desktop app in beta. So we have some of the most easiest to use applications on the market. Look, you can understand where we came from. Our backgrounds are in the space of developing mobile apps for financial services companies. So we're easy to use mobile app, desktop coming next week. We also offer interest on up to 9.5% on over 20 coins today. So people can actually trade and earn interest all at the same time using the Voyager app. We have over 50 crypto assets on our platform. We announced our 55th today with the launch of the Avalanche token. And then we have faster execution and deeper liquidity, as we'll show you later on in the presentation, how we aggregate order flow from the global exchanges, so have the deepest pool of liquidity and execute our trades in microseconds. Some of our investment highlights: massive market opportunity. Crypto is just at the beginning of what I call, we're in the first inning of this 9-inning game of crypto and the adoption of crypto. Our model is extremely attractive, multiple revenue streams. We've got powerful unit economics. Our infrastructure is extremely scalable. We come from a background of working at companies like E-Trade and Lightspeed, where we built scalable infrastructures, and trusted and transparent public company management team with tremendous expertise and experience. And then we have regulated oversight. When you talk about the massive market opportunity, today the crypto market is about 580 billion market cap. The gold market cap is about 9 trillion. And the global investable assets are over 120 trillion. So sorry, 9 trillion on the gold market cap. So you could see where this is going and how we're in the early stages of crypto. And as people believe, just like Anthony Pompliano has, who's a big Bitcoin advocate, who's been talking about Bitcoin for quite some time. He tweeted out a couple of weeks ago that Bitcoin's market cap will beat gold's market cap by December 31st, 2029. I actually think it'll beat that, and we'll get there faster as we see more and more high net worth and institutional investors moving from gold into digital gold, which is Bitcoin. Why is it going to be such a big opportunity? First and foremost, the traditional financial systems are ripe for disruption. We're seeing it across many different avenues in financial technology. But digital assets, unlock really this massive market opportunity. And why is that? First and foremost, it's instant. Digital assets are instant, and you can access your account and trade and invest 24/7. You can't do that on traditional online brokerage. You can't do that through your banks. Try to move money on a Saturday or Sunday. We all know you can't do that. Borderless currency, it's diversified as a traditional store of value. More and more people, especially the millennials that are just coming to our platform in droves, they have a lack of trust in banks, and they don't like to work in the expensive and slow traditional banking and infrastructure systems. So there's a massive opportunity to convert people from the traditional financial services systems into the crypto and digital asset market. And even Ben Bernanke actually, came out with a quote not too long ago that the virtual currencies will promote a faster, more secure, and more efficient payment system. Now, ex-chairman of the Federal Reserve jumping on board for cryptocurrency and digital assets says a lot about where this market can go. Now, how are we going to grow? Today, we have about 165 million of assets under management, but it's not too far away for us to have 20 billion of assets under management. You could see relatively easy with just going from 40,000 accounts today to 1.2 million over 5-6 years and increasing our assets and on the account size, we'll get to 20 billion of assets. And we'll show you where we are today, how we get to some of these economics, but we believe we'll have 20 billion of assets in the next 5 to 6 years. And here we are today, 165 million of assets under management. We just launched our 55th token on the platform, 22 interest-bearing assets. We are regulated in the US. In Canada, we have filed with the Ontario Securities Commission for exemptive relief and working towards our registration there. And we're finalizing our acquisition of LGO in France to give us access to the European Union. So top of funnel, the number of accounts that we could service just drastically increases over the immediate short term. Some of the other things that we've accomplished, we didn't begin our operations to 2018, and we didn't actually bring our iOS to market till February 2019. So you could see in really a less than 2-year time frame, we're at 165 million of assets, accomplished adding interest to our product. We did 2 acquisitions. We brought the USDC to life. And just literally a month ago, not even a month ago, 10 days ago, we announced that we had 150 million of customer assets, and now we're at 165 million. You can see how Voyager is growing and how the future is extremely bright for us. And we'll show that through our attractive business model. Why do people come to us? We get 4 types of customers that come to us and multiple entry points to do that. True BTC Bitcoin investors. We have others that want to come and use one of the other 54 and buy one of the other 54 coins. Then we get that whole segment of customers that are coming for yield. What do they mean by that? They want interest. They want to get 9.5% interest on a USDC stablecoin. They want 5.5% interest on Bitcoin, and then interest on 20 other coins to really gather yield and create wealth. Then there's the cost-conscious investors that come to Voyager because we're a zero commission model and give people the best price available through our scalable trading infrastructure. What our model has shown as a compelling investment is that we've had significant revenue growth, 200% from the quarter ending June to the quarter ending September, from 700,000 of revenue for the quarter ending June 30th, 2020 to 2 million for the quarter ending September 30th, 2020. That's a 200% growth. That's a great way for us to keep moving the business along. Our AUM in 1 year, December 31st, 2019, we had 5 million of customer assets, and today 165 million. Our unit economics are thriving. We acquire accounts for less than $30 or around $30 an account, and we're getting payback on those customers in less than 3 months. We've got more and more products coming to the market. And then most notably, we're expanding our operating leverage, whereby our operating margins have increased so significantly that more of our revenue is falling to the bottom line than ever before. Other interesting things about our business model, we have multiple revenue streams that allows us to earn revenue and bring customers to our platform. We talked about the interest component where it's 22 coins. We charge some listing fees for new tokens that come on our platform. We are the destination for alternative coins, in addition to the Bitcoin, Ethereum, and what we would call the top 5 or 6 major coins. So you can see over time, we're going to continue to add to our revenue through these multiple revenue streams. And we have more that we're looking at to add to these streams in the future. Some of our key metrics. We're averaging about $750,000 of net deposits a day added to our platform. That includes USD deposits made by customers through ACHs and wires, crypto deposits, as well. So we're averaging almost $1 million a day of net deposits. And on account, most customers are trading at least, their portfolio almost once a month. So you can see how our trading volume, tends to continue to grow. Our account acquisition, as mentioned before, it's about $35. Monthly revenue per account is about $20. And probably most notably to investors, our user growth is growing 20% month over month in the amount of people using our platform. Some support behind our net deposits. We mentioned all these numbers before, but you could see the chart, 33 times growth in just 12 months on our net deposits. Trading volume, I talked about 0.75 to 1 times turnover on the portfolio every single month. In the month of November, we traded 120 million of principal value, and that was 40 times what we traded just 11 short months ago. Marketing, one of the key aspects is how we get customers, and we do it so effectively. We do it through our paid advertising efforts, promotions, affiliate and influencer relationships. Most notably, we brought on Tracy McGrady to work with us, the NBA Hall of Famer, to work with Voyage and getting the word out and speaking to customers about the value of USDC and interest in Bitcoin. Then we have great content marketing. We've been doing that for quite a long time and have such a following. And the open rate we see in our emails about the stories we deliver is far better than what we see in the traditional markets. And social media, I think we just got ranked as one of the top 4 or 5 places for crypto assets by the number of people tweeting about Invest Voyage. And we've seen that as a go forward, a real increase to what we're doing and how all the marketing comes together to make sure we have this consolidated, interconnected acquisition experience. Looking at the competitive market, there are quite a few different competitors, but when you look at this, the only true agency broker in this equation is Voyager. Coinbase, Kraken, Gemini, Binance US, all exchanges. BlockFi is an interest-bearing product. Robinhood doesn't have many coins. So you can see how we've set ourselves apart as the leading company in agency brokerage. It's an unparalleled competitive differentiation. Some of the opportunities for us on the growth side is that we see we're adding the desktop, as we talked about, in a couple of weeks. We're adding a debit card by March. Credit card will come sometime in 2021. We're looking at adding margin accounts, traditional banking accounts. We talked about the international side of the business and how we're expanding into Europe and Canada. We're always looking at M&A. We've been active in that market. And we own a self-custody wallet today called Ethos that has 150,000 users that we're going to connect into our platform over the next 12 to 18 months. Scalable infrastructure. One of the things that makes us special is the Voyager you see is our APIs, our mobile apps, our wallet, and our desktop. Those are ways people see and how to use our platform. And the APIs are being used, and we're in, by companies like Market Rebellion to bring our trading infrastructure and account infrastructure into their platform, into their Market Rebellion education platform. And we're working with a bunch of different micro banks and other platforms on writing to our API. You know, the Voyager you don't see. We built our entire own market data and pricing engine, homegrown order management systems and smart order routing, all backed by a secure and unified wallet and user account infrastructure, tremendous marketing and automation plan, and then obviously we're regulatory compliant across the board. And that technology helps us bring deeper liquidity and broader market access to consumers. We've built our custody and security where we use multiple custodians so that we bring the right blend of the security to consumers. So not all our coins are in one place, and we blend it all through that and our own self-custody solution. We've built our own smart order router connected to over, about 12 different venues, and we take all those prices in and make sure that we deliver the best possible execution we can to customers. As I said, we've got over 50 plus coins today in the marketplace, offering customers the best choice of coins. Trusted and transparent, some really key points. And this is, to support why anyone should be an investor in Voyager. Independent brokerage model. That stands by its own. We're not an exchange. We're always looking to do what's right by the customer. It's a customer first focus. Secure technology. We've built a secure platform. We're working on our SOC 1 and SOC 2 certifications that are in progress, and we're hopeful to work through that over the near future. Public company. We are the only agency broker public company in the crypto space. There are mining companies, there are prop trading firms, but no broker in the public domain. Experienced team. We have over 100 years of combined industry experience in the capital market, and we work with some of the biggest well-known partners in the space. Some of our trusted partners, you can look at the list. We use Fireblocks, Ledger, Coinbase, Google, BMO. You can see these are the top names in the space when it comes to delivering security, custody, execution, banking. We work with all these guys, all these partners, and excited about continuing that with them. Our team of founders, outside of myself, who spent years building E-Trade and built my own online broker at Lightspeed, Philip Aiton, Gaspar Dedruzzi, serial entrepreneurs who have built fintech companies, Capital and Socure. And then there's Oscar Salazar, probably the most notable of our co-founders, who was the founding CTO of Uber. So he knows a little bit about disruptive technology and how to bring mobile apps to the marketplace. But it doesn't stop there. The rest of our team comes from a wide background. You've got Gerard Hanchy, Janice Barrio, ex-E-Traders working together with me at E-Trade and building out that infrastructure. Louis Bateman coming over from CoinSquare. Evan Saropoulos is our CFO from PwC and Credit Suisse. Mike Legg coming on board to run our communications. And then Amateur Ra and Natalie Yeager coming on board to run our marketing and really building out our marketing tech stack and infrastructure.
Hey, Steve, we gotta stop you there, my friend. But this has been super insightful, my friend. Really awesome stock. Obviously, Luke is a big fan of you. There he is. Because I know Luke wanted to be around for you. So pumped to have you. But we got to make it to the next panel. So we're really appreciative of you, my friend.
Take care. Thanks, guys.
And Elliot, I've been in that stock since 66 cents. It's over $2 today. So that one's been a winner for me.
Awesome. Awesome. Right. I'm going to hop in then.
and I know we have to get cooking on to the next panel, but let me do a giveaway. You know that I love my giveaways. The chat loves the giveaways. This time we're giving away a $100 gift card to the Benzinga merch store. We've got 2 more giveaways coming up today. The winner for this one is Pat Mulligan with the stock pick of NEO. Pat, you have 10 minutes to email events@benzinga.com. Again, that's events@benzinga.com to win that prize. We got 2 more of those coming up later today. So if you haven't gotten it yet, stay tuned. And without further ado, I want to welcome our next panel. We are going to be talking cannabis stocks. This is great for me because I'm actually looking for a play in the space. I want to somehow get involved in the space. I'm not now. So I want to introduce our moderator, Phil Carlson from KCSA. Phil, I will let you take it away, and I will hop off of the screen for you.
All right. Thank you, Luke. It's certainly a pleasure to be part of this event. Good afternoon, everyone. My name is Phil Carlson from KCSA Strategic Communications. We have a great panel here today. I'm pleased to be joined by Andrew Toot from Forefront, Kyle Detweiler from Cleverleaves, Brad Rogers from Red, White, and Bloom, and Fabian Monaco from Gage Cannabis. Before we get started, I'm going to let each individual give a quick intro, and then we can move into our questions. So we'll start with Andrew, and then we'll go to Kyle, Brad, and then Fabian. Andrew, take it away.
Thanks, Phil. Forefront is a multi-state operator with specializing in low-cost production. Our flagship locations are in Washington State, where we are the #1 edibles manufacturer and #2 flower producer in that state. And our thesis is really simple. We're bringing those low-cost strategies and those brands and products that have awarded us dominant market share in Washington into large nascent rec states of Massachusetts, Illinois, Michigan, and California.
Kyle?
Great. Yeah. Kyle Detweiler, CEO of Cleverleaves. Cleverleaves is a multinational operator. Our I guess, minor claim to fame is, we are one of the largest cannabis producers in the world, about 1.9 million square feet. Our crown jewels in Colombia, where we're the continent's only EU GMP certified producer. We also have about a 9 million square foot operation in Portugal that's being developed, a couple of German importation businesses, and then a US nutraceutical business as well, to prepare ourselves for a federally legal path to entering the US when we can.
Brad?
I think the chat box said that Brad might not be able to join us today.
Oh, okay. Then we'll go to Fabian.
You're on mute, Fabian.
You're on mute.
There we go. Gage is a single state operator solely focused on the Michigan market. We've been involved in the Michigan market for over 3 years now. We have one of the largest vertically integrated asset portfolios in the space in Michigan. We have 3 fully operational cultivation assets. They produce in excess, or approximately, I should say, 1,000 pounds of production monthly. We sell some of that production on a retail basis for $6,500 a pound. We have 1 processing asset operational, and then we have 5 dispensary provisioning center locations operational in Michigan as well. I would say we are one of the strongest brands in the space in Michigan, and looking forward to this conversation, Phil.
Great. All right. Well, thank you, guys. Let's just dive into the questions. Kyle, SPACs have become a very prevalent tool this year as companies look to go public. Can you tell us why Cleverleaves chose this route instead of going through the traditional IPO route?
Since SPACs to us, represented a very interesting way to raise a significant amount of capital. We've been a private company since our inception, almost 4 years. We raised $130 million and still needed to raise a little bit more cash to get to cash flow positive. But doing so privately is very, very difficult, right? It's hard to raise more than $10-20 million at a time doing that privately. Having done 130 million of it, I think I know what I'm talking about. But being able to go with a SPAC, is an ability for us to speed that up, and kind of a little bit different than an IPO. It does allow a bit more certainty. It lets the market kind of digest it. Anybody that wants to buy SAMA shares today, which turn into Cleverleaf shares in a couple of weeks, can do so. There's no investment bank saying I'll give you an IPO allocation. I'm not giving you an IPO allocation. Kind of is a bit more of a democratic way of going public.
Fabian, Gage Cannabis recently launched its Reg A+. Can you explain to the investors listening what that process is and why this is more attractive to Gage than the typical IPO?
Yeah, no, most definitely. So we wanted to ensure that we were obviously giving people the opportunity to invest in a quickly growing cannabis company before it went public. We have plans of going public in Q1 2021. And so, when we're looking at, the options for capital raising, we've raised obviously a little bit less than Kyle. Approximately $60 million has gone into the business. I think we've done quite a bit in terms of, as a private company, and obviously our progression moving forward to being a publicly traded company. We knew we wanted to, get a little bit more money on our balance sheet, and we thought the Reg A+ offering opportunities presented a phenomenal chance for people in the US to invest in the company before going public. We went through the offering circular process with the SEC over the summer, got it qualified in September. We launched near the end of October, and we'll probably be shutting down the financing on a public basis in the coming weeks. So I obviously encourage everyone to go there and check out our website for more information on the Reg A process generally and how that works at www.gageinvestors.com. And I'll stop there.
You're on mute, Phil.
Right.
There you go.
Sorry about that. Andrew, sale leasebacks have been a major theme over the past year. And Forefront recently entered into a sale leaseback for the company's cultivation and production facilities in Tumwater, Washington, and Georgetown, Mass. Can you explain why cannabis companies are using these to strengthen their balance sheets?
Sure. Access to capital in cannabis, while it's come along in the last few years, it's still relatively tight, particularly when you compare it against other high growth industries. And you also have the issue in this industry that these businesses, by and large, if you're growing and selling cannabis, they're very capital intensive. And so you have to replicate operations across every state that you're in because you can't take cannabis across state lines legally. And so you really have three choices when you are looking to raise capital. You can fund growth from cash flow. And many companies in this industry are still not mature enough to be spinning off that enough cash flow to fund their growth aspirations. Or you could raise dilutive equity, and then the third option is you could saddle the company with a bunch of debt. And the fourth is the sale leaseback opportunity. And so the sale leasebacks are basically when you sell your facilities to a REIT and you become a tenant of that REIT. And it has the outcome of giving you access to non-dilutive capital as a company, and you can deploy it into really high return projects. And so, the sale leasebacks in the industry typically are running at cap rates of in the low to mid teens. And if you can deploy that capital into projects that are going to return you 3 to 4x over a 5-year period, that cost of capital is acceptable. And so I think that cost of capital in the industry in general is going to continue to come down, and very hopeful, and we're going to get into it, our hopes and aspirations for the Biden administration. But in the near term, sale leasebacks are pretty attractive non-dilutive ways of deploying capital into high return projects.
Thanks, Andrew. Yeah, I want to move into states here. First, I want to talk about California. So, Andrew, the opportunity there is great, but it's a crowded market. Your play is that you are bringing in operational efficiencies learned in the Washington market. Can you talk more about how these efficiencies will help you compete in a state like California?
Well, when we started in the Washington market, when it became rec, everyone said, oh my gosh, these medical brands are all over Washington right now, and it's a crowded market. And we brought our low-cost production capabilities, manufacturing capabilities to that state. And a lot of those medical brands that were there at the beginning of recreational are no longer there. So there are two things that you need to understand about cannabis to sort of set the ground. First, there is a ton of price elasticity in this market, meaning that if you can offer a product at a lower price, you get outsized market share. And the second is, to be a price leader, you have to have low-cost production honed in. And I don't think anyone in the crowd can come close to competing with us on price, anywhere in the country. And so with the facility that we're building in California here, we're basically iterating on a manufacturing facility that has generated dominant market share in Washington state. And we're bringing those capabilities to California and putting them on steroids. So the biggest problem in the California market right now, and there are myriad problems as they've rolled out recreational, but the biggest problem is that the legal operators can't compete with the illicit market on price. And with the automation and the scale of the facility that we're bringing to one of the largest cannabis markets in the world, we will be able to undercut the illicit market by 20 to 30%. And we think the four-wall EBITDA out of that facility will be, in the 30 to 40% range. So we think that we're building the Death Star to go and be a disruptor in one of the largest cannabis markets in the world. And we're excited to open that in early May.
Great. Fabian, for Gage, Michigan is the play here, kind of like Trulieve in Florida. Do you see the company moving into other states? And if so, what states would you aim for? If not, why only the single state?
Yeah, no, it's funny you mentioned I guess one of our competitors in the space broadly being Trulieve. They solely focused on that Florida market for many years. I think that model had served them and continues to serve them extremely well. From my standpoint, and from a lot of the people that were early founders in Gage and investors in Gage, Michigan presents itself with such a phenomenal opportunity right now. It was out of the top 10 in terms of biggest states on a monthly basis, in terms of numbers, in terms of sales numbers last year, and really catapulted itself to a top 5 market pretty quickly in the first 9 months of the year. Generally, when you take a look at return on invested capital in Michigan, at least for us as a company, we're just getting so much more than the analysis that we've done in any other state, or in terms of going into another state. We have so much work to do still in Michigan in order to capitalize and continue to increase our market share, that really doesn't make sense for us to go out and spend shareholder capital in other states at this time. We know what we can do in Michigan. We know how much we can dominate that particular market, and it really doesn't cross our mind at this point what is the next state we're going to go into. We speak very highly of a lot of other states out there. I think there are phenomenal opportunities across the U.S. generally, not just in specific states. Let's call it Illinois or Florida as examples, or Pennsylvania or New Jersey. Those are all great states, but similar to what Andrew said, California can also be a great state as well. There are a variety of other states that continue to perform exceptionally well and have exceptional growth. And so we'll take a look at those once we feel that we've gone to the point where we're actually reaching our limit in Michigan. We think Michigan, again, as a market, will continue to be a top 5 market. So having the opportunity to implant yourselves and continue to grow and get such a great return on invested capital in one place that's your own backyard, it would seem foolish to branch out right now. But obviously something we'll start to consider midway through 2021, whether there are other states that we want to go to and enter into.
Thanks, Fabian. Kyle, I want to switch gears here a little bit. I was speaking with someone recently. We were talking about the recent UN vote, and with the UN vote recently to reclassify cannabis in certain European countries, what impact does this have to your operations in Europe, and how does it affect your outlook?
Yeah, well, I think it's a great reminder that this is a global industry. And, whether companies want that to happen or not is a different question. But the United Nations isn't just for Europe. It covers everyone, right? Everyone who's a member country. So the UN's move is going to make it easier for other countries to participate in a federally legal manner. Today, we're dealing with the International Narcotics Control Board. We have quotas. It's very difficult to get import and export permits to move this product around. At one point, we were going to ship a product from Colombia to Australia late this summer, and we had exceeded the entire country's quota from the United Nations. And these are the types of constraints that we're running into. But the UN move, which even the United States voted for, is a sign that this is going to change, right? The walls are going to come down, right? At some point, Forefront's going to compete in Michigan. And at some point, Colombian product is going to come into the United States and Canada. It doesn't happen today, but, this UN vote is a signal that, the dominoes are falling. Prohibition will end globally. And, it's going to open up new markets and it'll make things, it'll shift the value chain just a bit.
Andrew, banking has always been an important topic when we're speaking with cannabis companies. Do you expect the SAFE Act to pass in 2021, and how will this affect the overall industry?
I think a lot of this hinges on whether the SAFE Act as a standalone passes. A lot of that hinges on how the Georgia Senate vote goes, and I'm not super positive on the Democrats taking both of those seats for what it's worth. But I think that banking has a chance of passing, probably its best chance of passing in the near term, by being attached to one of the COVID relief bills. So I think that, getting any type of banking is, as Kyle mentioned, these dominoes fall really quickly. And as soon as you have that crack in the dam of the federal banking system acknowledging, cannabis as an industry, that opens up lots of other things. Cost of capital comes down. U.S. investment banks are allowed to help with capital aggregation. The exchanges will allow U.S. plant-touching businesses to trade on them. Institutional capital in the U.S., which has been pretty few and far between investing in this space, can start to invest in U.S. names. So I think that, banking as a standalone probably has a 50-50 chance. I think that, one thing that we can look forward to, even if it is a Republican-held Senate, is that Crapo from Idaho was head of the banking committee, and he didn't have, he comes from a state without legal or medical cannabis laws. And he is being replaced by Pat Toomey from Pennsylvania. And Pat Toomey's indicated a willingness to support SAFE, or a lot more willingness to support the SAFE Act than Crapo did. And he's also very in with the banking industry. And the banking industry has been pushing hard on having some cannabis banking reforms. So while I wouldn't place a large bet on it passing with the GOP Senate, I think that the chances are probably better than 50-50 that it gets into one of these COVID relief bills coming up. So as we looked at 2021, I'm fairly sanguine that something will get done on that front.
Great. Kyle, we haven't seen many deals like the one you recently struck with Canopy. Could this signal more outsourcing or partnerships with different groups specializing in various segments of the value chain, like Canopy, with products / brands in Clever Leaves with high quality upstream production?
Absolutely. And I think this is more of, it's kind of how Andrew and Forefront are positioning themselves, right? And it's how we're trying to position ourselves. This market is evolving, right? Companies shouldn't, there's an economic reason they shouldn't be vertically integrated and do everything from retailing to extraction to distribution to cultivation. Like that's hard, right? I mean, we're trying to be the best in the world at just two of those. And that's still, very tricky. But, here is Canopy. Canopy invested over $100 million in their Colombian operation, and they decided they would shut it down because their expertise lies downstream. It's commercialization, it's getting drugs registered, it's about branding, it's about marketing those products. Why do they want to really be in a capital intensive space like cultivation? Now, granted, it's less capital intensive in Colombia than it might be in Canada, but it was a good chance for them to go asset light. They didn't have to, employ a 500-person workforce like we do, and it allowed them to focus on what they do best. And so I think you're going to start to see those kind of relationships evolve. It depends on the laws, though, right? Unless Clever Leaves can bring product into the United States, this large-scale, breakup of the value chain probably doesn't happen. But if we can, you're going to see cultivation happen in Southern California and Oregon, maybe North Carolina, and places like Colombia. And of course, it would make sense for people to adjust because they're going to have to bring their cost structures down. They're going to have to align with the modern reality of that market.
Fabian, you signed a partnership with Cookies in 2019. Can you explain how you came upon that and what that entails? And then also tell us how two operators joining forces, how does this help you guys? How does it help Gage scale?
Yeah, no, most definitely. So, frankly, in my humble opinion, I think Cookies is probably one of the best brands in the space. They've done a phenomenal job at building up their business. They've done a phenomenal job of building up their brand. It's a company that's been around for many, many years. We think very, very highly of them. And so when we were looking, we had a lot of inbounds as we were, growing our infrastructure and people became interested in the Michigan market, a variety of inbounds from brands across the US. Generally, as most people think, there really isn't many, dominating, cannabis brands at this time, especially those brands that can actually expand on a national scale like Cookies has done quite quickly, I should say, over the past couple of years. And so for us, it gave us an opportunity to partner with a first-in-class brand, allowed us to elevate our brand alongside theirs. It helped build up the Gage brand on from a social media perspective, from a consumer perspective. And frankly, we continue to do a lot of work with them, look to continue to expand their brand alongside ours as we have grown in Michigan, and probably will continue to have a strong relationship with them. Our view is, we want to pick, let's call it at most 3 to 4 partners. Slang Worldwide is another partner that we've entered into an agreement with to bring in their brands to Michigan. We'll start to see brands coming out of that family of brands probably at the end of Q1, beginning of Q2 of 2021. Really, we're again choosing 3 to 4 brands, or let's say family of brands that we think very highly of, that have competed in competitive markets, that have done well in competitive markets, that continue to expand not only on a North American basis, but even in some instances like cookies on an international basis, and partner with those 3 to 4 brands again to help elevate our brand, to continue to innovate, to continue to bring the best products to market. Not only in Michigan, but then if we do expand into other states, into those other states as well. And for us, we think it's been a phenomenal partnership, a phenomenal way to build your own brand as a company. And look forward to further work with both of those 2 family of brands.
I do have one question left, but I want to get to this one question from the chat, and this is for everybody here. So with the potential for legalization on the horizon, particularly if Georgia goes blue, how could this impact your respective businesses should a blue wave happen? Andrew, why don't we start with you, and then we'll go to Kyle, and then we'll go to Fabian.
I think that I just sort of go back to what I said before. I think that a blue wave here, gives you quicker access to banking, which I think is the key to unlocking this whole thing. Because once you get banking, cost of capital comes down. You get access to the exchanges, access to U.S. investment banks, and so forth. So I think that a blue Senate, would really usher in, kind of the golden age of cannabis, where, these companies that have been sort of toiling under, pretty adverse conditions for a number of years, whether it's capital formation and regulations, all becomes that much more easier. And those that have really honed their businesses to get to a place where they're streamlined, profitable, and ready for that sort of step function growth in the out years becomes that much easier. So I think that net it'd be a terrific thing for the industry.
Kyle?
Yeah, from our perspective, I mean, it's definitely encouraging. I think the more the Democrats control the U.S. Political system, the more likely the cannabis industry will grow. The best case for us is there's a descheduling and cannabis becomes federally legal, right? We're one of the largest federally legal producers in the world, and who wouldn't want to get a hold of some Colombian production if they got their chance? The even more exciting thing is if it's deemed a federally legal medical product, that might mean that a Cleverly's product could be sold at a CVS or a Walgreens. It doesn't even need a dispensary. Like, that's the best outcome for a company like us. Now, that might not happen. There's probably going to be, some trade barriers. So, we'll figure out what those could be. But also, even if you look internationally, one of the first things that happened after Biden was declared, president-elect was that Israel announced a plan to move forward with a recreational program in less than a year. I don't think they would have done that under the Trump administration. And so even other countries are going to feel more emboldened, because one of the largest, political countries in the world is going to be more supportive of that. So I think you're going to also see, sort of an acceleration internationally if the U.S. goes blue as well.
Fabian?
Yeah, Phil, I'll probably reiterate a lot of the items and topics that Andrew had delineated earlier. At the end of the day, a blue wave would bring about, reduction in cost of capital, easier access to banking, easier access to, U.S. listings. All those 3 things just do so much for the industry in terms of growth. I would say, in Michigan, we have some great banking partners, but at the end of the day, your ability to go, let's say, go to a bank in Michigan, let's call it Comerica Bank, and say, hey, I'd love to get a mortgage on this property that I own. Gage has done a great job in not taking on any, burdening debt We have very, very minimal debt at the company. We basically engage in very, very minimal sale leasebacks as well, only on our retail locations. Our grows, our cultivation assets are actually free and clear, and we own them. And so at the end of the day, to be able to tap into, let's call it a regular mortgage at reasonable rates, just does so much for the industry. It also brings in more competitiveness in terms of, when you're actually looking out and trying to raise capital, you just have way, way more options when, if a blue wave comes and if we did get some sort of, federal legalization, let's call it. And then at the end of the day, when you take a look at the market itself, the US is growing at such a phenomenal pace. Bringing in, some sort of federal legalization or, the Safe Banking Act passing would just create, I think, a mad rush of investment into, frankly, one of the largest cannabis markets in the world. I know Europe, quasi competes with the US in terms of how big it could potentially become. But I think just in terms of historically, consumption habits from consumers within the US, I just think it has so much more room to grow. And really, once you remove those shackles, people are going to really start to see the benefits of this industry. Right now, I'd say even like from a multiple standpoint, you take a look at where some of the big names are trading at on a 2021 basis. And, it's still, I would say, kind of middle of the pack when you look at multiples across various industries. Whereas, this type of industry, the growth it's experiencing should be kind of at the top of the pack in terms of multiples. And I think once you get that, again, the removal of those shackles from a federal legalization standpoint, you get better banking, you get better cost of capital. I think it's just going to be a phenomenal way for the industry generally.
Do we have time for one more question, or are we running up on our?
You got time.
All right, perfect. So this last question, we'll start with Fabian, then we'll make our way around. Fabian, Kyle, then Andrew. What's the biggest market surprise you saw in 2020, or what are your predictions for 2021? Fabian, let's start with you.
Yeah, no, I think like hands down, the biggest surprise was a lot of these states taking a look at cannabis and deeming it an essential business. When, COVID started to rear its ugly head, I think a lot of us in the industry were quite concerned at, how that would affect the business. To see a lot of states, including Michigan, deem it as an essential business, essential service, let's call it, when it came to, dispensaries and such, was a phenomenal win. I felt that was like the start of this just positive momentum in the space. I think the first 3 months of the year were quite difficult for cannabis companies. It was impossible to raise capital. It was impossible to raise capital via equity. And now you're starting to see, again, through that positive momentum that we got at the beginning of COVID and through the success and performance of some of the bigger names and just generally in the space, you're seeing more and more inflows into the industry. And obviously, a lot of the companies have been performing extremely well on the stock market. And we're also seeing equity financings, including our own at Gage. I think in 2021, Andrew touched upon a couple of things. I'm not sure we're going to see such a quick transition to some sort of federal legalization or Safe Banking Act, but I most definitely think it's on the near-term horizon. And that would be something to look for, frankly, for my aforementioned comments on how big the industry can get once the U.S. has a little bit more breathing room, let's call it, to really, I guess, achieve what it's supposed to achieve in this industry.
Kyle?
Yeah, that's certainly a great one. And I think, other things, if I look internationally, if I was a betting person at the beginning of 2020, I would have bet that Mexico would have legalized and Brazil wouldn't have. And the exact opposite happened. And so Brazil, I think, is growing very quickly. But it's also, I think, the more interesting thing about the way Brazil legalized is it's a reminder that not every market is going to look like the U.S. The Brazilian market bans domestic production, requires everything to be an extract. It has to be pharmaceutical GMP certified and prescribed by physicians. And you also have to have shelf life stability data, produced in, an environment that replicates the tropics of the Amazon. How many companies in the world can produce a product like that other than, a company like Cleverly? So I think, the barriers that will be in some of the new markets, it's going to look a lot more pharmaceutical. It's a little less Snoop Dogg and Martha Stewart, a little bit more Pfizer and Merck. And I think that's probably been one of the biggest surprises. I think that's going to carry into 2021.
Perfect. Andrew?
I think that there's going to be a lot more institutional capital, traditional institutional capital coming into the space this year. The first couple have dipped their toe in, and I think that there are a number of companies, there are a number of traditional institutional money management firms that have historically avoided these, that are kind of understanding that this is a huge market opportunity and don't want to be left on the sidelines. The second thing, prediction for 2021, I think that there's going to be an awful lot of M&A activity. I think that, people want to achieve scale. People want to achieve relevance. I think that 2021, there's just going to be a huge wave of consolidation.
Okay, perfect. Elliot, Luke, are we?
Yes, sir. That was a fabulous panel. Honestly, we could go all day with that. But Phil, Andrew, Kyle, Fabian, all of your insights are appreciated here. And hopefully we'll be continuing this conversation and catching up on what's new in February, late February at our next cannabis conference. But thank you all so much.
All right, guys. Thanks so much.
Take care,
Thanks,
guys.
everyone.
All right. Talk to you guys soon. Incredible panel. This was a very broad overview. I think a very broad brush of what you normally see at our cannabis events. It's incredible. I have a special guest for everybody. So excited. It is the one, the only Benzinga CEO, Jason Raznick. How are you, sir?
How's it going? Are we in track 2 or track 1 right now?
We're in track 2. I know it's hard to keep up, but we are hanging high in track 2. We have some wonderful engagement on the YouTube channel. Super pumped to see that.
Yeah, and I'm in the Brella channel. I have meetings from 2 o'clock on. I schedule about 7 so far, and they're cool. They're like 10-minute meetings, so it's not too long. They're quick, and you get to meet someone. And you got investors from Dubai. There's so many people in that thing. So it's like, you never know. It's a family office. Guy has $100 million under management. One of them. It's just a lot of great people, I would say.
Does the investor from Dubai have any extra room for me to move in? Because I know Dubai is super pretty. So
yes, and you could go skiing indoors. And now you've had Luke here. You've had Hot Stocks Luke. So Luke, I asked Luke what he's been doing. So he said he's been doing some stock picks. But we've had some great companies here. In the sense of I was just listening to Issuer Direct, ISDR. Then you just had the previous company,
Clever Leaves and Gage and Coro Global and Voyager. We've had a great morning.
Yeah, it's like I use the research. I listen to it, look at the research, and say, there's could be something here. And I look at trends. So more companies are going public these days. There was a phase where people weren't going public, and now when they are going public, so what services can you I bought, for example, I bought Slack stock a while ago, and it got bought by Salesforce. And I try to go where the trends are going. And so more companies to go public, what services would they set, people buy? Cannabis, more companies, going public, cannabis is what is going on. So more companies are going, in the cannabis space, legalization, New Jersey, it's gonna be New York and Pennsylvania. How do you not participate? I own TerraSen and and a couple of these other ones, so there's a lot of plays like that you get. Now in the chat, people who are here, we have a lot of Benzinga. We have these afternoon shows, and people keep asking about Tesla. All right, Tesla, guys. Tesla is out of control right now. So it's I don't bet. It's hard to bet against stuff like this. It just keeps going up and raising money. Just be ready for when it sells off. I mean, it does sell off. It did after after the battery day. It was dead for 3 weeks. People told me it was dead money. And so it's fun while it goes up. I get it. I own Tesla. So I don't have a price target. Is it 700, 800, 1,000? Could be. It's anyone's real guess at this point in the game. Okay, I just wanted to address the Tesla because people keep talking about it. I know.
A lot of EV stocks are like that though, and a lot of cannabis stocks. There are so many good cannabis companies for people to look at, and I think that's really why we cover it so heavily. The 3 you just saw, incredible companies. Gage will be available to trade, I think, in the near future. The other 2 are available. Red, White, and Bloom, who was originally slated to present right now. Unfortunately, I believe there's some technical difficulties at the moment, so hopefully we'll get them back later or tomorrow. Maybe stay tuned for that. Incredible company. They keep talking about cookies. Keep an eye on cookies. Anything they do is worth the news.
There
are others though. Cookies is getting a lot of press. There's a lot of great companies, and there's a lot like I own Voyager. So I've owned Voyager. It's a crypto play, but Steve Ehrlich's CEO, he was the CEO of Lightspeed. I've owned it for a while because, yes, taking off crypto, but also Elliot, he built up Lightspeed and he has a lot of brokerage experience. So it's not a guy fly by the night. So that's why I like it. Doesn't mean you should go out and buy it. I'm just saying I own it. So I'm, letting people know where my preferences are. And then if you want a stock that's off the beaten path, but you want more stock picks, another one I bought recently is company ESTC. It's called Elastic. It's what a lot of enterprises and big websites use for search. It's a SaaS offering, but write it down. ESTC. It's one of the ones that I recently bought. I should have bought 6 months or 3 months ago, but I didn't realize it was public or I forgot. I don't know what it was, but that's another one, ESTC. But if you guys go to the Benzinga agenda page, which is in the YouTube channel, you can see all the companies that are presenting. Pull them up in your brokerage. Pull them up, look at them, research them. Stuff I look at, Elliot, when I'm investing. So I know you were telling the guy earlier from the Lizard that you're new investing this year, and so there's a few things that I look for when I'm investing. One of them is the fundamental story. So what's going to happen? What's the sector? What's the change? So when I bought Tesla a while ago, there's a guy, Spencer Israel, to me, he was here and he said, Jason, why would I say something on our morning show if I don't believe it? The comment I made 3 years ago that within a year or a year and a half, you'll see a Tesla in every parking lot. And he after this, he's like, Jason, you shouldn't say those big statements because you're trying to be like Jim Cramer. I'm like, no, I actually believe that. And that's what the Model was. I said it when the Model 3 was just coming out. And it's, if you look at a parking lot, there's a good chance you're seeing a Tesla these days. Okay. Yeah. So that was one thing. So that was the fundamental story. But the next part that I look at is I look to see, is there insider buying? So insiders sell stock for a variety of reasons. Well, you never know, family planning, it could be divorces, it could be death, whatever it is. They sell for a variety of reasons. But when an insider buys a stock, that means they have confidence in their company, right? It doesn't mean if they sell the stock, doesn't mean it's not the same corollary that it means they don't have confidence. Like I said, there's family planning. A lot of the insiders, the way they make money is through the stock. So to pay bills, whatever, they need to sell the stock. Or if the stock has a dividend, it's another way to earn money. But if they're buying the stock, it shows extreme confidence in the company. Now, and Elon Musk locked himself up in the Tesla stock that the only way he made a lot of money is the stock went up. So I like that. Then the other thing I look at is the debt, compared to what the market cap and cash flow. If there's cash flow, if a company has a lot of debt and it's not cash flowing, is it going to be easy to raise money? So, and then sales trends. So one of the reasons why you're seeing some of these cannabis companies that are presenting today, but they can't tell us forward-looking things. They can't say next quarter we're going to beat by 14 cents. They can't say that. But if you're watching, cannabis is becoming legal in a lot more places, and people are starting to treat it like drinking vodka. And so it reminds me of prohibition way back when. I know, but that's what's happening.
People yeah, you're right.
I finally just heard the how it's if you're using cannabis, it's hidden behind the scenes. But literally, I just heard a mom say, my daughter got corona because she was passing the thing, whatever. And I'm like, oh, so do you do that with your daughter? She's like, no, but it was she said it to me, and without any, so it's it's becoming one of these things. So that's why you got to pay attention to the trends, pay attention to the fundamentals, and then look to see insider buying or other trends in the market. And companies like ESTC that I like, or Asana or Upwork, and these all have been 50% to 80% gainers for us, is because the trend is technology firms there's gonna be more stuff to search. Elastic specializes in searching and database maintenance, and there's a company called Snowflake that everyone's buying. ESTC is another derivative play off that trend. So that's kind of how I go about it. And if you're first time here at Benzinga, I know a lot of people the first time at Benzinga, the Benzinga Small Cap Conference sponsored by Markham. We are an information provider. We believe in equipping you with better information to help you make decisions. So if you ever have any questions, email us at events@benzinga.com. Get in the umbrella, network, meet people. Don't be afraid. They're 10-minute meetings. They go quick, and you never know what relationship you can make. Just never know.
Yeah. Jason, incredible information. You and Luke, having you all as resources in this event, is, in my opinion, a new retail investor's dream.
You like my outfit? I got.
I do.
Like I don't got.
I almost look as good as you. I don't quite.
No,
you got Rocky behind you. You know that's the differentiating factor here, as far as I'm concerned.
Eye of the tiger. You got to work hard to figure out how to make this stuff happen. We're not 9-to-5ers at Benzinga. We're just not, or else we'll be out of the business. And so
no such thing.
Rocky, every morning, Elliot and I drink raw eggs. So at 5 in the morning, Elliot calls me. I call him. We FaceTime.
Yeah,
exactly. And he puts the raw egg in his glass. Elliot, you probably don't even know what that raw egg is in the glass. Did you ever see Rocky back in the day, Elliot?
Absolutely, I did. I'm not that young.
Okay, so you got to drink the raw egg, get the energy. So Elliot, what do we have coming up next? What's the next thing? I want to know.
I'm really excited.
Because is red, white being changed, or
Red, White, and Bloom is no longer presenting right now. We will work to get them a new slot. Also, keep everybody updated again on Delta 9. Also, some technical difficulties this morning. They'll most likely join us either later today or tomorrow. More to come on Red, White, and Bloom. However, bringing the focus into now, let us move to William M. Crossland. He is the CEO and president of Thermal Energy International, a company I am personally very excited is with us, doing some really cool things that I think would be very interesting to a new investor like myself. But Bill, how are you, sir? Oh, you might be on mute.
Or he doesn't talk to you, Elliot.
There we go. Thank you very much, Elliot. My team knows that's my shtick. Every single time I leave myself on mute. So, you can't teach an old dog new tricks. But thank you so much.
Of course.
Get started now. I'll share my.
Yeah, please. Jump right in. We're happy to have you.
Okay. Okay. So, do you see my screen now? Let me put it in presentation view. Okay, you got it?
It's not in presentation view yet, but we do see your screen.
There we go.
Yep, there you go.
Okay. Well, thank you very much, Elliot. And I want to thank Benzinga for hosting us in this phenomenal global small cap conference. And I wanted to thank any of the listeners and viewers out there for taking some time to hear about the thermal energy story. We're excited to be sharing it. Before I get started, our lawyers reminded me I have to make you aware of the caution regarding forward-looking statements. So with that behind me, I now wanted to turn it over and talk a little bit about the energy efficiency market, because believe it or not, a lot of people don't understand it and realize the enormous potential of energy efficiency. So first of all, I would say that energy efficiency is the fastest, cheapest, easiest, and most significant way to reduce carbon emission. More often than not, when we hear people talking about climate change or reducing carbon emissions or becoming more sustainable, more often than not, they're talking about renewables. But energy efficiency can have a much greater potential impact than renewables. As you can see on this chart here, this multicolored chart, beautiful chart that I have up, that's done by the Lawrence Livermore Laboratory in the US, and it tracks energy use in the US economy, which wouldn't be too dissimilar from most industrialized economies. And on the left-hand side, all the different colors are the sources of energy. And then it maps that energy throughout the economy to be used for electricity generation, residential, commercial, industrial, transportation. And it shows what the sources of energy are for each of those different sectors and how much is lost. So over on the right-hand side, the gray area that's called rejected energy, that's energy that's lost due to inefficiencies somewhere in the system. And so you can see in the US economy, that represents almost 70% of the energy that's used is lost due to inefficiencies. And this fact resulted in the International Energy Agency calling energy efficiency the world's first fuel. That was their word. They called it the world's first fuel. And there's two things that they want you to focus on when they say that. Number one, the opportunity represented by energy efficiency is greater than any other single fuel source combined. I mean, if energy efficiency is only 50%, then it's greater than every other source of energy. And the second thing they want you to know is that as an energy user, if you're looking for more energy, the first place you should go is energy efficiency. And so energy efficiency, it reduces emissions, it saves those people that are implementing energy efficiency, our customers, it saves them money, makes them more profitable, increases their competitive advantage. And there isn't a government in the world that doesn't want to make their industry, their domestic industry, more competitively advantaged. And the area that we in particular are focused on is the industrial side, because that we do, I'll tell you a little bit more about what we do, but those are large projects. Those are large mega energy users. So anybody, if there's a site that's using more than $1 million on their fuel bill, that's a target for us. So that's our target, industrial. That industrial energy efficiency market globally represents about a $250 billion product just for thermal energy products alone. So to tell you a little bit more about Thermal Energy International, as I mentioned before, we engineer, design, and deliver innovative turnkey thermal energy efficiency projects. And again, I emphasize the thermal because often when people think of energy efficiency, they think, you're changing a light bulb. That's electricity. So there's two energy forms in any sort of facility. There's electrical and usually thermal, where you're burning something, usually natural gas. We're focused on that fuel. So our products and our projects improve our customers' profitability and sustainability by reducing their fuel use, usually natural gas, and cutting their carbon emissions. To tell you a little bit about the company, we've got a suite of proprietary products, a number of proprietary products with an average payback of 2 to 5 years. And all of our products are basically designed to last essentially almost forever. They will last as long as the facility is still operating. So when you're installing a project with a 2 to 5 year payback that will last forever, it represents a phenomenal return on investment for our customers implementing these projects. We've done hundreds of projects worldwide around the globe. We have an extensive list of leading multinational customers across a wide range of industry sectors. These are names like Danone, PepsiCo, Cargill, InBev, Roche Pharmaceutical, GlaxoSmithKline, Eastman Chemical. These are the who's who that are our customers. And we've just scratched the surface with any of these customers. They have hundreds of sites around the world. We've established corporate and engineering offices in Canada, the United States, and the UK to target our key markets. The key markets we're going after. Clearly, our product. I like to say our product is best in class with worldwide application, which is true. But right now, we're focused on North America and Europe. We have, salespeople, feet on the ground in 7 countries throughout North America and Europe. We don't go through in our key markets. We don't go through agents or distributors for the most part. We deal direct with the customer, sell direct to the customer. And we have 10 years of successful operations and solid revenue and profitability growth. The next couple slides just give you a highlight. They summarize some of the larger projects that we have presented or we have announced over the last sort of 12 to 18 months. And there's 3 things on these next 2 slides that I want to highlight. Number 1, it's the diversity of sector. So you can see on this first slide, it's food products, canning, hospital group, tissue manufacturer, dairy, and brewing. The payback, anywhere from 1.6 years to 4 years, and the location, Europe and North America, with a slightly increasing, heavier weighting towards Europe. Europe, we have a strong base of operations in North America, but our focus on growing the business right now is Europe, and that's quite frankly because energy prices in Europe are sort of 3 to 4 times what they are in North America, so the paybacks generally are a little bit better. The next slide shows the same thing: snack food manufacturer, tire manufacturing, animal nutrition, chemical producers, food ingredients. And again, with strong paybacks of less than 4 years and a diversity of sector and a diversity of geography. So I talked a little bit of our growth story. We have been very successful in growing the revenue and profitability of the company over the last 5 years. And so we've been implementing a strategy for the last several years that really has 3 key parts to it. First of all, we have a who's who list of our customers. I sometimes joke with our sales team, we don't need any new customers. We just need to sell more to our existing customers. So part of our strategy is to leverage off those existing high quality customers that we already have, sell them more products, sell more sites of that customer. Then we still want to increase our product portfolio so we can add complementary products that we can sell to that proprietary customer base that we have established direct relationships with. And we want to grow our team and our global presence. So we started out basically just sort of Northeastern North America years ago and the UK. And since then, we've expanded throughout North America. We have salespeople all across North America, direct salespeople, our own employees, and we're growing in Europe. So now we have the UK, Poland, Italy, and Germany. And so those 3 things, leveraging our customer base, increasing our product portfolio, and growing the team and global presence and our global distribution capabilities, we want to do that both organically and through accretive acquisitions. We want to do it that way. We have been doing it that way. And that's what has resulted in the phenomenal results that we've got over the last 5 years. So let's look at those results. You can see in this slide going from 2015 right up to the last 12 months, ending in our third quarter of February 2020. And there's a reason I ended there, because I wanted to illustrate something. But you see for that period, our 5-year compound annual growth rate on revenue was about 30%. And on profitability, both EBITDA and net income, 50 to 60%. Now, the reason I stopped there is the reason you can probably guess. In March of 2020, there was a global pandemic declared. And what did that result in? Well, that resulted in basically society not really knowing how to deal with a global pandemic, not knowing what was causing COVID and how to control it. And so essentially everybody just shut down. The whole economy shut down, and the economic numbers show it. GDP shrank by 50% in that quarter till we figured things out. And so we are a best-in-class company that prides ourselves in providing best-in-class product and service. That requires visiting customer sites. That requires installing projects on customer sites. That requires a lot of travel. So there was no doubt, COVID was going to have a temporary impact on our business when we can't get to our customer sites. But what I wanted to highlight here is that with that track record of results, if you look at what the valuation is based on where we were back in February, just prior to COVID, because COVID is sort of a, God forbid, a once in a century type event. What was the valuation metric? So if you take the last 12 months, the third quarter ending in February, and the current share price of around 9 cents, which is what it closed at on Friday, that's a revenue multiple of only 0.5. That's an EBITDA multiple of less than 5 times, and it's an earnings multiple of less than 9 times. But then, as I mentioned, the COVID-19 global pandemic was declared in March, which was just after our third quarter. So for the fourth quarter, our sales did slip, and because we were shut out of customer sites. And for part of the first quarter, it slipped as well. And so you can see there, but even with the impact of COVID for the last 6 months, our growth rate is still pretty impressive. More than 20% revenue growth over 5 years compounded annually, and still 30% profitability growth. But the encouraging thing is what we've been seeing since June. So for sure, March, April, and May, it was dead. There was nothing going on. I mean, we were still shipping product, but we couldn't get to site, and the economy was dead. But since June, we've seen, a strong rebound in activity. So our customers have figured out, and as society has figured out how to deal with COVID and how to continue to operate with COVID. And so since June, we've seen a strong rebound in orders. And so orders for the first 6 months of this fiscal year, which is June 1st to November 30th, were up 67% compared to last year. So, our customers understand now they have to have mitigation measures in place, social distancing, mask, hand washing. They have all the provisions. We understand that. So as a society and an economy, we're understanding how to deal with this situation. And we're seeing a strong rebound in activity, partly because of pent-up demand, but partly because of the Build Back Better, green recovery that you keep hearing about. There literally isn't, with the recent US election, there now is not a government, major industrialized government in the world that isn't talking about a green recovery or a Build Back Better, and energy efficiency plays directly into that. So just as a summary, I may probably need a little bit of extra time, but just as a summary, we operate in a large, fast-growing global market with very strong fundamentals. And I would say the fundamentals are stronger now than they were back in January and February of last year, when we had the phenomenal growth in profitability and revenue. We've got a growing portfolio of proprietary products, proven proprietary products, so we know they work. We're not testing things. These are all products that have been proven and installed on site for years. We've got an extensive list of leading multinational companies in a variety of geographies and a variety of sectors. We've got an established competitive presence in our key markets, again, North America and Europe. That's where we're focusing. So we believe we're poised to continue our solid track record of growth, and that's evidenced by the fact that our year-to-date order intake, so the orders we've been receiving from our customers, is up about 67% compared to the prior year. And so in terms of metrics, our recent price was 9 cents. That's where it closed on Friday. We trade on the TSXV, the Toronto Venture Exchange. 52-week range is sort of 5 cents to 15 cents. Market cap, $14 million. Enterprise value, 13. Enterprise is less than market cap because we have a strong cash balance. We do have some long-term debt that we use to finance some very attractive long-term debt that we used to finance an acquisition about 2 years ago. But we have a net cash position. We got about almost around $4 million in cash on the balance sheet. So with strong working capital. So we're in a very strong position. And, even with those sort of numbers, the pre-COVID valuation multiples are compelling, but even the post-COVID valuation multiples are compelling. And I think, Elliot, that's
beautiful.
That's
awesome.
That's it. How long was that?
That was like legitimately right on time. We started a minute or two early, so I think you have a perfectly 15-minute presentation. Well done, Bill.
Well, thank you.
I'm gonna send you a bottle of bourbon for being so on point. Bill, we appreciate you being here, my friend. Really incredible company. Perhaps we'll see you on a U.S.-based exchange in the near future. But I think either way, we have.
I was going to say, Elliot, that is something, after having some discussions with you, that is something we are actively looking at right now. So,
well, and we will be there to cover that and make sure our investors know. I will say, I think we have a lot of savvy investors that are able to look to Canadian exchanges. So, I definitely take a look at this company. Incredible things going on. Cash on hand, which is not always the case. So, Bill, pleasure to have you, my friend, and looking forward to continuing the journey with you moving forward.
Thank you so much. And we'd be more than happy to entertain, some more information. If any of your investors are interested, contact us, set us up on Umbrella, reach out Umbrella, reach out by our website. We'd be happy to provide more information and answer any questions.
Perfect. Awesome, Bill. Thanks so much.
Thanks,
and stay healthy, my friend.
Okay.
Talk
too.
to you soon.
Thanks so much.
Fantastic. All right. That was a great presentation. We are right on time here in track 2. I love being punctual. Let's keep it rolling. Next up, we have the CEO and director, John Walsh of Popreach Corporation. Not going to lie, love this company. Really, really, really cool. I just love what you all do, and I'm excited to hear more about it. John, how are you, my friend?
Thank you, Elliot. I'm doing very good, and I'm pretty excited about clearly the offer of a bottle of bourbon if you finish on time. I can't think of any better motivation. I hope it applies to me too.
Hey, I'm from Kentucky. Open invitation, 15 minutes. I'll let you go to it though.
All right, that's great. Thank you. So shall I kick off here, guys?
Yes, please do. Feel free to share your screen.
Okay, just going to share now. Can you just making sure that works okay?
Yep, looks perfect.
Okay, perfect. So let me just get back to where I am here. So thank you, everybody. As Elliot indicated, I'm the CEO of Popreach. I'll just kick off here. I won't read you this. Leave you to read that on your own time because I got to get this bottle of bourbon. So, but just to give you a bit of background into Popreach. So I've been in the video game business my whole career, basically. I'm not on the tech or programming side. I went to business school, and I've always been more on the publishing business side of the industry. And have built a few video game companies in the past. Most recently, I built a mobile game publisher and analytics company that I was able to successfully scale and sell to another venture-backed company in San Francisco called Upsite. That company was called Fuse Powered. My partner, Chris, actually is a game maker, and he's had a ton of success in the game industry, particularly in the free-to-play game industry in the last 10 years. Chris built up the mobile game division of a company called Capcom, a large publicly traded Japanese company, and put out one of the first big successful free-to-play games in the mobile game store called Smurfs Village. That game cost less than $1 million to make and went on to gross hundreds of millions of dollars. Chris left there, started his own game studio called Blammo that was quickly sold to another publicly traded game company called Glue. Before they'd even put out their first game was a game called Stardom the A-List, which was quite successful and ramping up nicely and had good core metrics. I'll talk a little bit about the advantages of our industry, having a lot of data and metrics to rely on to ensure financial success. And that game, Glue decided to go and form a partnership with Kim Kardashian, and that game became Kim Kardashian Hollywood, which also went on to gross hundreds of millions of dollars. And then Chris did his earnout at Glue and started up Popreach. And at the same time, I built an analytics platform, and I ended up working with hundreds and hundreds of games, many game studios, including Activision, Electronic Arts, Zynga. Our technology at Upsite was deeply embedded in the Pokemon Go game during its launch with a partner of ours called Niantic. And so I got to work more on the data and analytics side, building a platform that helped publishers basically make their games very successful. Chris, my partner, on the other hand, was building a lot of successful games. So a few years ago, Chris was incubating his studio Popreach, and I gave him some space in the dingy corner of my office here in Toronto. And I had a customer of mine who had a game that had that was highly successful, that had really kind of fallen off. And the key to success in the free-to-play game industry, particularly on mobile, is that these games are living, breathing assets, and you have to constantly kind of invest in them and keep them invigorated. And this company just hadn't done that. And I'd been trying to convince them to do that for a number of years, literally, as the game just kind of went down slowly month over month, went from making millions of dollars a year down to hundreds of dollars a day. And finally, this partner came to me and said, okay, look, you've been trying to get me to update this game. We're ready to update it, but we don't have anyone to build the game because the code base is lost and all this kind of complicated stuff. So I went over to Chris and asked him to do me the favor. I said, look, this game has a lot of potential, but it's really been underinvested in. What do you think about rebuilding it for me and this customer? And he said, yeah, that's not really my thing. I make these huge hit games. He's a bit of a diva. But he did it as a favor to me, rebuilt the game in 4 months, brought it back to market, and the game made 10 times more money. And then he came over to my office and said, hey, because we all got a revenue share. And he said, this is, we just kind of followed the stuff we know how to do. We brought this game back to life and it's now making a ton more money. Do you have any other games like this? And I said, Chris, I work with thousands of games. I see games like this all the time. But why don't we put our heads together and instead of doing these types of deals, go out and buy up these games? And we recognized that together we had a pretty unique partnership where I was more on the data and analytics side and had built quite an extensive network in the games industry of potential partners and potential assets to acquire. And he had built highly successful games. He built very successful game studios. So we joined forces and we went out to start to look at these opportunities to buy these essentially undervalued assets. And that's really the focus of Popreach today, is we buy these proven hit games that have been underinvested in for one of a number of reasons I'll expand on in a few minutes. We bring them in-house into our own operational infrastructure and we kind of revitalize them. And we've put together all of the requisite skills to do that. We've put together quite an accomplished team to be able to execute on our plan. And we're executing on it quite effectively so far. So just to touch on briefly the games industry, I'm sure I'm sure all of you are aware, there's been a lot of talk about video games in this kind of pandemic environment, how people seem to be playing them more. The games industry, though, was already quite a healthy industry, growing quite a bit. And most specifically, the mobile free-to-play games industry has really only been in existence for 10 years. But in that time, it has grown quite rapidly, especially more recently. And now the industry is projected to pass $160 billion this year. The mobile game sector of the industry is projected to be more than half the game industry in the next 12 months. So we have a unique strategy in the highest growth segment of the game industry, which is already quite high growth in and of itself. A little bit of a summary of where we are today as a company. Popreach has just over 120 employees. We have studios and executive offices here in Canada, one in Toronto, one in Vancouver. We also have what's called a live operations studio in Bangalore, India. As I mentioned, I joined Chris in late 2017, early 2018, and we went out and started buying up games. By the end of 2018, we bought more than 25 games. In early 2019, we bought a live operations studio, the studio we own today in Bangalore, India. And that studio is a full service game company, animators, programmers, artists, producers, customer support, quality assurance, full management infrastructure. And today that team operates all of our games on a live basis. So all the updates and technology improvements and things, content features to enable our games to continue to thrive in the marketplace. And then in the kind of third quarter of 2019, we actually went and bought Smurfs Village and a small portfolio of Smurfs related games, including that big hit game Smurfs Village that we now own in our portfolio. And then we started going down a path to become a publicly listed company because being based in Toronto, Canada, we knew that we would have good access to capital being a publicly traded company. And in this consolidation type strategy, that access to capital would be key for us. I think it's worth noting that most of our audience is in North America. About 77% of our revenue comes from North America today. About 13% of it comes from Europe and 10% from the rest of the world. And even more importantly, we are a cash positive company. We are buying these cash flowing assets at what we believe to be attractive multiples, and we bring them in-house and optimize them in a three-step process I'll explain in a few minutes. Just to give you a little bit of color on where we are. Last 12 months revenue, we did about $18.7 million US dollars. We generated last 12 months about $4.6 million in adjusted EBITDA. And our EBITDA growth has been quite substantial since we've taken on these assets and optimized them. And I think most importantly, in the last month and a half or so, we were able to secure a strategic investment from Alibaba's game group, a company called JoyMe, which is the subco is EWTP, the innovation fund there. And that's a relationship we established quite a while ago, almost 2 years ago now. Got to know them. They're specifically focused on investing in the games industry, but they like to take a long time getting to know their portfolio companies, and rightly so. And so we're pretty happy to have secured a strategic investment from a company of that scale that has that kind of knowledge of the sector that we're participating in. The two principals that we deal with there, C.Y. Chen and Jack Sorensen, are quite established video game industry veterans themselves, and they have they really love the business model. They love the strategy. It's a pretty unique way to play in the video game sector without being this kind of hit focused or hit driven company, which can be highly unpredictable and highly volatile, as I'm sure everyone knows. So in terms of our playbook, 3 steps really. We do something very different. There's a lot of consolidation happening in the game industry, a lot of M&A activity, companies being bought by larger companies. There are a handful of consolidators in the industry that buy entire game studios. Our playbook is a little bit different because we're confident in our own infrastructure and operational capabilities. We actually typically buy just the game asset itself, and we bring it into our own operational structure. And that gives us a lot of control over what happens with these games and gives us the ability to directly optimize them. So we have a 3-step process. 1, we stabilize the revenue with some kind of low-hanging fruit improvements. We reduce the cost structure by bringing them in-house to our lower cost team in Bangalore, highly qualified, but very cost effective. And then we start to tune the dials on setting the stage for growth. And you can see the results there. If you looked at the trend line for EBITDA, it's obviously trending up quite high. We've got one case study. I won't spend a lot of time on this because I know I've only got a few minutes to get my bottle of bourbon here. But this is one of our larger games. I just wanted to show the pattern we've been able to execute on, which is bring the game in-house. These games are typically declining on a fairly predictable rate. We're at the long tail stage of the life cycle of these assets. We bring them in, we lower the cost structure while we work on bending the curve of revenue. You'll see in the graph on the right-hand side there that this game was on a pretty precipitous rate of decline. In the light gray, when we owned it, before we owned it, it was dropping at 10% quarter over quarter. We got a hold of it. We got effectively operational control around Q3. Took us a little longer because of some legal complexities, which I won't go into on the deal. All worked out fine. We were able to bend that curve, and now we've got a new revenue base to draw from. And we've more than doubled the operational cash flow from that game. And that's the playbook we're following for our portfolio of assets. In terms of where our revenue comes from, it's 95% what's called in-app purchases today, which means players in our games buying virtual goods for real money. We're pretty over-skewed and underrepresented in advertising because the assets we're buying are typically 5 years old or older, and advertising wasn't really an exceptionally viable form of revenue back then. It is now, so there's a big opportunity for us to grow there. In terms of how our revenue is broken down, it's pretty diversified, which we're happy with. In terms of how we identify these games, I won't spend too much time except to say that these hit games all have a very similar profile in terms of, they get this high revenue, they fall off quickly, and then they get into this long tail stage of their life cycle. We like that stage. Revenue is very predictable. We use a ton of data to model the trajectory of the game, and we make sure when we buy these assets that we have a high degree of confidence as to their trajectory and our capabilities to influence that trajectory. Our mandate when we buy these assets is we want to be able to buy them at 2 to 3 times their operating cash flow. We typically look to get these games paid back from their operational cash flows in less than 3 years. And we're buying assets that we believe have a lifespan of at least 5 years. As I said, there's not a lot of companies doing this directly. There are larger scale competitors doing M&A activity, but they're not buying specific assets. And there are a number of games that fit our criteria in the marketplace today. We've built an infrastructure to be able to go out and identify and secure these M&A opportunities and acquire these assets. We're looking at a range of assets around the globe right now, and we have an entire network of friends, relationships, these small boutique M&A agencies that we rely on to bring us deal flow. In terms of the management team, I talked about Chris and I and our background, but we've been able to assemble a unique world-class team that has a ton of experience in back-end server infrastructures for optimizing them, free-to-play game economics and franchise optimization and things like that. So we're pretty proud of the team we've been able to pull together. On the board side, again, fortunate to have a board that has extensive capital markets experience, and they've helped us navigate our capital markets launch, and we've had a lot of success to date thanks to the credibility and wisdom of those guys. In terms of where we are here, we got listed in July. We refinanced our debt with a long-term debt facility with a tier 1 Canadian bank. We paid that debt down to about 6.1 million. It was 10 million US when we started. We began trading on the OTC in October. In middle of October, we announced the investment from Alibaba, and I'm happy to say about a week ago, we closed a bought deal financing of about 17.5 million Canadian in cash. So we've raised over 22 million in cash. We're operationally cash positive, so that those funds are all earmarked for acquisitions for us. And that's really where we are as a business. I would say that in summary, we're cash flow positive. We've got a strong growth trajectory through M&A. There's huge opportunity to consolidate these undervalued assets. We have a purpose-built team to take advantage of these unique and kind of once in a lifetime market conditions where we have these assets that are underinvested in, we can buy at attractive prices and extract a lot of cash flow out of. It's low risk. We're buying assets that are cash flowing, and we're buying them at good multiples. And like I said, it's the right time in the business. And we're now cashed up and have a lot of opportunity for growth. So that's it.
Perfect,
Did I make
John.
it, Elliot?
You made it. Woodford, Elijah Craig, Makers. What are we feeling, my friend? You got to let me know.
I'm thinking more Blanton's because it's hard to get here in Toronto. But I won't be too difficult.
That's, you know what? That's worth it. I'm a big
right.
Blanton's fan myself. And Basil Hayden is my favorite, though. I got to tell you.
Yeah, that's hard to get here. So I'll take that too. I'm not picky.
Hey, next time we're in Toronto, I'm not only going to send you one, I'm going to bring you one.
All right.
But John, it's a pleasure. I want to know your high scores for all of your games as well.
They're not that good, man. My sons are better.
Well, you know, they got to be better than the old man at something, right?
For sure.
All right, John, appreciate you, my friend. Stay healthy, and we'll talk to you soon.
Thanks very much. Take care, guys. Bye-bye.
All right, really cool company. Definitely reach out to them with any questions. I am definitely going to put them on my watch list. Let's keep moving, though. John, awesome presentation again. TSX, POPR, OTCQX, POPRF. Next up, we have Anne-Marie Strassi. I hope I said that right. She is the CEO, founder, and PhD of Amesite, listed on the NASDAQ for AMST. Let's see. Anne-Marie, are you with us?
I am. Can you see me?
Yes, there you are. Anne-Marie, did I say your last name right? Strassi?
Close. Sastry. Nice to meet you.
Oh, it's... I'm gonna be quiet now. Anne-Marie, thank you for coming and presenting. Happy to have you. I'll let you take it away.
Thank you so much. I'm going to share screen in a moment, team. One moment. Pleasure to be here, and thanks for the introduction.
Yeah, of course.
And hopefully you can see my screen in a moment.
Yep, coming on right there.
Terrific. Okay, thanks. And thanks for joining everybody who's joining. I'm CEO of a company called Amesite, AMST on the NASDAQ. Amesite is a artificial intelligence software company aiming at learning markets globally and starting in the United States. There's our normal disclosure. Our company mission is to improve the way the world learns. Nowhere was this need more highlighted than during the recent pandemic we had, but the fundamentals of learning, that now upskilling is a fact of life for everyone in professional life, and certainly to stay competitive economically, constant upskilling is required for adaptation to new workforce needs. COVID accelerated a lot of trends that were already happening. Not only is online essential for professionals, online is the most efficient way to upskill people, and many studies show that online is at least as effective as on ground. But COVID exposed something else, and that is a weakness in the system. Amesite is a 3-year-old company. We made our debut on the NASDAQ on September 25th, and now we're a publicly traded company again. Our mission is to make learning more affordable, more accessible, and engaging, but using a better user experience in software. And for some time, we've believed, well before COVID, that online learning was going to be important. Now, with the durable trend toward remote work, it's become very clear that not only will this be a fact, but it'll be essential. My own background is I'm an engineer by training. All my degrees are in mechanical engineering and applied mechanics. I'm undergrad Delaware, grad Cornell, where I did my PhD. Then I went off and programmed in the Big Cray at Sandia National Labs. Then became a professor at University of Michigan, where I was recruited, and I was on faculty for 17 years as a professor of biomedical materials science and engineering. Started 2 large research centers, a large global graduate program, and also started a company. I left the university to run my business full-time, and I sold that company to Dyson for $90 million about 4 years ago. Then went to work at Dyson for a couple, 3 years and built up teams in different parts of the planet, and then decided to do something with my life and start a company in education, and decided to attack this marketplace in a very specific way to improve the user experience in online. Education is almost universally regarded as the worst experience on the internet. We just had a talk on gaming, which is one of the best experiences. Other great experiences, shopping, banking, music, Netflix, PayPal, Spotify are all wonderful experiences, but education has somehow been left in the dust. So we formed Amesite. What you see before you is a picture of our illustrious board of directors. In order to address that need, not to compete with the industry, but support the industry with better technology. Amesite brands to our customers and launches services for any kind of entity involved in learning. There's a picture of me with President Obama from my last company. I was on at the White House for that. You can see some of the board members, including former CFO of General Motors and one of the best patent attorneys in the country, Richard Ogawa, Barbie Brewer, who ran talent at Netflix, Gil Oman, who is a scholar and an executive, first and former CEO of the entire University of Michigan health system, and George Parmer and Anthony Barquette, who are respectively real estate developer and real estate executives, and very successful in that as well. So the business model for the company, our aim is to be the easiest company in the industry to work with flexibility and scalability, offering high margin and ARR. We charge fees that are paid by the slice. So whether you're a university, a K-12 school, or a business, we can stand up services in 24 hours flat, branded to you. The addressable markets are enormous for this. The way to scale is to use better tech. Powered by Amesite means powered by artificial intelligence, which makes learning solutions very, very easy to experience and very tractable and very scalable. We help businesses launch customized programs, and this is a sort of a one-pager on what we can do for businesses. One of our most recognizable customers, Ford Motor Company, we recently completed a pilot with them where we taught artificial intelligence to their global management team in R&A. It was very successful and very highly ranked. As a chief learning partner, Amesite can launch bespoke or existing courses for any business and launch services again in 24 hours flat. We can create content, as we did in the case of Ford Motor Company, or include materials that they already have. For universities and K-12 schools, we also solve a big problem. Particularly in universities, there are about 3,300 colleges and universities in the United States. The alumni to matriculated student ratios are about 10 to 1, except for very new universities, and aren't there many of those. So the market opportunity for universities, which are struggling with trying to improve their revenue, is really with their alumni. Amesite has done this multiple times, including with Wayne State, where we set up a university with a turnkey system. They don't even need to hire an IT person. Their new products launch on the system. Their alumni come to the system, consume courses, pay fees, generate revenue, and it creates a virtuous cycle of universities continuing to re-engage with their alumni by giving them critical upskilling. Topics that we focus on are topics that people need. Everything from artificial intelligence to blockchain to data science to logistics to cybersecurity, topics for which there aren't always degree programs, and degree programs aren't always needed, but are vital for professionals to keep up with. For K-12 schools, we didn't expect to be in K-12 this early. We founded the company about 3 years ago, rolled out 3 generations of the technology in 2.5 years flat, have raised a total of $28 million. And we expected to be in K-12 in some years, but we were invited to join, which was great. And so for K-12 schools, again, we can set up services in 24 hours. Looking ahead to a post-COVID world, now that the lack of a digital backbone has been exposed, we think that the need will grow faster than ever. And the expectation of technology by schools, colleges, universities, and businesses will be much, much higher. Note that during COVID, businesses stayed open because they could go remote. The one weak spot was L&D, and that is probably the most vital to the sector. The competitive advantages of Amesite are listed here. Again, we can launch in 24 hours. We have low operating costs. We sell directly to our customers, and the costs stay low with a pay by the slice model. Because we use artificial intelligence to customize, our bots read hundreds of thousands of articles a week and launch the most relevant to the courses while they're being taken in real time. So products on the Amesite platform are different every time they're being taught, which is really important. It's that kind of AI and that kind of engagement that drives interest in sites like Netflix and PayPal. So the technology has to be excellent in order for people to stay in the experience. Amesite boasts 98% retention rate across our products. The values, analytics, engagements, ease of use, and we've generated enviable results in all 3 of our sectors, even as a young company. We're proud of that. The technology progress, as I mentioned, in 3 years, we've delivered 3 generations and we've raised about 28 million to date. We have plenty of cash on hand following our successful IPO on the NASDAQ, where we raised 15 million gross. A competitive analysis of the platform is on this slide, slide 11. You can see that there are a lot of things that other so-called LMSs do. We do all of those things. There are a lot of things they don't do that really are required for getting those really, really good outcomes in learning, engagement, delivering fresh content, ability to seamlessly use the technology. We've built these new patent pending functionalities that improve the user experience and have been rewarded with 4 out of 5 stars every time we teach. Amesite is a technology-driven platform. We're a cloud-based single-threaded web app, and we have similar features, in some cases more features than Netflix. We integrate with existing tools and systems, which is very important in the space because people want to be able to use their existing tools. Sales for us do not require that people throw off solutions that they're used to, quite the reverse. We are a high value add-on to every institution is interested in learning. An example being the universities we work with. In some cases, we've become the sole partner for learning, as with EBS, a company that does consulting work in soft skills for business globally. They've gone completely online, and Amesite is their strategic partner. And the Henry Ford Museum has taken all of their digital learning programs and placed them on our platform. We've launched a customized version for them, and of course, they're very happy with the system, and that's all publicly announced. Our growth strategy in target markets, this is one example. In K-12 schools, we closed our first deal with a district called Peru Central. We are launching products on that site, but the important thing is that that sale was executed through what's called the BOCES, the Boards of Cooperative Educational Services. Because of that, Peru received a generous subsidy from the state of New York, and that subsidy is available to the over 680 school districts in the state of New York should they purchase through that same BOCES. So we always look for opportunities to be able to sell tens of things rather than ones of things. Looking ahead, the objective for us is to scale, of course, and scale our revenues. We spent less than $1 million on sales and marketing to date in a crowded marketplace, and we've been successful in delivering good value and to high recognition from our customers. We have been public about our hiring sales team. We've hired a new director of sales for each of higher education and for institutional sales, and we're looking forward to a bright future. Again, we think that COVID exposed a lot of things that now are understood as fact, namely that the digital backbone has to be there in order for learning to take place. Businesses know that a lot of their operations are going online. A third of people say they want to remain at least partly remote, and CIOs and CFOs across the nation have been surveyed multiple times saying that this is a strong strategic trajectory for their businesses. So digital backbone is not going away, and we're proud to be serving customers in all three of these segments. Summary, Amesite is in a fast-growing sector. We've signed contracts in our targeted verticals, and we're in position for rapid growth. We want to be the chief learning officer for anyone who wants to teach on planet Earth. We don't want to own pedagogy. We don't want to be another university. We would like to support them all. In terms of our competition, we believe that many of our competitors could become customers because we are the technology platform, and that is our focus. So hope that helps, and happy to answer any questions if there are.
I don't know if we have any questions at the moment. I know that people have actually mentioned that they're putting Amesite on the watch list, which I think, we've had some wonderful YouTube retention today, and Amesite was received very well. So if any questions pop up, I would recommend definitely addressing those in the chat of Brella and or YouTube. But I really appreciate you being with us here today. Thank you so much, Anne-Marie Sastry. Again, not Strassi, Sastry. Again, NASDAQ AMST, right?
Yep, you got it. Thank you so much.
Thank you. Talk to you soon. Be healthy.
Take care.
Luke.
What's up, man? I'm back.
All right. Welcome back. I believe you are a part of the next content.
I am. We're going to be doing some stock picking. You know that's what I love. I love hot stocks. And we're going to be doing some small caps specifically. So,
oh my gosh, hit me with it. Hit me with this knowledge bomb.
Oh, I'm not giving it to you just yet.
Oh,
you gotta stay tuned to the 2 o'clock segment.
Okay. All right. I'm out.
Sorry, Elliot.
Enjoy.
You can't front run these things. I mean, these are going to be some big names we have here. But I do want to, before we get into this next segment, time for the second to last giveaway of the day. This time we're doing 1 full year of Benzinga Pro. The email address, it was Chileans. That was the email address given to me. So if that sounds like the first part of your email address, you have 10 minutes to email events@benzinga.com. Go. Again, 10 minutes to email events@benzinga.com to win your prize. And if you have not been selected yet today, stay tuned. We have one more before we conclude. But I see Adam Johnson of Bullseye Briefs has hopped onto the stream with me here. Adam, how are you doing? Welcome, and it is good to see you as always.
Hey, I am doing great. It's fun to be back with you.
Thank you. I am a little bit disappointed though.
Why, Luke?
Because I was promised a.
Oh, did I lose you?
No, we lost audio there, Luke. He's not having good luck with his mic. We need to teach that man how to use a mic.
I hear you. You want to do this thing? Sounds like you like small caps.
I do like small cap. I guess if you want, we can kind of hop into what Bullseye Brief is.
Yeah, sure. It's a site for stock pickers. I absolutely love stocks. I was a stock picker for many years, and finally decided to go out on my own. And my whole thing is American ingenuity, the people and companies driving the world forward. So I've got a lot of tech, a lot of biotech, a lot of med tech. The fund, I've got about 33 names in the fund right now. It's a new stock pick every week, and we're up about 62%. So the process is working, and what can I tell you? I love what I do.
62%. I'll be hitting you up shortly. Fantastic. Well, could you give us any insight into those stocks? Do we have this? We'd love to hear some.
Oh, yeah. Yeah. Well, Luke specifically said, make sure you come with a few names. And that's what we're here for. I wanted to start off with probably the greatest little industrial you have never heard of. It's called Koppers. The ticker is KOP. Again, it's Koppers. And by the way, these are all small caps, because the assumption here is, we could go out and buy the FAANG stocks, and that's very exciting, but we can't get any edge. So let's try to find stocks where we can get an edge and where we can get more than just 30 or 40% upside. Although I admit a couple of the FAANGs are up 50, 60%. But Koppers.
Adam, can you hear me now?
Oh, yeah, I can hear you, Luke.
All right, I'm back. Okay, awesome. All right, sorry, I caught the tail end of that first ticker. What was the first ticker again?
Yeah, it's Koppers, KOP.
KOP.
I think Elliot's already keying in his orders.
There we go.
I am putting these all in at the moment, so please continue.
All right. Yeah, Koppers. This is the greatest little industrial you've probably never heard of. Koppers is #1 in the world at making the substance that seals wood and protects it from water. So if you've ever seen, wooden decks that have that kind of greenish cast, well, that's because of the Koppers chemical that has been infused into the wood. So it's #1 in decking. It's #1 in railroad ties. It's #1 in telephone poles. I mean, literally, Koppers is the #1 producer of this stuff. And what's amazing to me, Luke, is that they've already guided up 3 times this year. The stock trades at about 5 times earnings, and yet growing double digits. But a lot of the industrials were left for dead. And in the case of a Koppers, a small cap stock, everyone wants to talk about Facebook, Google, and Amazon. Meanwhile, you got Koppers over here growing double digits, trading at 5 times, got as low as $11. Now it's into the upper 20s. Guess what? You can't go from 11 to 30 in Google, but you can do it in Koppers, and you can do it in 5 months. And that's the reason I like some of these names, Koppers being my favorite industrial.
And is the stock still only trading at 5 times earnings after that price appreciation you just talked about?
It's about 5 to 5.5 times, depending upon where you want to peg estimates for next year. I mean, that boggles my mind.
I mean, that's a cheap stock. I mean,
it's crazy.
I'm buying stocks right now for 30 times earnings and thinking about those as value plays.
Actually, you're probably
some of these names.
No, you're not paying 30 times earnings. You're paying 30 times EV to EBITDA.
Yeah.
I mean, it's like crazy. I won't touch a lot of the software stocks right now for that reason. They're too expensive. But you find little Koppers. Oh, by the way, I told you they're #1 at this chemical that seals wood. They're also #1 in the world at making that sort of coating stuff that you see on batteries, on anodes. Both of those products, the sealant for wood as well as the covering on a battery anode, comes from distilling coal. I mean, it's a really dirty business, but you basically take coal and distill it down the way you would, distill or refine oil, and you turn it into this heavy, gunky stuff. But it turns out that heavy, gunky stuff is really good at protecting wood and really good at conducting direct current. So Koppers,
Awesome.
It's the greatest little industrial you've never heard of.
Yeah, and so it's got earnings growth, it's got sales growth, and the multiples are so cheap.
Yeah.
All right. Okay. All right. That's a good one. You're starting us off with a hot one.
Good.
All right. What else do you have?
Okay. Yeah. Like right. Okay. Like what? That's all you got? Only Koppers. By the way, I sent you a chart earlier. I don't know. Did you get that chart?
Yep. Let's get that on the screen.
It's a pretty cool one if you want to share it with people. And because you called me a month ago and said, hey, you want to do this small cap conversation? Got me thinking, which would you rather own? A small cap index, forget, individual stocks, just a small cap index up 546% in 20 years, or the S&P 500 up, half as much, 251. Okay, fine. 251% in 20 years is still, good return. But why settle for that when you can make twice as much in these small caps? And I think that's really the message here, whether we're talking Koppers or any one of the other names that we could go into. It's opportunity. It's, where do you get an edge? What makes, what excites you? What gets you up in the morning? And for me, it's these little names that I can dig my teeth into and appreciate and understand. You know what I mean?
Absolutely. And something that I've been saying all day to people is that if you really want to generate alpha, there is so much opportunity in the small cap names, right? They're not already covered by 40 analysts. It's not a household brand, right? They're not at as many of the investor conferences probably. You can discover these stocks, but before anybody else discovers them or is even paying attention to them. So I absolutely share that philosophy with you. I mean, I weigh super heavily both into the small cap ETF. The one that I own is IWM.
Oh, sure.
Yep. I think that's the biggest one. I know it's not the cheapest one because every time I log into my brokerage account, it tells me there's a cheaper option out there. So I probably should get around to exploring that. But I weigh heavily into there and into some of these individual names.
Yeah, absolutely. Well, this is exciting stuff. I have so much fun. Let me tell you about another one that I just wrote up for my bullseyebrief.com subscribers. It's probably a little stock you haven't ever heard of, and that's the whole point.
Yeah, I love those.
Yeah, Progenity, PROG is the ticker, Progenity. What's cool about this company, Luke, is they have a diagnostic test that uses all kinds of data and crunches it with artificial intelligence to try to figure out what is happening inside a woman's body at week 20 of pregnancy. Because as it turns out, Luke, 20% of the pregnancies in the world actually are compromised by a condition called preeclampsia. And it effectively manifests itself inside a woman's body. By the way, she's totally normal, totally healthy. The pregnancy's going great. And then mysteriously at week 20, and again, this happens to 1/5 of the women in the world, mysteriously at week 20, she suddenly starts developing high blood pressure. And so standard operating procedure is at week 20, you go see your OBGYN and they start testing your blood pressure. And you might go back every week or every 10 days, but the problem is blood pressure can accelerate very quickly. And what happens if you go in on Tuesday, you're fine, and by Thursday it starts going up, and then Saturday it accelerates. You're not going in for another 10 days. Well, all of a sudden your fetus is at risk. And so Progenity, which by the way, has really generates enough cash flow to pay for all this by doing all of the pre-pregnancy tests where you see that you have healthy genes, and that the husband and wife, when they come together, will produce a healthy child, at least based upon all the genetic data that they can test for. Or if you're already pregnant, do you have Down syndrome? Does your child have Down syndrome, et cetera? That's really how they started this company. And then they started working on the data and realized, oh, we can create this test for preeclampsia. So, Luke, the stock.
And do they make money yet, or is it still in development?
They do not make money, but I ran the numbers going out to about 2025. I think that they're going to start making money by 2023. In fact, the stock is trading in the 3s, and my target is $26. And that's because I'm quite comfortable saying that they are going to get the preeclampsia test approved for widespread use starting next year. And once you start running the ramp up, because there is no diagnostic for preeclampsia, this will be the first and only on the market. So every OBGYN is going to want to start using it. And when you start running those numbers, you can see how it ramps up pretty quickly. In fact, going out to just 2022, if they captured only 5% of their addressable market, all of a sudden you get revenues up to 280 million versus 90 million this year. So they can ramp up to profits very, very quickly. And it's trading super cheap, Luke. I know you're a value guy, you're a growth guy, but you're a value guy at heart. Progenity's trading right now at about 1x price to sales, whereas peers trade at about 5.5 times. Natera, Neogenomics, Flugent, Quest, Myriad, they trade like an average of 5.5 times. So Progenity 1x with this great product no one else has. That's how I get to $26 on my target from the current $3 stock price. Again, another wonderful small cap name that I've written up for my bullseyebrief.com subscribers. And the stock's trading near the lows. So it's a wonderful entry point.
Yeah, I mean that one-time sales, I mean that is pretty much as cheap as it gets.
And by the way, to be clear, Luke, the reason it's trading down is it IPO'd at $15 back in June, in the midst of the lockdowns and shutdowns. So women weren't able to go to doctors and have all these tests done, right?
Okay,
and
so
now
that makes a compelling buy story then.
Exactly. So now you have all these people who bought at $15 on the IPO, and they're saying, oh my gosh, I've made money in the FAANG stocks. I better book some losses on some of these small caps, to, again, offset my gains. So I think there's tax loss selling, and that's what has knocked it down into the $3 range. So I'm buying it. I just wrote this up again. I just wrote this up for my Bullseye Brief subscribers a week ago. So it's a brand new pick, and we're buying it down here. I'm very excited about it.
Awesome. I love that. And something else that I've been thinking about a lot is, what are some of these reopening plays that aren't the obvious ones, right? Like you have AMC Theaters as a reopening play, right? That's obvious. Everybody thinks about that, right? But
by the way, I'm not buying.
Yeah,
they might not make it. And here's why. They don't, I actually looked at it. One of my subscribers said, hey, should I buy AMC? I'm like, I don't think so. I own Wynn Resorts. I own Boeing. I own Boston Properties. I don't own AMC. They don't own any of the properties where they have their theaters. It's all leased space. So there's no asset on the balance sheet, and their bonds are already trading at 22 bucks, 22 cents on the dollar. Okay.
Wow.
Which, yeah, yielding 40%, which basically tells you the pros think this thing's going out of business. They don't have the cash flow. They just refinanced a bunch of their debt. They're paying a 10.5% coupon, and they're going to run out of money in February. So I'd love to come in and buy AMC because, you know, it's a $3 stock and it's fun to buy a little $3 stock. You can push it around, but that one may not make it.
Yeah, I mean, it doesn't seem like they really have financing options on the table. I mean, if their bonds are already trading that cheaply, they're paying 10.5% on debt. I mean, at $3 a share, you can't issue new equity, really. I don't know who would be buying it. So
well,
so
they're talking about trying to do that, but yeah, agreed. I'm like, who would?
Yeah, I mean, that's all you got. It's all you got. But
yeah,
it's a bad situation.
Yeah, it's bad. So I love going to the movies, and everyone I ask and I say, hey, would you go to a movie, you know, if the theater reopens? They say like, yeah, I miss the movies. I love going, and AMC's the best. I mean, my nieces can't wait to go back. They're in high school and college. But, you know, it's a question of getting AMC from here to there. I'd like to think that they will get from here to there, but, you know, this is a high risk purchase.
Yeah, absolutely. All right, Adam, and I think we're down to like our last 2 or 3 minutes, and I think you had one more name for us.
Excuse me. Yeah. The Real, which, you know, I call the eBay for the 1%, ticker is REAL. Trades around $14 or $15. And this is basically, you know, like I said, the eBay for the 1%, it's really high end resale stuff. And you can see it's a pretty steady Eddie trader. You know, you buy this thing around 14 and, you know, you get a little run up into the, you know, the upper teens and, you know, you let some of it go. And that's a fairly short-term chart. But, you know, this is a company that has wonderful, wonderful margins. I mean, whereas eBay takes like, you know, 10 or 15%, these guys take like 28 to 30%. So, you know, if
huge, that's great.
Yeah, it's huge. And what has started happening is that a lot of the people who use this, and let's face it, it's for the most part, and forgive me for saying so, but I'm stating the company will tell you this. It's basically women who are staying home and not working, and you know they're basically trading purses and shoes and stuff. And they are rabid fans. And what's happened is that a lot of the buyers of this stuff have turned out to be sellers as well. So it's like this virtual circle or cycle, they call it. So, you know, you go out, you buy a new purse, you use it for 6 months, you take care of it. You know, we're talking like high-end stuff. We're talking Gucci purses, okay? Yeah. We're talking Louis Vuitton, all that stuff, Cartier. And then, you know, you use it for 6 months and then you go into the Real and say, I love this purse, but basically I want to, you know, I've been like effectively renting it and now I want to resell it. And so the Real resells it at maybe 70 cents on the dollar. They take a 30% commission. And now you have more money to go out and, you know,
buy more stuff from them.
Buy more stuff. And
it's like a stockbroker that's taking a 30% margin for swapping stocks back and forth.
Yeah, and this is the only company that's doing it at this end. I mean, yes, eBay does have some very high-end stuff, but I got to tell you, the Real has done an amazing job at corralling that high-end purchaser. They have a couple of flagship stores around the country that are magnificently beautiful to walk in. So it's kind of a clicks and bricks sort of thing. And by the way, they have this really cool artificial intelligence program that enables them to authenticate, no joke, tens of thousands of items per day. They basically, you know, like imagine if this were a really high-end fountain pen. I put it in this little cubicle and it's filmed by a bunch of cameras in 360 degrees. And then they use artificial intelligence to zoom in. I mean, they'll check the stitching on bags,
that's cool.
The way the leather
really
is cut.
Cool.
Guys, I got to cut you off. I'm sorry. You guys are experts. Adam, I could let you go on all day. The amount of knowledge you have about these different tickers is incredible. Oh, alas, I'm not going to let you. But Luke, great moderating. Adam, you're definitely going to be back, man. So we'll see you soon.
Thanks.
Incredible knowledge. Really
Thanks,
appreciate
man.
you both.
Oh, thanks for having me, guys. Luke, Elliot, awesome being with you guys. Love Benzinga. Thank you.
Appreciate
Thanks,
you,
Adam.
All right, Luke, we are going to keep moving right along, man.
Let's do it. Let's do some more company presentations.
Yes. This next one is a really, really cool company. Everybody
Awesome.
should pay attention if they're interested in cannabis stocks. Khiron Life Sciences. We are going to have Alvaro Torres, horrible pronunciation. Wow. CEO of Khiron Life Sciences. Alvaro, are you with us?
Yes. Hi, Elliot. Can you hear me?
Yes. How about you go ahead and correct my pronunciation of your name? I apologize for butchering it.
That's okay, Elliot. Alvaro. It's pronounced Alvaro.
Fantastic. Alvaro, we're going to let you take it away. You're welcome to share your screen. If you have your video, there it is. Beautiful. So if you want to go ahead and share your screen, we'll let you take it away.
Okay. Give me 1 second, please.
Yeah, of course.
Are we seeing? Okay.
Looks like you've. There it is.
Okay. Well, thank you. First of all, Elliot, again for the invitation. So it's a pleasure for me here to speak at Benzinga. So my name is Alvaro Torres. I am the co-founder and CEO of Khiron. Khiron is not a medical cannabis Latin American company with a global focus. We're a patient-oriented company, more on the B2C side of the business. We believe we are in an industry in which we need to build demand, that there's a lot of patients out there in Latin America and in Europe, and we are working all nonstop on how do we get those patients, how do we build that demand, how do we make sure patients and doctors stay with us, and how do we reach a goal that we have of 1 million patients in 2024. Our mission is to improve the quality of life of patients and consumers to the applied use of cannabis. So we are very focused on that B2C side, on making sure that we can leverage the low-cost advantages of growing in Latin America, for sure, for medical cannabis, but also leading the way in making sure that we can have as much capture of demand as possible. As I said before, our goal is to reach 1 million patients and consumers by 2024. We are a Canadian-listed company with a ticker of KHRN in the Toronto Stock Exchange, in the venture exchange, but we are mostly based here out of Colombia. I myself am Colombian and U.S. citizen, both nationalities. We started the company about 3.5 years ago. We've been public for 2, and I have to tell you, the last 6 months, 7 months, even with all the pandemic, have been some of the most exciting months since we started our company. We started sales of medical cannabis on March 19 of this year, the first company ever to do this in Colombia. And so far we've reached and exceeded more than 6,000 prescriptions. And most of that is how the growth that we're seeing month on month. We've decided in Colombia to be vertically integrated, and that's a model that we're proving that it's successful, taking a little page out of what's happening in the United States, in which we control the cultivation and we make sure that we do all the branding, marketing, education with the doctors and take it to our patients. That allows us today, for example, to be able to sell one of these units, which is a 30 milliliter standard unit of THC, that we sell it for retail in the clinic for $60 Canadian, and it costs us about $5 or $6 Canadian to manufacture. So the margins are very strong, above 80%, because we are focused on that B2C market and being as close to the patient as possible. We started, as I said, 7 months ago. We've seen tremendous growth in our own clinics. We have 3 clinics in Colombia. We opened the last one back in May, and it became the first medical cannabis clinic in Colombia. We are opening a new clinic tomorrow in another city of Colombia called Medellin, with a population of more than 4 million people. We already have all the appointments full for the next week. So we are seeing how medical cannabis is becoming a viable alternative for patients, and we want to be the leaders in that space. Today yesterday we made a very big announcement that Colombia decided to cover medical cannabis for both CBD and THC. So we already have more than 1,400 prescriptions that are going through the insurance system only in a couple of weeks since we started. Khiron is one of the first, or the first company that's been able to do this. And it's a very big news because that means that every time we talk about cannabis in Latam, one of the biggest issues people come up to me and ask about, can patients afford a long-term treatment? And for the last 6 months, we've proven that they can, because there's a reason why we keep growing on patient count and new prescriptions and continuing to refill prescriptions. But today, it's very exciting to know that the Colombian government is now actually saying, we are going to cover this. So whatever the cost is, $60, $50 to $60 that this bottle costs, is going to be reimbursed by the insurance companies. In fact, when we made the announcement yesterday, we already had more than 1,000 prescriptions that are being today filled with insurance coverage. And it's a very big news for not just for Colombia, but also for the industry, because there's very few countries that have a program like this. And I think it shows how Colombia wants to be a leader, not just in the low-cost cultivation aspect of it, which of course we take advantage of, but also in how patients should be able to get the access. And it's tremendous news for us, and I think for the entire industry. Our plan for the next, for 2021 is to focus on 6 countries: Colombia, where we are based; Mexico, which is great what's happening there with all the legislation that has been passed on the medical and the adult use and the CPG world. Going to Peru, in which we are already selling. We are the first company that started to sell CBD in Peru. I wouldn't be surprised if we were the first company to start selling THC there. And we're looking to Brazil, in which we're looking the next couple of months. Brazil is a huge opportunity with more than 250 million people. They already know what cannabis is. There's already 20,000 patients or so registered in the National Registry Program. And I think the way that we think about things in terms of, we are always concerned about access and how do we make sure that we create brand loyalty with the doctors, with the patients, and then go back and have a really high quality product. That's sort of go-to-market space going to help us within Brazil. We're also very focused in the UK, which is one of the most exciting markets for medical cannabis in 2021, and in Germany. So we've accomplished a lot of things in the last 7 months, despite of what's been happening in the pandemic. We have a very strong balance sheet right now. We're almost, we closed the Q3 with almost $40 million. We did a recent raise about 40 million and plus more. So we are in a very good position to be able to help us to execute our plan and to be able to continue to grow as we keep this tweak. I think Khiron is a clear leader in the space all across Latin America, and we are leaders because of the way that we've been able to do our go-to-market strategy. And our go-to-market strategy is based upon, 6 things. First is high quality product. For us, quality means stability, consistency, and paying attention to what the consumer needs in terms of taste, look, feel. We spend a lot of time making sure that we have the right product, because if you cannot provide a consistent product to your patients, then you're not going to be able to build that brand that's going to get us to the 1 million patients per year. Second is we need to talk about education. Khiron, I think, it's a clear leader in education across Latin America. We've been partnering with the top universities in Latin America, just like the Tec of Monterrey, so that we can bring education to the doctors, so that we can break those barriers down of how doctors think about cannabis. And now we're complementing that education that we're doing with the Tec of Monterrey. We're hosting our own internships in our clinics. We do have the first and largest medical cannabis clinic in Colombia. We are expanding into Medellin tomorrow, and we will be expanding this all across Latin America. But the one thing that we have today that's helped us tremendously is that it's now becoming a learning center in which we have doctors who are writing 40, 45 prescriptions a day, and we can bring doctors from outside to get trained, to see the realities of what is it that you prescribe, what don't you prescribe, what are the myths and realities live. And I think that's been helping us to keep growing and keep bringing that education forward to the doctors. We have our own clinics in Colombia. As I said, we have 3 clinics with more than 100,000 patient attentions. 90% of our patients are coming from our own clinics. And that's why we've made also a decision that part of our growth strategy all across Colombia, Latin America, and the world is going to be about expanding that clinic, which is called Serenia with a C. Serenia is Colombia's first medical cannabis clinic. Is now expanding to more cities. We're seeing the interest and the excitement from patients and doctors that we are actually opening it. We decided to do also, how do we make sure that we increase access? We have a really amazing telehealth platform that today accounts for 15% of all our consults. So we are making a combination of small format clinics, spoken hub, and telehealth so that we can bring medical cannabis to every patient that needs it. I mean, we are talking about a region that has more than 60 million patients. And 60 million patients that can spend upwards of $500 to $600 a year, that's in the tens of billions of dollars. What we're looking for is, how do we get to that million patients in 2024 that can get us $500 to $600 of annual expenditure at 80% gross margins? That is a company that can make, around $500 million if we keep growing in this, if we keep acquiring patients, if we keep retaining patients. And that is why we did come up with a plan called the Quiero Patient Program, which in English would mean care, in which is not only just about acquisition, but how to control and how do we retain the patients. And that's very important for us. And lastly, focus on distribution, because it's my obsession and the company's obsession that we have to make this product available. And all these things that we have been doing are going to get us to that market size that we believe, not only in Colombia, but in the rest of the region. But certainly what we look at is, for us, the focus on brands, not just on cultivation, but the focus on building brands, the focus on building relationships with the doctors. That's how you get to a company that's going to reach that million patients in 4 years. We already started with 6,000 so far, but it's been growing at more than 25% per month. And the way we're growing our business, retaining our patients, growing our base, and being able to multiply this in 6 jurisdictions, that's what we have been doing for the last 3 years. So, in summary, we are a fairly new company. We just started sales in Latin America. Latin American international markets are the next, I would say, cannabis 3.0 for us. I think what we see in the States helps us a lot to see that there is demand out there, that the world is getting ready. Recently, the United Nations just declassified cannabis as a narcotic, and that becomes really good news for the rest of the world in terms of regulation, logistics, issues that make these sales and have made these sales of products a lot tougher. We have to rely on technology. We have to rely on data. We have to know that our products work. Today, 94% of the patients that have taken the medication in our clinics feel a significant improvement in their primary condition, call it chronic pain, epilepsy, multiple sclerosis, and such. So that tells us we have a really product because we've invested a lot in making sure that we can do it, but that our distribution network also works, that having that data, that low cost of acquisition of patients, being able to get the Colombian government to cover this. So the patients don't have to pay more than $2 out of pocket every time they get a prescription. And how do we take that and take that to the rest of Latin America? And that's what the company's been doing. I think we've been doing it successfully, and I'm looking forward to 2021 and making sure that we can start sales in these 6 countries. And if we just focus on those 6, I think this company is going to be everything that we think and more, because we are so focused on that patient. We're not here to try to sell the lowest cost product to a patient. We're here to make sure that that patient sees the most value in our value proposition and that they stay with us because we care and because our objective is to improve their quality of lives. So with that being said, I think that approach that we've been doing is been paying good dividends. So I'm very excited about what happened yesterday, what we announced. There's a lot of news that are going to be coming from our company. We have a strong balance sheet, a strong position of cash, and a very great team, honestly, because this team has been able to achieve a lot of things that not many companies can. We are first in many aspects of our industry in Colombia, Latin America, and even in Europe. I think the UK market is going to start showing great strength. We are well positioned there. Germany is a market that a lot of companies know. We put in place all the distribution, all the doctor education, and the right logistics and supply chain strategy so we can access that market very quickly. And the more that we can leverage our strategy based on this vertical integration of being able to have our own clinics, our own products, low cost advantage, so that we can create more value. I think that's what's gonna be making us successful. Tomorrow we'll be talking more in the public markets about our Medellin launch. We're really excited about that because it's also going to be a small format type of strategy in which we're going to be taking our brand of Serenia to many more cities, trying to access more patients. So it's exciting times, Elliot, for Khiron and what's going to be ahead for 2021. And as I said, I think international medical cannabis is just in the first half of the first inning of the World Series.
Amen. Well said, Alvaro. That was a wonderful presentation. I'm so curious. Well, not curious. I think it's a pretty incredible, I should say, that, the 94% of your patients say that it is beneficial to them. That's incredible. And something, that type of data we don't quite have yet, I think, on the US side of things. So, I'm really impressed by that. So Alvaro, thank you so much for being here with us. I recommend, please do reach out to Alvaro Umbrella. If you are watching on YouTube, I believe they can reach out to you via your website, which is, if you don't mind restating.
www.khiron.ca, and that's investors@khiron.ca.
Beautiful. Awesome. Alvaro, thank you again, sir. Stay healthy, and we will talk to you soon.
Thank you. I appreciate your time. Bye-bye.
Bye-bye. All right, everybody. Wonderful presentation. Khiron is a wonderful, wonderful cannabis stock to definitely keep on your watch list. Next up is Kenneth Londoner. I'm struggling with the last names today. It is an issue. I apologize. Ken, are you there? Can you hear me and correct my name pronunciation? Looks like he is still getting on. I see you. Just make sure you turn on your video and microphone there, Ken, if you can. Definitely see your screen as well. Oh, do I hear you, sir?
How about that?
There it is. Can you turn on your video for us?
There we go.
Perfect. Ken, welcome, sir. Londoner?
Like somebody from London.
Londoner. That would have been the obvious choice. All right, I'm going to hop off and go hide in the corner. Ken, I appreciate the sympathy, my friend. I'm going to let you take it. Dive right in, sir.
Thank you for joining. Pleasure to be here. Here's our disclaimer. You guys know what that's about. BioSig Technologies, so we're based in Westport, Connecticut. We are a medical technology company commercializing our tech platform in the electrophysiology market. We have approximately 50 employees. Our product, the Pure EP system, is a system that helps heart surgeons make better decisions when they're trying to fix irregular heartbeats or arrhythmias. We're in a double-digit growth market. The market's growing about 13.5% a year, expected to be $12.2 billion in a few years. And we solve a very much unmet need in the operating room. Company has 31 patents issued, so technology is completely protected. And we have a razor and razor blade business model, and we are FDA approved. The market itself is quite large. It's a global business. In the United States, there are 3,425 labs where we could sell a system. Outside the US, close to 4,000. And here's what a lab looks like. This is actually the control room in a hospital. Our system here, this is actually University of Pennsylvania. This is our system panels here. We're basically getting signals from inside the heart and on the surface of the heart, and our computer processes that and gives the physicians direction on where to better guide their procedure. So we're an efficiency and a tool that improves their procedure. This is what it looks like in the operating room. You can see the table, and the patient is under the blue tarp. The gentleman with the glasses is the electrophysiologist. That's Dr. Andrea Natali. He's the leader in our field, does the most procedures in a given year. He's in Austin, Texas. Our system sits underneath the operating room table. We plug into the lab infrastructure. The signals come from inside the heart into our computer system. We process that information and we digitize the signals and display the information for the physician to see. And we do it better than anybody. And with our information, they see more so they can do more. This is an example of the information they're seeing from inside the heart. Nobody on this call is a user, but this is what the users are looking for If you notice, the rectangle on the left is the pure EP system. There's great character in the information. If you look at CR1 and 2, you can see very distinguished cycles of heart activity, whereas on the other system in the operating room, they really don't see that information. And the physicians can't fix what they can't see. So by us showing them this information, they're able to do better procedures, and they're much more confident in the work they're doing. We've been able to get outstanding testimonies from the physicians in our industry. Dr. Venkat Chalam is at the Mayo Clinic. He's been a user for the past year, and they're seeing great value in the system. Dr. Natali, who you saw his photo a moment ago, he speaks very highly about the quality of our recording in the lab and it making a big difference for them. Our commercialization strategy this year was kind of a tough year to launch. This is our first year in the commercial market. You can see with the green pinpoints, the centers that we've installed systems in. The way it works for us is we install the systems, they get to use it, trial it, we train them, we educate them, and if they see the value in the technology, then they work with our teams to get a commercial contract. So we have a growing pipeline of folks that have been using the system. I believe we've used it on over 400 surgeries this year, and we've gotten great satisfaction and great feedback. One interesting thing to note about this slide is 4 of the centers on this slide are known to be some of the top hospitals in the United States that do these procedures. So our commercialization strategy, we are going to the top centers that do the most procedures that are into the new medical innovations. So University of Pennsylvania and Mass General on the East Coast, along with Mayo Clinic and the St. David's in Austin. These are all top centers in the United States, and it'll be great to have them as commercial customers, which we expect to be happening in the near term. Here's our business model. We sell our computer system and all the accessories that go along with it, and they pay quite a bit of money for that. And then the razor blades are sitting on top of the hardware. So we sell a service agreement, which gives them installation, training, and support in doing these procedures. They pay us every year for that per system. And then we sell them software modules. So if you think about buying a laptop, you may pay extra for Microsoft, Office, and you'll pay whatever they charge, $149. In our case, the modules are selling for $15,000 to $25,000. And then we're partnered with the Mayo Clinic and MIT in creating artificial intelligence machine learning data sets. So we're using the computers to crunch the information we're collecting to offer them unique information that we believe they'll be paying us for. This is our team. What's interesting about the folks who are building this business is they're veterans from industry. So we have folks from J&J, Google, Medtronic, Boston Scientific, who have a tremendous amount of industry experience and are providing the type of market entry that we have been working very hard to get to. Our expectations next year, we think the pandemic will start to lighten up. Our experience has been that, for March and April of this year, we saw a slowdown like everybody else. They were focusing only on COVID patients, and they were not doing these procedures. They basically halted what they call elective surgery. A cardiac ablation to fix irregular heartbeats, we don't, and the industry started to say is not elective. If you have an irregular heartbeat, there's a 6-fold increase in stroke risk, and there's also an increase in heart attacks. So when you have these problems, you have to get them fixed right away. And the other interesting thing is this sector is one of the highest areas of profit for the hospital. So if you think of the hospital like a department store, I know this sounds a little strange, but the department where we operate in creates the most profit for the hospital. So they are basically ramping up their activity, getting back to full force, because this area of the hospital is producing a lot of profit for them. So we think 2021 will be a very strong year for commercialization for us. We have a robust pipeline, and we expect increased revenue. And we also expect our first commercial revenue in the fourth quarter of this year. So right around the corner. So thank you very much for your attention. And are there any questions?
You know, one thing I do want to point out is that you have officially been dubbed King Ken by our YouTube channel. You are King Ken. So
well,
everybody says they love you.
Well, I appreciate that. We try to get through it briefly, but please feel free to send us any questions. Our website is www.biosig.com. And one other thing I forgot to mention is management in our company owns almost a third of the stock outstanding. We have roughly 21 million shares outstanding. We have $32 million of cash on the balance sheet. We have no debt. We have enough cash to drive our business forward for several years. And, the insiders are buyers of the stock in the open market. And, we're a committed group of people. We believe in the mission quite a bit.
That's fantastic. And that kind of, I would say, confidence is key when investing. And that's the type of information that we want to hear here. So Ken, thank you so much for presenting. Please do check Brella. YouTubers, please do reach out. Awesome business. Definitely should be on your watch list. Ken, stay healthy, my friend. And we're so happy you're here.
Thank you. Good luck.
Thank you very much.
Take
All right,
care.
Ken Londoner, everybody. Ken Londoner. All right. We're going to keep moving. I believe next up, we have TAAL. So that is TAAL. Chris Naprawa. He is the president of TAAL. They are listed on the CSE as TAAL. Chris, I see your name there, my friend. It looks like you are off mute, but let's get that video going when you can. Excited to have you, sir.
Glad to be here. Glad to be here. Thank you.
Yeah, fantastic. Well, no time like the present. Shall I let you jump right in?
Sure, absolutely. Thank you very much for having us here today. I'm Chris Naprawa, president of TAAL. Distributed Networks. We are a blockchain infrastructure company. We're focused on providing infrastructure and solutions for enterprise clients who want to build solutions on the BSV blockchain. So we have clients in transportation and healthcare and social media and gaming and logistics. We have a lot of clients focused on consumer choice and fair trade and traceability of foods. And it's all about building these applications in a very, very scalable way on the BSV blockchain. Notice I haven't said Bitcoin once. Bitcoin is one application that's on blockchain, and we're focused on all the other enterprise type solutions. So we'd fit into a space more like an AWS or Microsoft Azure. We're very much a cloud computing company that is focused on providing these kinds of solutions to our clients. So how do we do that? We have a whole bunch of computers in a data center, and we have software that controls all of those. We have gateways and portals that allow clients to be able to easily send us their transactions, and we process them in a very, very timely manner for very, very cheap. So other solutions like Ethereum, for instance, their average cost of a transaction might be $1 or so. On Bitcoin network, it might be $7 to $10. We can easily process transactions at scale at a penny, and even on big scale, less than a penny per transaction, and write them to the blockchain. So there's a lot of scale, and there's a massive, massive cost saving that we can provide institutional clients. So I can give you a couple examples because I think our story is best told through the lens of our clients. For instance, we have a healthcare client that is trying to solve for the opioid crisis, and that they're doing that by providing patient records on chain. That meaning that the benefits of being on the blockchain, that it's an immutable record, that it's time stamped, it can't be changed, or if it's changed, everyone knows it's been changed. And this allows patients to be able to get their prescriptions, prove that they've got the prescription and they're not getting it multiple times. That patient record is permanent, and every step along the way creates a little transaction on the blockchain, maybe 10 or 15 transactions per prescription. So on scale, that adds up to billions of transactions over time, and we're really simply a fee for service business. There's all kinds of other value added services we can put on top of that, like storage and search. We bought a company called What's On Chain, which is a fabulous company that's been integrated into TAAL. We have great examples in food security. That's in the broader category of consumer choice. So we have a client that is solving for food security, and they want to be able to show that their ingredients are ethically sourced, that the packaging is ethically sourced, that it's non-GMO, that it's organic, and all that can be traced right onto the package through a QR code. And along the way, that's about 20, 25 transactions. So if you can think of how big that consumer packaged goods space is, it's an incredible opportunity for a company like ours to provide the infrastructure. Again, like Microsoft Azure or AWS, we have to make our network so robust and so simple and so low cost that you just wouldn't consider doing it yourself. It's just too easy to send your transactions our way. So that's what we're trying to do. We're headquartered in Zug, Switzerland. We've got people all over the world working on this project. We're a young company, and it's a really, really exciting time for us. So, you know, from an investor standpoint, I think what appeals to investors in this particular case is that over time, what you will see is, you know, very predictable recurring revenues that are 24/7 and growing. So that all kind of starts for us next quarter as we've set up the company to restart commercial operations in Q1 2021. And from then on, what you should see from us is just some really, really steady growth over time. We have a very tight shareholder group. We have a very concentrated shareholder group for a public company. We hope to broaden that out over time, but we've got about 25 million shares outstanding. We trade at $2. We're on the Canadian Securities Exchange under the ticker TAAL, and I'd be happy to take any questions from here on in.
All right, Chris, let me head over to the chat. I don't see any at this point. If you want to continue to give us a few more thoughts on the company, feel free. Otherwise, we can hold tight for a couple questions here if they come in through the chat. But again, where can people find you all?
We're under the ticker TAAL on the Canadian Securities Exchange and TAALF on the OTC.
Fantastic. And do you have a website?
Yeah, www.taal.com. The TAAL is a lake in the Philippines. It's a beautiful place. If you go to our website, you'll see an amazing photograph of that lake, and with lightning coming across it, it kind of speaks to the energy and excitement of our company.
Ooh, I like that. Fantastic. All right. So let's see. Yeah, Chris, I don't think we have any questions at the moment, man. If there's anything else you'd like to, chat about or discuss with the audience, maybe some upcoming 2021 activations, please do.
Sure. Here's what you can expect in 2021 from the company as we roll out. We've already announced that we've purchased a whole bunch of equipment that's going into our data center, which is in Canada. The big differentiator with us and kind of being on a public chain, we want to be as accountable to our customers and to the market as possible. So we're a public company, therefore we're under the scrutiny of the regulators and the exchange. We're located in Canada, first world nation, where there's rule of law. All of our equipment is an ultra high secure facility in Calgary, Alberta, and so bringing all that accountability, I think, will help enterprises move from other private solutions or cloud solutions onto this public blockchain solution. That's why we focused on that. So every time you see us announce that we're having more equipment, more infrastructure being installed, that is just more ability to generate revenues, process more transactions, provide more scale to our customers and to enterprises everywhere. Another really neat thing that you're going to see come from us is launch more and more services. So, for instance, as more and more companies migrate to using the BSV blockchain, all that data accumulates over time, and that data has real inherent value in itself. So our acquisition of the company called What's On Chain was really, really key for us, because over time there's so much information to be mined there. I gave the healthcare example. Now think about millions of patients that all have their records on chain, and all of that can now be used by researchers, by pharmaceutical companies, by universities. And by the way, since you own your own record, you should be paid for that. And the beauty of the BSV network is that you can make incredibly small micro payments, again, in fractions of pennies and oftentimes, and that money comes back to you. And I'll give you one more example. We talked about social media just briefly. We have 3 or 4 companies in the world right now that are garnering all the profits from all the advertising everywhere. and the content providers, you and me, get paid zero. So we've got some really innovative companies that are building on social networks, building social networks that kind of look like Twitter, kind of look like Facebook, blogs. And as you sign up for these, you're recorded on chain. So that as more and more content is shared, that money comes back to you, the content originator. And that's a concept I think that everybody can relate to. And it's going to be a massive paradigm shift. And again, it's only enabled because we have this blockchain, the original Bitcoin, which is called Bitcoin SV. That's the chain that we're developing on. That's the one that provides so much scale, and we're all in on this bet. There's no plan B here. We're all in on this bet for Bitcoin SV.
Great. We do have a couple questions actually that have come in the last couple minutes. One being, can you touch on how many transactions per second TAAL can process?
So right now we're up in there is a slide on the deck again at TAAL.com. You can see the investor deck. Right now Bitcoin Network can do about 7 transactions a second. Visa Network can do about 25. We're going to have the ability to scale up to 50,000 transactions per second. We've already shown that we can do massive blocks, and blocks being large mean there's a whole bunch of transactions inside of them. So we've got a ton of processing power, and the absolute beauty of this network is the more it scales, the cheaper it gets to operate, and the cheaper the costs are for the users. So one of our scientists said to me, I said, what does all this end in 10 years? What does the world look like? And he says, every man, woman, and child will originate about 25 transactions on chain every single day. So that's the kind of scale of the infrastructure that we're trying to build to be able to accommodate that. And we invite other companies to join us because there's no one company that can do it alone.
Great. And I think one last question here we can touch on. Let's see. What is your projected growth and or future guidance?
Yeah, so we're brand new. We're not going to provide any guidance at this time. The good news is it's the percentage of growth rate is going to look fantastic because we're starting from zero. So it's going to be incredible growth rate for the first few years, anyways. But I think you can see us grow in leaps and bounds. I think you'll see us starting from, we started the company inside an existing shell of a public company essentially, and now what you're going to see from us is starting in Q1 2021, see our first evidence of revenues. Those are going to grow really, really steadily. I would anticipate that we'll start to get to be a cash flow break-even company within the first year or so of working on the new project that we're working on, which is the transaction processing, and then from there it's onwards and upwards. The scale really speaks because we don't need a whole lot of people to run this stuff. What we have is a whole lot of people working on applications and more software and more solutions to put on top of that to make this even more attractive.
Fantastic. Chris, can you tell us, do you have any main competitors to speak of? That was a question that just came through.
Yeah, so I think more competitors would be the other blockchains, so like Ethereum or Hyperledger would be examples of other technologies that we'd be competing with today. And you mentioned the Visa network. There's a great example of one where we're not focused solely on financial transactions, we're more into other things, but those big established, hard to move bits of infrastructure, that's really our competitors today.
Fantastic. Chris, really appreciate your time, my friend. TAAL, incredible company. Really, really cool what you guys are building. Thank you so much for being here today.
Thanks a lot.
Yeah, TAAL.com, everybody. It is CSC TAAL, that's TAAL. Find Chris and team there. We will see you soon, Chris. Thanks again. Let us keep it moving. We are a little early. So let's keep moving right along. Preena Fishman is next. She is a PhD and the CEO of Fite Biopharma. That's CAN-FITE Biopharma. They're listed on the NYSE CANF. Preena, can you hear me? I see you are on. If you wouldn't mind unclicking your mute and your video, get that on for us. We'd love to have you join us here, but we do see your screen. So 1 of 3. Hey, there you are. How are you?
Good. How are you?
I'm good. I definitely did not say that right. Again, is it Nina?
Penina,
Penina. I read Prina. My apologies. Penina. Fantastic. Penina, welcome. Very excited to hear about CanFite, what you all are up to. I'm going to go ahead and let you get started.
Okay, thank you very much. We are very happy to be here today, and we would like to share with you the CanFite story. The most important thing that we would like to communicate today is that we are now in a very good time, which we have just came up with 3 positive data from clinical studies, which actually bring us into a clinical proof of concept. And I will be very happy to share it with you along our presentation. So CanFite is an advanced clinical stage drug development company. The management of the company and the discovery labs are based in Israel, and the preclinical and clinical development team is based in the US. We develop small molecule drug products for the treatment of inflammatory and liver indications. We have a high experienced management team. We have successfully concluded corporate partnership partners which will distribute a bit down the road our drug in the market. We got already $18 million upfront money, which is of course a non-dilutive money, and we are listed on the New York Stock Exchange with the ticker CANF. So moving to the next slide, I would like to share with you the historical concept where we came up with a very interesting clinical observation that cancer can very rarely metastasize into muscle tissue, not only cancer, but also inflammation. We were successful to show that muscle cells release small molecules which can bind to cancer and inflammatory cells and induce apoptosis, meaning cell death in these cells. We were successful to synthesize the very same molecule which are released by the muscle and turn them into drug candidates in our pipeline. So our technology, platform technology today entails a cell surface receptor, which is overexpressed. It is mushrooming on pathological cells like inflammatory and cancer cells, and our drugs bind to this receptor on the cell surface of only the pathological cells and not on normal body cells. And this is actually explaining why after we have dosed more than 1,500 patients, we have an excellent safety profile, since the normal body cells are refractory to the effect of our drugs. All our drugs are small molecule, orally bioavailable. We have seen very strong proof of concept, both in one of the inflammatory indications, which is psoriasis, in advanced liver cancer, and in NASH. And also we have, as I mentioned, an excellent safety profile. But while looking at the pipeline of the company, the drug pipeline, we can see that the first drug candidate, piclidenoson, is positioned for the treatment of psoriasis and also COVID-19. We are going to embark on a clinical study in COVID-19 very shortly in the next couple of days. The second drug candidate is namodenoson. It is positioned for the treatment of liver cancer and for NASH. And not only that, cannabinoid-based pharmaceuticals are developed by us due to the fact that the cannabinoids bind to the very same target and may induce apoptosis of both inflammatory and cancer cells. Let me take you now through the partnerships that we have already signed with 6 different companies: Cipher Pharmaceuticals in Canada, Gebro Pharma for 3 countries in Europe, CMS, one of the largest pharmaceutical companies in China, for both drugs, our piclidenoson drug and namodenoson. We also signed 2 agreements in Korea, one with CKD for namodenoson and one with Kyongbu for the piclidenoson. As I have already mentioned, We got upfront money of $18 million, and down the road, we are going to receive regulatory milestones, sale milestones, and also 2-digit royalties. So this is our business strategy. We know how to develop the drug, how to launch the drug, but not how to market them. And we are going to market our drugs through these out-licensing agreements. I would like to focus now on piclidenoson, our first drug candidate position currently for the treatment of psoriasis and for the treatment of COVID-19. So the competitive landscape in psoriasis is basically the biological drugs. All of them are given via injection or infusion, while our drug is an oral drug. Also, Otezla is nicely positioned. The Celgene drug is nicely positioned on the market. However, both the biologicals and Otezla induce adverse events, and in the case of the biologics, it's even severe adverse event. In opposing to our drug, which is an oral one, excellent safety profile given to the patients via a pill, a tablet, and till now we have the knowledge about the good efficacy of the drug. So currently we are conducting a phase 3 clinical study in psoriasis. We have conducted recently an interim analysis by a specific committee which is named IDMC, who the data, we were blinded to the data, and the IDMC came up with a very strong recommendation to continue patient enrollment with the very same design. We also had a selection of the dose, and also they told us with same sample size, we will be able, hopefully, to conclude positively this clinical study. So currently we are continuing patient enrollment, and we hope that we will come up with data towards end of 2021. The second indication regarding piclidenoson, as I mentioned, is the COVID-19 phase 2 in patients who are hospitalized. And it is very important to mention here that the robust anti-inflammatory of piclidenoson prompted us to go ahead and to try to treat patients with COVID-19. Just to keep in mind, and a year before the corona just came up, we published a manuscript showing that piclidenoson has a robust anti-cytokine release syndrome. One of the most prominent manifestations of COVID-19 is cytokine release syndrome, and we think that piclidenoson will be able to act against the cytokine release syndrome and to act even better than dexamethasone, which is today the drug of choice for these patients who are hospitalized and needs to get a treatment. So we have been approved by the FDA and by the IRBs, and we are going to enroll patients very shortly in the next couple of days to initiate patient enrollment and hopefully to conclude this study quite shortly. We are going to enroll 40 patients, and right afterward, we will be able to release the study data. I would like now to share with you the data regarding our second drug candidate, namodenoson. It is a very stable drug, and this is a reason that we have positioned it for the treatment of liver diseases, which includes advanced liver cancer and NASH. NASH is a disease where fat accumulates in the liver, not on the background of alcohol. It is a non-alcoholic steatohepatitis, and as I explained, it's fat accumulation in the liver. We are doing all the preparatory work for a phase 3 pivotal study in liver cancer. We have been approved both by the FDA and by the EMA in Europe. Regarding the regulatory status, We have an orphan drug designation and also a fast track designation, which helped us a lot when we approached the FDA with our phase 3 study protocol. Our drug is positioned for patients with advanced liver cancer who are defined as B. There are today on the market 5 different drugs to treat advanced liver cancer for both first line and second line. However, none of the drug is positioned for these patients who are defined as B. We are the only company, and we hope very much to embark on this study. And afterwards, if we will conclude it positively, we'll be able to register with the FDA and with the EMA. I would like just to mention here the preparatory work for this study will take around 10 months. So we will not initiate this study before end of 2021. Regarding the NASH, we have conducted a phase 2 clinical study where we have treated patients with NASH, and you can see on the right part of the slide the endpoints which we looked at. And let me take you through the positive data that we received while we have met all the study endpoints, including a robust anti-inflammatory effect, which has been manifested by a decrease in the 2 liver enzymes, ALT and AST, and increase in the cytokine adiponectin, which is a positive cytokine, which mediates both inflammatory effect and also an antifibrotic effect. We also saw a reduced liver content when we have looked at the MRI PDFF in this patient population. We showed a decrease in fibrosis, which has been manifested by a decrease in FIB4, in CAP, and in FAST, and a decrease also in body weight and very good safety. Taken all of this together, we are currently designing a phase 2B clinical study with 2 of the leading key opinion leaders. Both are based in the US. And we are going, as I say, to embark on this study a couple of months later down the road, which bring me again to what I tried to communicate before. This is a very good time for investors to step in and invest in Can-Fi, because in the next couple of months, we are not going to have too many expenses. Maybe Moti, our CFO, who is also online, will be able to comment a bit about it. Our only expenses relate to the psoriasis and to the COVID-19, and most of the psoriasis expenses have been already paid. Last but not least, I would like to very briefly talk to you regarding our cannabinoid program. We have a collaboration with an Israeli company, Univ Pharmaceuticals, where we are screening cannabinoids which bind also to the very same target and induce apoptosis, cell death of both inflammatory and cancer cells. We are now screening a couple of cannabinoids in order to try and take them into the clinic. So in summary, we have a novel therapeutic approach, a very unique one, which knows how to differentiate between pathological cells in the body and normal body cells. All our drugs are orally bioavailable with a proven safety and efficacy. We have a very broad intellectual property portfolio, which cover all the indications. We have 6 corporate partnerships, and we think that very shortly we will be able to come up with more business development activity and more partnerships. And as I mentioned, we are financially well positioned and have enough money for more than 1 year. And as I said, it is a very good time now to invest in Can-Fi. Moti, would you like to add a couple of words regarding our financials? Okay.
While he's
Hello,
coming.
hi.
Oh, there
Hi,
he is.
Can you hear me?
Yes.
Hi. Yes. Hi. I'm Moti. I'm the company CFO. We finalized the last quarter with more than $10 million in our bank. As Nina mentioned, we have partners and there are some more milestones to get, and we are working very hard to find new partnerships. So overall, we have money to support the company development of the drugs for more than 1 year. We are duly traded in Tel Aviv since 2005 and uplisted to the New York Stock Exchange on 2013, and we are traded as an ADR. And we will be very happy to answer questions if there are.
Yeah, there is one question I'd love to throw your way from our good friend Prakash in the chat. Saw you this time, my friend. When does the secondary endpoint for psoriasis expect to complete in phase 3?
Okay, so let's go first to the primary. It's what is called a PASI 75. It means 75 improvement in the body area which is infected with the skin lesions. And the secondary endpoint is both safety and also pharmacokinetics of the drug.
Fantastic. I think that was the extent of the questions that we received in the chat, but I do encourage people to reach out to Penina and Moti. They have been present at Benzinga before and hopefully will be again. Actually, Moti, I believe there is one more question. Can you elaborate on the milestone payments you expect to receive in the near future? Is he still there? Did we lose him? We may have lost him. Well, I would suggest maybe if we can look into that question in the Brella chat, perhaps we can address it there. But if you all are in the event platform, please do look to that chat. Otherwise, Penina, very incredible presentation. You all present another side of the cannabinoid industry that I think our retail investors and our investors are very excited to see. So we're very happy that you're here with us and appreciate your time and hope you all stay healthy.
Thank you very much. You're welcome. Bye-bye.
Bye. Have a good one. All right. Let us keep moving. How about I turn my video on? Perfect. There we are. All right. We are going to keep going. Next up is the CEO of Poet Technologies, Thomas Mika. I'm sorry. He is the EVP and CFO of Poet Technologies. Thomas, if you are there, I see you there. You might want to turn your video and microphone on. They are listed on the OTC at it is POETF. Very cool company. I have looked into what these guys do. I would not be able to explain it to you, so I'm going to let Thomas do it for me. How are you?
I'm fine, thanks. And thanks for the introduction. I'm happy to be here.
Fantastic. I'm going to let you take it away.
All right, great. So we're pleased to be here. You can see our safe harbor. I'm sure you're familiar with that one. So what I'm going to be talking about today is about photonics. So I thought I would say something about why photonics is important. Basically, photonics is about creating, detecting, and manipulating light. And the fact is that most communications in the world are carried on light beams, specifically laser light beams. For example, in cloud computing, data centers, and network switching, virtually all of the communications between the servers and server racks and other racks in the data center are carried on fiber optic cables. Photonics devices are on either side, either end of each of those cables. Same is true on the far right for 5G. Much of the communications using 5G is actually carried on fiber. The two biggest areas that are coming up now are the use of optics and photonics in artificial intelligence, and artificial intelligence embedded in edge applications, which are applications that are closest to the user. The ability to bring a computing platform and an inference engine in the case of artificial intelligence to the user rather than using the cloud. So our business really is to become a global leader in integrated photonics. I will explain what integrated photonics is. We've been for several years a development stage company, and we're now moving into actual product development for customers. And so when I show you the roadmap, you'll see that we're right at the inflection point in which we're going to be able to provide a lot of data to customers, which is what they're looking for, engage in design work, and eventually be designed into their products and generate significant amounts of revenue. So in short, POET has done for photonics what semiconductors did for electronics, which is to lower the cost and increase the performance of these devices. So what you see on the left, many of you may not be familiar with them, but we used to have TVs with vacuum tubes in them until the advent of the semiconductor, which is on the right. And our optical interposer is essentially doing the same thing. It's taking devices that were once like vacuum tubes and putting them into a semiconductor form and building them at wafer scale, hundreds at a time rather than just one at a time as you build a vacuum tube. We call our invention the optical interposer platform. And while the schematics are shown on the left, what you see on the right is the size of our platform, which is miniaturizing much of the photonics in the device. What's in this device are all of the devices, or all of the components, I should say, that have to do with light. Creating light using lasers, moving the light around in the device. Those lines that you see on the right are what we call waveguides. Detecting the light, and a few other things such as multiplexing the light, which means we're putting the separate light beams together into one beam to send down the optical fiber, and doing the opposite at the other end, which is to demultiplex the light into its various wavelengths so that you can read the data signal off of that light beam. This represents a good example of what we're actually physically doing. Conventional transceivers, which is the device that both transmits and receives light signals at the opposite ends of an optical fiber, include both photonics and electronics components. The photonics components include things that I mentioned earlier: lasers, detectors, modulators, multiplexers, and so on, and some optical components like mirrors and prisms. These barrels that you see on this typical 10G transceiver module were made one at a time and have individual components within them. Each has to be tested, each component has to be tested when it's placed into that barrel and optimized for the connection between one component and another. We don't have to do that in the POET optical interposer. The POET optical interposer allows us to place devices on top of the interposer on the top plane of a semiconductor wafer using standard machinery that's available for semiconductor manufacturing, and to place those devices in a way that doesn't require the active testing of the device. What this does is it allows us to do the entire process at wafer level and to produce at the end a chip that includes all of the photonics components. These are actual 3D images, photos of the device itself, which is quite small, as you can see from prior photos. It fits within a dime, a US dime. So we have on this 4 25G DML lasers, 4 monitor photodiodes, a MUX, and a fiber attach unit, all of which can be used to simply replace the existing high cost and high labor components that are currently provided by component suppliers to transceiver manufacturers. POET went farther than that, though, in thinking about what this POET optical interposer was going to be. We took the approach that if we were entering a market in technology, we had to produce something that was truly differentiating. And so we compare ourselves at times to an iPhone, which is both an integration device, that is, it combines lots of different functions or capabilities into one device, but it's also a platform. It's a platform for the creation of other applications that are sold at the App Store. So we're a platform in the same way, in a similar way, in which our device can be used for multiple generations without having to start from scratch again. Say, for example, if you're going from a 100G transceiver, which we showed you there, to a 400G transceiver, you can actually use the same platform and simply replace the lasers and detectors. So we're able to span generations, and we're able to span applications, including photonics applications, 5G, and other photonics applications in data centers. What are the benefits? Well, first of all, dramatically lower cost. Compared to the devices that we're replacing, we can offer these devices at 25 to 40% lower cost. Also, a major factor is that for the same number of units, the capital investment that we make in making the entire device is only 10% of what others spend on the machinery and equipment that they need to create their devices. We have a 50 to 90% reduction in the real estate needed depending on the device. We build them 100 at a time, hundreds actually at a time, 500 at a time, not one at a time. And our planar app architecture really allows ease of production and flexibility in design. And as I said before, we're a platform technology. We have a lot of proprietary trade secrets and patents, and I will show you some of those in a moment. We have all of these products in development. We're truly at an inflection point where we're going from technology to actual product development. And each of these products is for a specific customer engagement, as we list here. A couple are speculative builds because we know that specific customers will be interested in them if we buy them. Our product roadmap shows that we're right at the point of delivering prototypes. And what we're able to do with these prototypes is collect a lot of information, data on the performance. And what we've seen so far along all of the key measures of the performance of these devices is that we're exceeding our own expectations. And by the end of this year and in early Q1 in 2021, we'll be able to provide samples to customers. And we expect that we will have significant customer evaluations going on. In fact, back in 2019 into 2020, one of the major networking companies in the world actually paid us to validate our technology at different steps in which they knew, based on their experience, were major challenges to suppliers of integrated devices. And we passed that successfully, and we're still engaged with that customer for particular products in their own roadmap. Transceivers has come up. That's our initial target market. We're developing 100G 200G and 400G transceivers, 400G being the latest generation. So you can see that this market is large in the billions of dollars as represented by the served market. Some of the other markets that I mentioned, such as edge computing, dwarf this by a factor of 10 or more. And you can see that we're selling to many of the customers that you would recognize. Many you may not recognize, because about half the market for such products is in China. We have 30 employees, a very substantial patent portfolio, and one joint venture company that I wanted to mention, which is that we signed a deal with Sinan IC, part of Sinan Optoelectronics, back on October 22nd. We will own about half of the joint venture company. It's valued at US $50 million. Sinan is putting in the cash to build out an assembly facility, and we're putting in some of our intellectual property. We have, as a result, a one-stop shop essentially for going from design all the way through to production. So in summary, we've successfully transitioned from technology development to product development in the second half of 2020. We have data from prototype devices that are assembled at wafer scale, as we've shown you, with performance that exceeds our expectations. We've got our new joint venture, Super Photonics Xiamen, which provides the ability to meet customer demand. And in the United States, we're still largely unknown. So if you have any questions about what we do, please contact me at the address here.
Fantastic. Thomas, thank you so much for this presentation. Everybody, that is Poet Technologies, the leader in photonics. I'll be subjective about it. But Thomas, really appreciate you all being here, your time, and obviously an incredibly unique company. And we're very happy you were with us.
Terrific. Thanks very much.
Thanks, Thomas. Be well. All right. That was an awesome presentation. I learned a lot. I hope you all did too. They are listed again, OTC. Their ticker is POETF. All right, moving right along. Next up is Leslie Klein, the founder of CCOM Satellite Systems. They are listed OTC. Their ticker is CYSNF. Leslie, I see you already. Looks like you are a Zoom master, my friend. How are you?
Pretty good. How are you, Elliot?
I'm very well. Good to have you, sir. I'm going to let you hop right in and get going on CCOM.
Thank you. I'm going to try to share the screen. You can let me know if I'm successful.
Yes, sir.
Oh, you have actually something there.
Yep, I see.
Can you see the screen?
I see it. I do.
Okay.
I see the whole screen. So if you want to share your presentation, yep, there you go. That's perfect.
Sounds good. So let me launch right into it. I'm going to start with the first slide, which just gives a background on the company. We are a Canadian publicly traded company with 34 employees based in Ottawa, Canada. We have been in business 23 years, going on 24 years. We manufacture a proprietary satellite antenna system that has been sold all over the world over the last 20-some years. The company is listed on the Toronto Venture Exchange and on the OTC, as the slide indicates. We pay dividends. We have a market cap or at that particular point in August of about $112 million Canadian. And the company is developing a highly disruptive antenna technology, which everybody these days is talking about, from SpaceX to Amazon and Facebook, because they are all covering the world with antennas, with satellites that will need the type of antennas that we are developing to connect the billions of people who have no connectivity. So I'll tell you what we do today. Today, we are a company that has sold about 8,500 antenna systems. These are parabolic antennas, so one generation back from what we are developing. We sell through resellers. We have over 500 active dealers around the world. We are in 106 countries. We have a multiple number of different products The company has close to $22 million of working capital. It paid out about $15 million of dividends, and it has been paying it for 38 consecutive quarters. The company has no debt, and it's very healthy and is continually profitable. The vertical markets that we address are really just about everywhere where telecommunication or internet access is communication of any sort is required, and specifically where only satellite can be used in areas where there's no infrastructure, ground infrastructure, and the only way to get communication is via satellites. So our antennas make that happen. As you can see on this map, we are in, as I mentioned, 106 countries with over 8,000 products deployed. Very interesting situation in New Zealand here, where you can see the whole country is covered from end to end with our antennas, because every fire station has one on their fire trucks. So they are extremely essential products to communicate, and they're life-saving products that are sold all over the world. We don't sell directly. We sell through resellers, over 500 resellers which are located in all these countries, and we sell to them, and then they take care of internet connectivity, they take care of maintenance, installation. So we are pretty much out of the loop. We also don't manufacture anything. Everything is outsourced, and we are able to remain small and profitable as a result of these decisions that we made early on. The company received a number of awards. I'm not going to go through them. You can probably have access to this presentation. I just want to show you quickly here the number of systems, the type of antennas that we manufacture. Some of them sit on cars. They're called the drive-aways. They fold down at the press of a button, and then you can drive away, stop, push a button, open the antenna, and within 2 minutes, you are connected to the internet. So it's an extremely user-friendly product and can be deployed by just about anybody. The flyaways are something that you can carry either on your backpack, like this one here called a Mempack, or you can put them into multiple transportable cases. They all come out, they come apart without any tools, can be put together without any tools. And most of them are made from carbon fiber. They're relatively light and easy to transport. So the next slide will give you an idea of what a Mempack or a backpack antenna looks like. All of this fits into this backpack. It's under 20-some kilo and it can be easily transported by one person, put together in 5 minutes and deployed in seconds. We have sold over 200 of these to SoftBank in Japan, and we are selling quite a large number of them this year. And in the new fiscal year also, we have an order for $3.4 million worth of these backpack antennas. So to just give you an idea of what it looks like, here you can see in Japan a disaster where this antenna actually is replacing a cellular tower, and it becomes a cellular backhaul, so that if you lose a cell tower, these antennas can be rapidly deployed for cellular backhaul and actually act in a disaster as an instant replacement of a cell tower. So I'll run through some of the vertical markets. It's oil and gas, satellite news gathering, emergency response, telehealth. We have mobile surgical units. We have mobile breast cancer screening units. We have the military is a fairly large customer for communications, obviously, in remote areas. We have mobile telecom units, as I mentioned, for cellular backhaul. And we have e-commerce applications like passport printing offices, pension issuing offices, and many other tax offices that are on wheels in all parts of the world. We have mobile banking. These are ATM machines on wheels, essentially dispensing cash, or in some places like in South Africa, they are refilling cell phones with cash so that you can walk in there, refill your cell phone, connect to the bank, and actually continue shopping with your cell phone. So many, many different vertical applications, mobile education, events, we have exploration, we have trailers where these units have been installed in. And the big thing that CCOM has been developing over the last 5 years is this electronically steered phased array antenna. As you can probably know or heard, Elon Musk and Bezos and Zuckerberg and even Gates are all involved in launching tremendously expensive constellations. And these are consisting of hundreds and thousands of satellites that will circle the Earth and will be providing high-speed internet to the 3.5 billion people who have no connectivity. These constellations, the SpaceX is about 1,000 satellites now, are already up and running. And CCOM is developing a phased array electronically steered antenna that will be able to access these satellites very easily and will make it possible for these antennas to be very small, very thin, conformal, and able to sit on the roof of a vehicle or a plane or a boat or a train. So I'll show you what it looks like. You can see there's a Canadian quarter there, which is probably the size of a US quarter, and that's one antenna module. And if you combine these antenna modules, you can build a panel that is flat and thin and allows electronically to track a moving satellite constellation. So it can track up to 5 satellites simultaneously, and you can build them as large or as small as required. They're also conformal, as I mentioned. So essentially, it allows you to tile these small antennas into any shape, either squares or triangles or a fuselage type of a shape. And you build them up basically by combining these little elements into larger ones, and you're building up an actual antenna system. You can see here on this picture a parabolic antenna that is currently something that most people are using. And then you can see a transmit and receive panel right beside it. So these are the things that are being tested presently and will be actually tested over satellite in the next month or so. And then we will be producing a report of its performance. And hopefully that by the end of the year, we will be in production with these electronically steered phased array antennas. And I'll just quickly go through here just to show you what it looks like on a car, what it looks like on a train, and what it would look like on an aircraft. The other thing that we got involved with this year is a drone type of an application where a consortium called the HEFPA, which is a high efficiency millimeter wave wireless communication consortium of which CCOM is part of, because we have a patented phased shifter technology that will be providing this type of a communication to a drone that will displace up to 400 cell towers on the ground. This drone will fly at about 20-kilometer height and will be able to actually provide cellular coverage up to a 300 or 400 kilometer radius. It will also be able to communicate with a satellite and then communicate down to the fiber network to complete the entire connection. So the company is developing something revolutionary, both for cellular markets and also for the satellite markets. And this is really essentially my presentation. I don't have anything else that we can discuss other than to have any questions that you may have. And thank you very much for your attention, and I'll be happy to answer any questions you may have.
I mean, I know I have a question. Are you the answer to us not having to use airplane mode anymore?
Probably.
I will buy stock immediately. That's incredible. In terms of the emergencies, the disasters that you all, or that you say that, you all can take the form of a cell tower, right? Have you all had a use case of that up to date, or is that something you can talk about?
No, we have, of course, we had the Fukushima disaster in Japan, if you remember, when the nuclear reactor exploded there and wiped out literally thousands of cell towers. We replaced them all within a couple of weeks. Wow. They all were delivered and installed and deployed, and they were temporary cell towers. And we have pictures on our website of what they look like. It's a combination of a GSM a tower on a vehicle and with our antenna on a vehicle. And now you have a fully mobile cell tower.
So you said the military was your largest client? Or
no,
can you say that?
Oil and gas companies are our largest clients.
Oil and gas.
Yeah, for exploration.
That makes a lot of sense.
Yeah, all
So-
those military or telephone companies are the next largest customers.
Fantastic. I would imagine, that this kind of reach for renewable energy, does that worry you or is that exciting to you?
No, it's, I mean, we are essentially a solution provider to people and companies that need communication anywhere where they go to. So it is, renewable energy is great because we can use solar powered, panels to power some of these antennas and deliver solutions in areas where there's no power available other than from a vehicle or from a train or from a bus or whatever. But solar power is great because it enhances our ability to stretch the delivery of this technology to other customers.
Sounds to me like there's a lot of potential here. Leslie, really, really fantastic presentation. Very excited to see where you all start to move in the next few years as well. Thank you so much for being here.
Thank you. My
All
pleasure.
Right. Be well. All right. That was a fantastic presentation. Very insightful, very, fun may not be the right word, but I have fun listening to these presentations. And I thought Leslie did a great job at going through exactly what CCOM Satellite Systems does. Again, they are listed on the OTC. Their ticker is CYSNF. Very cool company. Let us keep it moving. Again, track 2, right on time. These presenters are nailing it. My favorite. Looks like I owe everybody some bourbon. All right, next up we have Mike Belardi, the CEO of Slinger Bag. Probably the coolest name we have had to date, Slinger Bag. Mike, let's make sure we get your video and mic on there. Looks like your mic is on. How are you, sir?
Very good, thank you. Elliot, how are you?
I'm well. I am very well. It has been a long day. I hope I got your name right. I have not had a good track record today of names. It has been rough. But if I got yours, I'll put yours in the wing column.
Yeah, you got mine perfectly right. Thank you.
Fantastic. Mike, I'll let you take it away, sir.
Okay. Okay, so good afternoon, everybody. Thank you for joining the Slinger Bag presentation. My name's Mike Belardi. I'm the CEO of Slinger Bag. We are a fully reporting, publicly traded company on the OTC market, and our ticker symbol is SLBG. Please note, take a look at our disclaimer as I go through this presentation. Any forward-looking statements, please refer to this. You can find more information on our website, slingerbag.com/investors. Slinger Bag is a company grounded in the sports industry. We are focused at the moment on ball sports and specifically on tennis. We produce tennis ball launchers or tennis ball machines that allow players of all ages, of all abilities to get on court anytime, any place, anywhere, without the need or hassle of finding a playing partner. We're a startup company. We've been running for about 18 months. And like any good startup company, the most important thing is the strength and the credibility of the management team. So my team, myself included, our C-suite team, I've got over 100 years cumulative experience working in the global sports industry. Through companies that you can see here, like Wilson or Prince or VF Corporation, Coleman, Outdoor, Amer Sports. So, we feel that we've got a very strong record of success in building companies, in building brands, and introducing innovative new products to these markets. We're supported by a small team of people who are expert in the public market sector, whether that's in finance, in legal, or in investor relations. And we also have a very young team of people who are highly focused on driving our brand message through all types of social media, which I think to date we've been pretty successful at. I think the key thing for any business is to drive its success across the globe, and we're very much focused on delivering Slinger Bag products to every tennis playing market across the globe today. In terms of Slinger, the product itself, first of all, it's there's 3 key criteria for Slinger Bag. One is transportability. And you can see here on the left that it'll actually fit in the trunk of a smart car. The other is versatility, meaning that this is to me, it's like a golf bag. It's a product whereby you can put all of your tennis gear into the bag itself. It stores your rackets, your footwear, your clothes, your drinks bottle, your valuables. It'll even charge your cell phone for you while you're playing tennis. And it's essentially a trolley bag, very much like a high quality trolley bag you might take on vacation with you. Very good functional wheels, very, very robustly built, super high quality, durable. And in the bottom of the bag, it has a tennis ball throwing machine or tennis ball launcher. And the top half of the bag has a tennis ball feeder space, which will hold anywhere up to 144 tennis balls at a given moment in time. So transportable, versatile, and then the third most important one maybe is it's highly affordable. The tennis ball market traditionally around the world, there's a number of big brands who are working in this sector. Tennis ball machines can vary from $1,000 to $10,000. The basic Slinger bag will sell in the US for $550. And so, rather than targeting institutions or tennis clubs directly, actually Slinger bag is targeting the avid tennis playing consumer in the market as our core consumer. In terms of launching the brand, way back in 2018, seems a long time ago, but Slinger launched its concept on the Kickstarter platform and Indiegogo platforms. The founder of the company is an Israeli Canadian. He's an avid tennis player, one of these guys that is able to play tennis a few hours a day. He tried his local tennis club ball machine, found it very frustrating to get out on the court and power up and use, and came up with the concept of putting a tennis ball machine into a trolley bag such as the Slinger bag. He tested that theory, as I say, on the Kickstarter platform and Indiegogo platform, and over a course of about a month, raised $1 million in pre-orders and sold around 3,500 of these. So really, testifying his belief in the product and providing the platform and the credibility of the product to take it forward. At the beginning of 2019 is when I got involved with the company. I first and foremost, I saw the video that you can still see today on our website at slingerbag.com. I said to myself, okay, if this thing is as good as it looks and performs as well as it can, then it's going to be a big thing in the tennis market for sure. I think within 48 hours of seeing it, I had met with the founder. I had tried it myself, found out that it actually did everything that it said it would do. And, another 48 hours later, I'd agreed to become the CEO and take the company and build it up from scratch. The first task was to source the product in China. And then because of all of my connections in sport, I was able to identify the right vendor partners to do that. And over a course of about 12 months, and going through about 8 different iterations, we finalized the product around about November 2019 that actually went into production. And the first 5,000 bags were produced and shipped and delivered to the Kickstarter and Indiegogo backers in the spring of 2020. The demand for Slinger suddenly grew exponentially, and in and around May this year, we decided to try and capture a lot of that demand through an order campaign that we set up just in the United States. As of today, since the middle of May, we've now taken orders for about $3.5 million, and we've delivered about 60% of those. Our issue, has been building inventory fast enough to meet the rate of demand that we are seeing on a daily basis. Somewhere in the region of $25,000 a day are being spent by consumers in the United States on Slinger bags, which is an incredible success story for us so far. Slinger bag is a bag for every kind of tennis player, whether you're a beginner, a competitive player, someone who just wants to get on court and work out for fitness, or someone who wants to go and drill and practice certain particular aspects of tennis. it'll work for you. It's a very simple machine to get on court and set up. Takes maybe 1 or 2 minutes to get it working. And the controls allow you to vary the speed, vary the frequency, vary the angle of the ball in terms of its height. That's in all of our experiences, that's good enough for some of the best players in the world, and it's also good enough for some of the young kids just getting into the game today. As I said earlier on, we are focused on the what we call the avid or the regular tennis players in the market. Globally, there's 100 million tennis players, and 20 million of those tennis players play tennis on a regular basis, meaning they play probably once a month or more than that. In the United States alone, there are 5 million regular tennis players. So we have a very large, significant addressable market just in tennis, somewhere around about $10 billion at wholesale. Of course, there is a larger, wider opportunity that Slinger will address over the coming years. And that expands the addressable market into somewhere close to $150 billion. As we look at sports like baseball and softball in the United States, or cricket internationally, or squash, or other racquetball sports. We'll be looking at those categories and producing products to translate our transportable, versatile, and affordable technology over into those global sports categories as we move the business forward over the next few years. In terms of how we go to market in the United States, we are managing the business directly ourselves as a direct-to-consumer business because it's the world's largest market when it comes to tennis. Outside the United States, we have set up already a very large network of exclusive distributors country to country. The largest distributor we have is a European distributor. It's actually a tennis company called Dunlop. They've signed a 5-year agreement with us that has a value to Slinger of about $100 million. They're covering 9 important and very large markets in Europe. We also have a very big company working for us in Japan called GlobeRide. And as you can see on the right there are other exclusive distribution partners covering most areas of the world, right down from New Zealand and Australia, in the Pacific, in the South Pacific, right up to the Nordic countries, and recently we've signed up a new distributor in India as another example of the kind of reach that we're having with the brand. In terms of our immediate addressable market, as I mentioned, the tennis market is incredibly large. We're focused on building Slinger in each of the key markets around the world, trying to reach all of these 20 million tennis players. If I could speak to them all individually, I know for sure that every single one of them would be interested in buying a Slinger bag. And so our challenge is to get out there and have them experience Slinger. We're doing that through very aggressive online social media advertising, on Facebook, on Instagram, on YouTube. And, we have at the moment a conversion or a customer acquisition cost, which is around about $40, which is dropped since we started in April. It started out as a little over $100 and it's down to $40, and it will continue to drop as we expand our reach. Our constraint currently is just, we don't want to oversell inventory because we're constantly sold out. And today, at the moment, our order site is talking about a 60-day lead time. Of course, in the United States and around the world, there are other versions of tennis that we're also planning on addressing. Pickleball is a huge sport in the United States. So in the middle of next year, we'll be launching a pickleball version. Padel is another huge version of tennis in international markets, and that'll be coming later in 2021. Soft tennis in Japan. And as I mentioned earlier, we're looking at expanding into baseball and cricket as we go, probably in 2023 and 2024. We also are finalizing at the moment, as we speak, some partnerships with some high-tech companies in the world of sports, focused on artificial intelligence. And we aim to be offering an app to all of our users, which will allow some very sophisticated, never seen before analytics that will be available to the tennis community. And we'll be offering this as a SaaS offering, and with that, obviously generating some recurring revenues for Slinger as we go forward. We see Slinger as a really high-tech company, focused on, providing obviously first and foremost excellent equipment, but also supplementing that with, a high-tech offering of analytics and other products that will work nicely together with Slinger Bag for the users going forward. In terms of our financial projections, these numbers are based purely on the tennis market. We're looking to grow this business into, around about a $50 million business over the next 5 years. In 2020, we are currently on track with our financial projections. In fact, later this week, we'll be filing our quarterly return, our quarterly results, 10Qs. That'll make pleasant reading in terms of, the direction the company's been taking over the course of the last few quarters. We're moving in the right direction, and we're in line with all of our expectations. So everything is good in that respect. Of course, the opportunity for Slinger is to grow way beyond this with the addition of the different sports and the bigger addressable market that we'll be opening ourselves up to. And also, of course, none of the projections for our SaaS related products are in any of these numbers at the moment. So that will only be an incremental gain as we build out that project over the next 6 and 12 months. I think, in summary, Slinger Bag, in my mind, my analogy always is that it's like a golf bag. If you're a golfer, you keep the golf bag in your car. You end up going to the driving range, hitting a few golf balls when you have an hour. And for the first time ever, we're offering that same opportunity to a tennis player. So, that's what makes it really interesting to the players themselves. It's going to become a staple piece of tennis equipment, just like rackets and balls and other tennis gear. And, nothing like this has ever been offered in the market before. And so, and we're seeing through the demand that we're seeing around the world, not only in the US, but everywhere we go, there's a huge demand for Slinger products. And that's what's going to drive these numbers and our projections over the next few years. With that, I'll hand it back. Elliot, I don't know if anyone's got any questions.
There was one, but I think it's more of a reiteration on how much a Slinger bag costs.
Yeah, so the basic bag itself is $550. What we're selling at the moment is a kit, which includes a few accessories, and that sells for $675. As we get into next year, we'll also just be offering the basic bag, which is $550.
I do have a more personal question. Are you really good at tennis? I feel like you must be really good at tennis.
I used to be. So when I've been a tennis player, a professional player. I've been a tennis pro. I've worked for tennis companies. So tennis has been a big part of my life, and I'm fortunate to be in a position that I get to work in my hobby. Which is great fun.
Well, all the Slinger bags available to you. This was very cool. I also learned what pickleball is today. I'm going to actually have to go look at some of that as well. Mike, appreciate you being on, sir. Really, really cool company. You are the epitome of doing what you do very well, it seems like. So really appreciate you being here.
Thanks, Elliot.
All right. Be well. Talk to you soon.
Thanks. Bye-bye.
Fantastic. Slinger Bag, really cool company. Check them out. Obviously, huge room for growth. They are doing it in a very logical and intelligent way, it seems. Definitely going to be on my watch list. I'll tell you that. All right, let's keep it moving. Next up, we have a cool company, nDivision, that we are going to welcome Alan Hickson, the CEO and founder, as well as Lane Sorgan, the Chief Revenue Officer. Great name, Lane. I obviously approve. Looks like they are not popping over yet. So I do want to mention we have 2 tracks of content. Anything that you all may have missed today, you can catch on the YouTube channel, on the YouTube playlist, both after this, right now, whatever you choose. We also have a full day of 2 tracks tomorrow. So much value, so many presentations. Really excited for that one as well. I think we're gonna offer some exciting panels like electric vehicles, your guide to going public, led by our title sponsor Markham. I think Webull will be presenting tomorrow on their new crypto product. It's just going to be an exciting day, I think, all the way around for market education, small cap presentations, and industry focused panels. Very excited about that. We have left today, I believe, 4 more presentations. nDivision, looks like we have the Pine REIT, KABN, and Siyata Mobile. So 4 amazing companies on this track. We will be getting, oh, looks like they're coming on now. As I was saying, I don't even remember what I was saying because Alan's face popped on and distracted me. Jeez, Alan. Welcome, sir. How are you?
Hey, Eddie. Good. How you doing?
I'm well. We talked like 2 years ago. I don't know if you remember that.
We did.
It was a while ago. I was like, you know what? We'll have a small cap conference eventually. We'll get you involved. 2 years ago. Here we are.
There you go.
I'm pumped you're with us. With that, I don't want to cut into your time. I'm going to let you get to it, sir.
Okay, cool. Let me launch our presentation. Let me know when you can see this. Does that come up, Elliot?
I have not seen it yet.
Okay, hold on. Am I missing something here?
It might be
okay, let's try share screen. That would help. Okay. I'm a Teams guy, so just bear with me sharing that screen.
You're not the only one. You are not the only one. Hey, there we go. It looks like you are sharing. It is loading. There it is. I'll let you take it away.
All righty. Let's see if this will launch. All right. How's that looking?
Beautiful.
All righty. So Alan Hickson, CEO of nDivision. Our ticker is nDVN, and we're on the OTC QB market. I draw your attention to forward-looking statements. So we have disclosure side over here. Okay, getting into the presentation. I was the CEO and founder of nDivision back in 2011. This is the 3rd time that I've either founded or run a technology company. Back in the UK, I founded a business that grew quite quickly, went from startup to about 80 million a year in its first 5 years. And there's been a common theme to all the businesses that I've run. We've partnered with big IT companies, the likes of IBM, Dell, more recently, Microsoft. So what's the business model? We're in the business of supporting equipment that customers have either in their data center or in the public cloud or the network that connects it all together, or the end user help desk required for their employees. We're doing that 24/7, and it's a completely remote service, so we can cover the whole of the US. In fact, our larger customers are large enterprises that are international in nature. Even though they're US businesses, they've got operations in 32 countries across the world that we support for them. We're laser focused on generating recurring revenue. So all the services I just described are long-term contracts, typically 3 years or longer, and generally annual renewal. Sometimes they'll renew again for the initial term of 3 years. 90% or more of the revenues that we have are recurring revenues. The other thing to note is that these contracts are very cash flow positive. We invoice for the service we provide the month before we provide the service. So in January, the service we provide to customers, they'll have received invoices at the beginning of December. Everybody pays us net 30. I'm pleased to say nobody's a late payer. So by the time we provide the service, we've already had the cash in. So unlike a lot of services businesses that are consulting based, the faster they grow, the more cash they require. The faster we grow, the more cash we actually generate. So what differentiates us? So we use automation to provide our managed service. And fundamentally, automation is software to replace tasks that humans would normally carry out. Last year, to give you an idea of scale, we fixed roughly 500,000 incidents across our customers' infrastructure, either completely with automation or automation's assisted the human. We think that that would have normally cost us about 1.3 million in labor costs for technical resources. So a massive cost reduction. And when we say we automate, we think we're market leaders. We're fixing between 70 and 80% of infrastructure incidents, no humans involved. By way of comparison, if you take a large enterprise account, those accounts are typically in the 10-20% range of automation. Even large service providers are only really 20-30%. So the net of it is that it's a much higher level of service. It's faster and more accurate than humans. And in price terms, software is cheaper than people, even people out of India. We're typically 40 to 60% less expensive than customers doing it themselves or paying someone else to do it, another managed service provider. Very high level of customer satisfaction, so 95% or more customer retention. Okay, so some quick examples, simple one here, disk space fills up, virtual engineer as we call them, sees that there's a problem, reacts to it, expands the disk space, closes a ticket. If it's had to do it, say 3 or more times in a 30-day period, it'll escalate to a human, so you might want to do some root cause analysis, figure out why that's happening. We've got an oil and gas company with rigs around the world in the oceans. A virtual engineer monitors wave heights. If they exceed 8 feet, they'll notify the rig and IT support there could be an outage. When the weather subsides, if the comms hasn't been restored, the virtual engineer will ask a human to restart the service, or if they're API'd into the actual service, they can automatically restart the service. So we think we're at an inflection point. We think we have all the components required to scale our business now. We've been around for 10 years, as I said, a strong leadership team, over 5 million in recurring revenues, getting very close to covering all of our operating costs with recurring revenue, proven technology, and enterprise class systems and processes. As I said, we're disruptive with our pricing, 40 to 60% less than the competition. We actually have a rate card approach. Customers can go to our self-service portal, enter a few quantities, and get instant binding quotes. Dell has been reselling our services for about the last 8 years. We're adding more resellers, and we're launching social media marketing. But what's really exciting is we've been cultivating a partnership with Microsoft over the last year or two. And there's multiple strategic opportunities over there. So with that, I'm going to hand over to Lane Sorgen, who joined us from a 24-year career at Microsoft as our Chief Revenue Officer.
Okay, can you hear me?
Yep.
Okay, great. Thanks, Alan. So I retired after a very successful 24-year career at Microsoft. I served in leadership roles in almost every function in the company. Microsoft's a very large company. So as I began to look at what I was going to do over the second half, I knew I wanted to become part of a company where I could utilize the skills that I learned, and I wanted to leverage the people that I met. Really, I think you could say I really wanted to channel all that history into starting with a smaller company, and actually building a company into a substantial enterprise. And I believe in nDivision. I found that. Right after I retired, an associate of mine at Microsoft asked me to take a hard look at nDivision because of what he was seeing in the channel and the opportunities for Microsoft. So I jumped in. I actually took about 2 months of due diligence and enthusiastically, I guess you could say, joined nDivision. And the short of it is this: they have an extensively proven platform with customers in 32 countries. They've got unprecedented customer satisfaction. It turns out that extreme automation produces extreme customer satisfaction. But most important, nDivision was addressing the single greatest sales obstacle I faced at every stage in my Microsoft career, with every customer, every size, every industry, you name it. There were competitors like Cisco and NetWare, Oracle, later years, Salesforce, Google, AWS. The competitive challenges were tough. But without question, the greatest challenge we always had was the challenge we had with IT budgets. You see, inside of tech sales, there's this never-ending tug of wars between IT operations and innovation investments. You know, customers of all sizes, they spend just very small portions of their budget on innovation. And that's because, you know, even in a well-run company, like 80% of what they spend is required just to run the technology that they already have in place. And then if starting about 10 years ago, this tug of war began to increase. You know, it was a battle, and this primarily because companies were starting to contemplate these highly disruptive business models. You've got Uber and Skype, Netflix. If you're in the retail industry, you've got Amazon. And companies were panicking, thinking, okay, what do I need to do to transform so that I can compete with the likes of these sort of companies? And so you're probably asking, so, you know, what's nDivision's role in this? And this is why I came to the company. And that is, you know, we've automated operations to such an extreme that our customers typically reduce operations costs by 40 to 60%. That's a really large chunk. I don't know of anything that, and I've never seen anything in my 24 years that actually has that substantial an impact. You know, customers could obviously pocket the savings, but they don't, right? Kind of proving what was my point earlier. They use it to fund incremental innovation. And then once nDivision is in there managing operations, we see them time and time again. They look to automation and expertise, best practices, and then they further accelerate cloud adoption, which in turn, you know, it's a great positive cycle that in turn it facilitates more innovation. And so if I kind of net it out, I believe that nDivision is uniquely positioned as a service provider in that both sides of the tug of war get to win. And as we look forward, this experience I'm telling you about with tug of war, it's actually shared by every customer-facing employee of Microsoft. I would say every customer-facing employee of any tech sales company. You know, Alan and the nDivision team had started engaging with Microsoft. They stirred up a lot of interest, but Microsoft's a huge company, you know, 160,000 employees or something. And it can just consume a company like nDivision without knowing, if you don't know where to go and how to go and, you know, with whom to engage. And that's why I'm here. And so if I kind of net out the, you know, here's my mission. I'm going to take the advantage of the inherent scale in our national business model. I'm going to build a tactical and efficient sales model, marketing machine. It will be what, and it is already starting to be what I wanted when I was at Microsoft engaging with partners. And it's actually going to align with the Microsoft engagement. And I'll show them where to go. It'll also, if we need to go to AWS or Google, we can do the same thing. But for now, it's 100% Microsoft. So also, then I'm going to take a surgical approach. We're going to surgically navigate all of Microsoft Salesforce. We're going to go in. We're actually going to expand. We've already started the process in several parts of Microsoft, but we're going to expand it nationally. We will actually cross all segments. We're going to go into SMB, corporate, and large enterprise. And then really the biggest part of it on the long term is in parallel, we're going to advance our customer messaging. You know, the thing is, we already have a complete product. It's tried, it's proven. You know, we're literally just, as I came in, you know, the company's teed up and is ready for a substantial sales and marketing effort. And we're going to put that in place. And so we are going to grow it into a substantial enterprise, and we're going to do that whereby we are able to create significant shareholder value.
Great, thank you, Lane. So just to wrap up, we've got Microsoft and Lane leading with our managed services. We've got disruptive pricing using automation, AI, and cognitive. A self-service pricing makes it easy to drive exponential growth. We've got a ton of recurring revenues, 90% plus, very high customer retention rate. And we think as we scale this business, we're going to be throwing off something like 30% adjusted EBITDA. So with that, I'll close. And if we have a few seconds left, if there are any questions, I'll happily take them.
Let me check the chats here, gents. Yes, there is one. Just really quickly, one question. What are the industries and what functions do you find the strongest adoption of your automation services? And how do you see that shifting in 2021?
Yeah, so the nice thing is we're cross-industry. A server's a server, network's a network. You know, we can play anywhere. We haven't played in the Fed space yet because of, you know, the clearances that are required, but we can play anywhere really. And the universal need for our services, we need to cut costs, we need to innovate. So any customer that has that as a priority, which is everyone pretty much, they need what we've got.
I love that. And your retention rate is incredible. Props to you guys for that.
Thank you.
Alan, Lane, it's a pleasure to have you both with us. Please do reach out to nDivision, OTC. The ticker is nDivision. Awesome company. Gentlemen, again, thank you so much. Stay healthy. Looking forward to working with you guys again soon. And please enjoy the rest of the conference.
Thanks, Elliot. Thanks, everyone.
Thanks, Elliot.
Be well. All right, y'all. We are moving right along. We have 3 more presentations left here. Next one I'm very excited about. We have Matt Partridge, the Senior Vice President and Chief Financial Officer and the Treasurer of CTO Realty Growth, also known as Pine REIT. All right, Matt, are you with us, sir? Let me see if I got you there. There you are, Matt. How are you?
Hi, Elliot.
Good to see you. All right, sir. If you want to share your screen, if you have something to show us, there it is. I'm going to let you hop right in. Excited to have you.
All right, let me make this full screen really quick. All right, thanks, Elliot. As Elliot said, my name is Matt Partridge. I'm Chief Financial Officer of Alpine Income Property Trust, ticker symbol PINE on the New York Stock Exchange. This presentation is available on our website, and my contact information is on the second page here. Alpine Income Property Trust is a publicly traded real estate investment trust. We're a REIT that focuses on owning and operating a portfolio of high-quality single-tenant commercial income properties. As a REIT, we pay out 100% of our taxable income in the form of dividends. So dividend policy for us is extremely important, and it's an important component of our total shareholder return. Our portfolio today is 46 properties across 18 industries in 17 states. 82% of our tenants are credit-rated tenants, meaning that they have a credit rating from one of the major credit rating agencies, S&P, Moody's, or Fitch. The weighted average remaining lease term of our tenants is 8.5 years. So we have a diverse and growing single-tenant portfolio. It's about a 72%, 28% split between retail and office, with 76% of our base rents in larger metropolitan areas. We've had resilient performance during COVID-19. We've collected 100% of our rent during the third quarter as well as in October. And we believe we're trading at a pretty compelling discount to net asset value with an implied cap rate on our operating income of 8.2%. Currently, we're paying approximately 5.5% dividend. With where the stock's trading today, that's a little bit higher. It's probably closer to 6%. And we are externally managed by CTO Realty Growth, which is another publicly traded REIT on the NYSE American, which I'm also CFO of. We are focused on investing in income-producing properties that exhibit strong real estate fundamentals, and we focus on assets that are leased to industry-leading tenants. So this is a good representation of the type of tenants we target. Currently, we do business with Walmart, Walgreens, Advanced Auto Parts, 7-Eleven, Hobby Lobby, Dollar General, and a lot of these other tenants on this screen are tenants that we're focused on partnering with in the future. These are the acquisitions that we've done year to date in 2020. As you can see, we've done a significant amount of volume with Dollar General, which we view as an essential business, especially in light of what's happened with COVID. They carry a BBB credit rating from S&P. And so we view them as a good partner within our portfolio. We've done a little over 100 million of acquisitions year to date. The makeup of our portfolio today is 46 assets. It's about 1.5 million square feet. As I mentioned before, it's across 18 industries in 17 states. Our largest tenant is Wells Fargo, and our largest state is in Florida. Our weighted average lease term is 8.5 years. Our portfolio is 100% occupied with long duration leases. We're focused on stability and durability of cash flow within our portfolio. Approximately 40% net leverage. So we're operating at relatively low leverage with a very attractive cost of capital. Our cost of debt is below 2%. As I mentioned before, 82% of our tenants are credit rating, with 72% of that coming from retail and 28% from office. 43% of our tenants are investment grade rated, which compares favorably to our peers in the industry. And 76% of our base rents comes from larger MSAs with more than 1 million people in them. 46% of our leases, or approximately 50% of our leases, have annual increases or contractual increases within the leases. So not only are we focused on stability and durability, but we're focused on cash flow growth over time as well. This is a graphical representation of our geographically diversified portfolio. The darker shaded states are areas where we have significant concentrations within our portfolio, being Oregon, Texas, Florida, Georgia, and North Carolina. We would expect this to grow over time as we continue to make investments and further invest into other states. We are wholly focused on the United States at this point in time. As I mentioned, we're also focused on meaningful markets with significant populations. Current concentrations, as I mentioned, Portland, Orlando, Detroit, Atlanta, Boston, and Tampa. And again, Florida and Oregon and North Carolina are our top 3 states. Looking at the industries that we're invested in, we have a significant concentration in financial services with our investment in Wells Fargo. Hilton makes up our hospitality exposure, which is in the Orlando market. General merchandise, home furnishings, entertainment, and dollar stores round out our top 6. We are currently seeing a lot of good opportunities in the pharmacy, discount retailers such as dollar stores, off-price retail such as TJ Maxx and Kohl's, as well as some grocery. Looking at our portfolio in terms of lease expirations, we have no material leases expiring until 2024, with more than 75% of our leases not expiring until after 2025. So good long-term investments over the past year and a half that we've been in existence. As I mentioned, 50% of our rent comes with contractual rent increases within the base term of the lease, and 82% of our tenants are credit rated. I think what differentiates our investment strategy versus some of our peers is we're more focused on the quality of the real estate in addition to the quality of the tenants. And so if you look at the dispersion of our income, a significant portion of it comes from top 30 US real estate markets, with almost 50% coming from these markets noted on the right on this slide. As I mentioned, we've had strong, resilient performance during COVID, and this is a good representation of that performance. So we've collected 100% of our contractual base rents in each of July, August, September, and October. And we expect that trend to continue as we move into 2021, especially with the quality of our tenants and the industries that they're operating within. As we look at our balance sheet, our valuation today is about $230 million of enterprise value. As I mentioned, we have $90 million of debt associated with that enterprise value. Our net leverage is below 40% and an implied cap rate of 8.2%. We have no debt maturities until 2023 and a relatively simple balance sheet with just an unsecured credit facility making up all of our debt, and that's extendable until 2024. And our cost of debt is below 2%. And we recently increased the size of that facility by $50 million to $150 million to give us ample capacity to grow as we head into 2021. In terms of our guidance for the year, we're just a stone's throw away from achieving our acquisition guidance of $110 million. We've already done $101.2 million year to date. At this point, we're outpacing our expected investment yields. Our range was 6.5 to 7%. Year to date, we're at 6.9%. So we feel very good about achieving our guidance for 2020. In terms of peer comparisons and relative investments, we try to put it in this succinct slide. As you can see, we're in the middle. Our FFO multiple, which is the REIT equivalent of earnings per share, we're trading at 9.3 times. whereas the peer average is closer to 15. And our dividend yield is 5.8 times, whereas the peer average is closer to the mid fours. So we're providing better relative valuation today with a higher investment yield with comparable top tenants, with Wells Fargo, Hilton, Hobby Lobby, Dollar General, and Walmart being our primary tenants. So with that, Elliot, I'll turn it back over to you to see if we have any questions from the audience.
We do, from James. All right, so you may have addressed this a bit, but I'll readdress here. How do you think about your capital allocation going into 2021 in terms of retail versus office and also by geographies?
Yeah, I think we're seeing better opportunities in the retail space than we are the office space on a risk-adjusted basis. We still have an eye towards office, and if we can find the right opportunity, we'll obviously execute on it. But I think we're seeing the best opportunities on the retail side right now with the way our pipeline's shaking up heading into 2021.
Perfect. One more question from James. How are you seeing the CRE markets in terms of cap rates and lending/refinancing?
Yeah, I think for the assets that we're investing in, which are single tenant, usually high quality with well-known operators, typically sector leading operators, there's no shortage of capital chasing it from a lending perspective. We're seeing competitive terms, and we haven't seen a lot of movement in terms of credit spreads there. From a cap rate perspective, it ebbs and flows. When it comes to the essential businesses like the dollar stores and grocery, we've seen some cap rate compression. Conversely, with areas where we're seeing more stress, such as movie theaters and entertainment assets, we're seeing cap rates move out pretty materially in the marketplace, just given the uncertainty.
Perfect. Where can we find you?
So we are based in Daytona Beach, Florida. Our website is alpinereit.com. Feel free to reach out to me. My contact information, as I mentioned, is in the presentation. It's also available on the website. Happy to do any one-on-ones through the Brella platform, or feel free to email me, and I'm happy to hop on a call with anybody that wants to talk.
Fantastic. Matt, really appreciate your time today. Your presentation was very insightful. And I definitely think you guys are going to be set for several years.
We appreciate it.
Yeah, of course. Thanks again for being here, my friend, and take care. Stay healthy.
Take care. You too.
All right. Talk to you soon. All right. Awesome company to hear from there. A little bit of a change of pace, I think, from what we've heard from the majority of the day. So again, that was Matt Partridge. He is the CFO of Alpine REIT. All right, moving right along, we have David Lukacs. He is the CEO of KABN. I'm assuming that's how you pronounce it. It is KABN. That is also the ticker on the CNSX, KABN. Is David with us at this point?
I'm here.
He is.
Thank
hey,
you.
How are you, David?
And that you pronounced my last name and the company name perfectly.
It's about time.
That usually doesn't happen.
Listen, with the track record I've had today, that's surprising. So I'm going to let you hop right in, David. No feel free to share your screen, and we'll get going.
Just give me a sec, and I'll
of course.
Get this started, and we can go from there. So I want to thank everybody. I know it's late in the day, and appreciate it, but I want to thank everybody. And we're here to talk to you about KABN. KABN is a very innovative concept. We're focused in the self-sovereign identity space. Our team has over 25 years in the technology space, from early e-commerce all the way through to AI and other technologies. And I want to talk to you a little bit about where people are going, where consumers are going, and what's going to happen. So we'll dive right into it. Our disclaimer. So in the next few minutes, we want to talk to you about who KABN is, what is self-sovereign ID, how are governments treating the new data protection laws, what our services are in the addressable market, how KABN is here to empower users to create, verify, and manage their SSI, and how we'll generate revenue from our programs and create stakeholder value. So let's start with who is KABN. So really, our philosophy is very simple. It was born out of the fact of what's happened in some of the social media markets with data vulnerability and sharing of data that shouldn't have been there. And there's all kinds of issues. And we took a position 3 years ago that we wanted to focus on empowering users to manage their digital identity, which has ultimately been called self-sovereign identity. Oh, I'm sorry. And at the end of the day, that's what we do. We help users manage their self-sovereign identity. And that is putting users in control of what they own and what potentially others own, and allowing them to manage it. Our team, as I mentioned, is an experienced leadership team with on average 25 years plus. We're publicly listed in Canada under the symbol KABN. We our shell, or sorry, our RTO, we don't call it in the US a shell, but our RTO came with a gray market listing in the US and a Frankfurt listing, and we're in the process of looking to upgrade both of those. When we talk about reach and adoption, what's really interesting about self-sovereign identity is it covers 100% of the online market. So our addressable market is everyone online. We are members of the steering committee for the Trust Over IP Foundation, along with companies like MasterCard and IBM and Accenture and Aetna and USAA and other major companies. And that allows us to have a say in the development and participate in the development of how data will be exchanged online between people. We have a low CapEx and OpEx. We came into our reverse takeover or public deal with technology already built. We're cloud-based. We have our own KYC and AML platform for bank-grade identity verification. So we're able to identify users based on FinCEN and FinTrack regulation. And we have our own biometric suite of cloud-based services, so we can verify not only you are you, but actually attach that to biometrics. We have a very unique business approach. We give our services away to users for free. Now, that's not so unique, except we're creating one-on-one and known relationships with those users. So at the end of the day, they're more open to marketing opportunities that we can bring them that have value for them. So at the end of the day, what makes us unique is there's no fakes or bots. Everyone in our system is a known user. And we focus on the fact that we work with our customers to help them manage their permission data. We never sell or rent any data. All we can do is work with our customers to bring them opportunities. As I said, you're welcome to go to our website and look at the founding team, but it is it's a great team, probably the best team I've ever worked with, I have to say. And everyone is an expert in their field, whether it's loyalty or technology development or financial services or compliance. So we've got a very, very strong team at the outset. I'm going to talk to you a little bit about self-sovereign identity. And, there's this great cartoon that's been out there since the late 90s that says, on the internet, no one knows you're a dog. I mean, seriously, nobody knows who you are really at the end of the day. And it's very hard to prove yourself. And in the real world, we do it every day through face-to-face interactions, by handing over identity, by using keys to open locks and opportunities. So really at the end of the day, how do you do that online? How do we make sure you really are who you say you are? And it's a massive industry opportunity. So the future really is taking your physical wallet, your physical keyring, and all that data that is out there on you, and providing it so that it's under your control. And that's what we're doing. We're helping support that by empowering users through our tools and services to do that. And to do that, we have to offer really great and exciting tools and services, and we'll get to those. And again, this is supported not only by the addressable market, but by regulation. In Europe, we've got GDPR. In California, you've got the CCPA. Canada, PIPEDA, Australia, and other regions have their own regulations that are putting more power into the hands of consumer to manage their own data and identity services. And there's standards and technology that's also supporting that through blockchain and W3C verifiable credentials and trust over IP. So it's a really important time for the emergence of this. I will take a step back for a second and say, when the internet was formed, and we've been around working the internet since its early days, very simply, the challenge was that identity was not accounted for at that time, and simply because it was too hard to figure out that technology that would prove who you are. But today, it's sort of like trying to change a jet airplane engine in mid-flight without disturbing the passengers. How do you start putting data and identity into the mix? And I think ourselves and some of our partners have really done a good job in figuring that out. And we're sitting in a very unique leadership position. I won't go into this in great detail, but we believe we're at the right place at the right time, and the industry is supporting that. We're sort of just getting out of the early adopter stage and into where we can reach out to maturity. So we're in a really, really good position right now. Again, as I said, we belong to the Trust Over IP Foundation as a steering committee member. It's a large organization that is setting the standards of how technology and human beings will interact with respect to trust and data exchange. And as you can see below, we've got some very amazing participants and partners in this organization. I want to talk to you about, because this is really the meat of the company, what we do to help our consumers engage. And we've developed a very fun, engaging, sticky, and long-term retention program called Liquid Avatar. And Liquid Avatar is exactly what you think it is. It's a high-value avatars that you can create all for free, or you can purchase avatars from our creator studio from well-known creators, but you can create your own avatars to represent various facets of your life. Over time, you'll also be able to upload your own pictures for logos for business. But think about it. You could have a different avatar for business, consumer, work, play, and those avatars could contain different types of information that you can share. You no longer have to send a V-card. You no longer have to use usernames and passwords. These avatars in the long term will be able to, in combination with verifiable credentials, will be able to get you access and prove your identity wherever you go. Now, at the end of the day, we're looking to help you share what you want, when you want, and with whom you want. This isn't a pipe dream. This is a reality of where we are. And when you look at the addressable market and the services we offer Liquid Avatar offers biometric integration, digital wallets, self-sovereign identity, data services, and verified identity, all for free to the consumers, in combination with verifiable credentials, digital credentials that various aspects of your life. And the engagement is with the entire ecosphere of services and offerings to 100% of the addressable market. So for us, it's not about capturing all of that. To be successful, we know we only have to capture a slice of that. Secondly, what we're doing is we're making sure that we can not only address the creation of certain credentials that we produce, but also we can take in credentials from other producers. Sort of like being the app store, where we're not only producing our own applications, but we're allowing others to produce applications, and we're storing those in our customers' digital wallets. This is a big and bold slide, because at the end of the day, we're all doing stuff online. Every moment of the day, we're engaging with all kinds of organizations, but do we really trust them? Do they really trust us? By creating a liquid avatar, I can now control biometrically and through safe and secure methodologies. I can now create verifiable credentials, digital credentials that can be combined with my identity that allow me to safely do things online that are between myself and the companies or organizations I want to deal with. There's no more, middle people. There's no more cookies. There's no more anything except the relationship between myself and the other party. What's really amazing is today we announced the launch of a consortium to deliver verifiable access and identity credentials for the healthcare industry. This is our first credential offering. This is a credential with a number of consortium partners that will allow us to create digital and verifiable based on your individual identity credential. So we will have issuers in the healthcare industry that can issue these credentials for testing, diagnostics, and vaccines. And then you would hold those credentials in your wallet. They'd be connected to your identity. And then when you walked into or wanted to use it at an institution or facility that needed to verify who you are, it would be easy as scanning that credential. That would create a relationship with our ecosystem. And using blockchain technology and other technologies, trusted technologies, we would be able to prove who you are and that you have that physical credential. It's that simple. So no more futzing around and no more having to carry a card that could be compromised or duplicated. This is a verifiable way using proven technology to ensure that everyone can start getting back to their lives. And again, when you think about this, if we're giving things away for free, how do we make money? Because we have vendors and partners that want to reach known users. They want to reach real people who have certain demographics and opportunities. And on a permission basis, we can introduce the parties and receive a bounty fee or commission. We are also approved in multiple jurisdictions to issue our own Visa debit card. So we've already gone through those processes as well. And again, we cover all segments of the market. And this is a proven methodology with other companies that this bounty or commission or fee space by giving away a service has been successfully deployed with companies like Credit Karma and others. And we believe that we can generate significant revenue from these relationships without ever having to give up a user's data. Again, our revenue drivers are Liquid Avatar, what we call KABN Cash, which is our catch-all basin for all our revenue services, and our Visa and other financial services programs. We have a short, mid, and long game strategy. Our first strategy is to engage with users. We already have active relationships with user groups that have over 100 million users. So we're well on our way to the ability to acquire users at very nominal costs. Our second stage is to get into a sticky sort of arena, and we're doing that with our avatars, and we're going to be able to do all kinds of interesting and cool things with those avatars. And our long game is to create retention strategies by giving users the ability to take into the cloud device agnostic opportunities so that your data doesn't reside on a phone. So if you ever lost your phone, it was stolen or compromised, none of your data would ever be compromised. We can't get to your data because it's owned by you and it's biometrically controlled by you. We've hit all our milestones to date, and our milestones for Q1 2021 are to launch a verifiable credential program for COVID-19, our SSI wallet program, and other opportunities to make this a successful program. And again, we have other consortium partners which we will announce in the next few days. But again, we've announced in healthcare, travel, university, and venue programs with well-known brands that are already in play with their partners. This is very quickly, this gives you an indication of how not only revenue, so sort of ARPU works, but there's also estimated valuation of a user, an enterprise value of a user. And we've seen this with many companies in our industries or related industries. Again, we're not looking at boiling the ocean. We're looking at taking a piece of the pie in North America and then beyond. And we already have opportunities to do so. If I can leave you with 3 points, the first one is reach. SSI or digital identity is going to be relevant and is relevant, in fact, to 100% of the online market. It touches everyone. Our business isn't a B2B or B2B to C or B2C. Our business is a C to B or a C to B2B. We start with the consumer. We empower the consumer. That's everyone online as our available market. Our unique business approach. We're revenue focused, low customer acquisition costs, scalable, and all with the user owning and managing that data. And again, we have an outstanding team to support our efforts. So I'd like to thank you and maybe turn this over to some questions if that's okay.
We are about at the end here, but man, you have a cool company, David.
Yeah, I had to do it in 15 minutes. I apologize.
No, I don't know how you did that. How you dove into Liquid Avatar and KABN Cash. I mean, you guys are impressive. That's awesome. Could you just reiterate the tickers and your exchanges?
Sure, but the primary ticker is KABN on the CSNX or CSC, and it's TRWRF. We're still, again, gray market, but we're looking to improve that to an uplist. And I just want to invite everyone, the best URL they can go to, it's real simple, is www.liquidavatar.com.
Great. Liquidavatar.com. Cool name. Love the thumbprint on the t-shirt of the avatar. I thought that was a cool touch. David, I appreciate you being here, sir. Really cool company. Definitely going to, continue watching you all, and hopefully we'll have you back to speak again soon once we hear about some of these partners in the next few days.
Thank you so much. Be well. Bye for now.
You as well, David. Thanks. All right, everybody. We are to our last presentation of the day. Again, that was David Lukacs for KABN, KABN. Next is a very cool company. I hope you all have stuck around for this. Siyata Mobile, really, really cool. We have Daniel Kim, the Vice President of Corporate Development, here to talk about the company. They are listed on NASDAQ, their ticker being SYTA. Daniel, looks like you are with us, sir. If you just wouldn't mind turning your mic and camera on, we can get you going. There you are, sir. How are you?
I'm great. Thank you. Thank you so much for having me. Appreciate you hosting the event.
Of course. We're thrilled to have you, Daniel. So if you want to go ahead and share your screen, I will let you go ahead and dive right in.
Terrific. Thank you so much. I appreciate everyone sticking around after quite a long day. So I appreciate you sticking together, staying with us. So happy to present Siyata Mobile. We are traded on the NASDAQ SYTA, and in fact, our warrants trade as well, SYTAW. And I'll jump right into the presentation. That's our standard disclaimer page, which you can also find on our website, siyatamobile.com, and on EDGAR, as we have our now reporting assure. So what I'm going to do is I'll describe who we are. I'll address the current market situation in terms of the limitations that the current incumbent technology has, and describe the solutions that we have that are disrupting the market. And I'll close out our presentation with our valuation and where we sit today. So Siyata Mobile is a provider of cellular communication solutions, primarily for in-vehicle mounted IoT devices. And these are designed specifically for global first responders and commercial customers. And this is based on a technology called push-to-talk over cellular. And I'll describe what that is in the coming slides. What you'll see is our products, because we are a small company, when we came into the North American market, Siyata Mobile clearly does not have a brand amongst the consumer mind. So we licensed the Uniden brand, which is a globally recognized technology brand, and all of our product categories come under the Uniden brand. Headquartered in Canada, and our main R&D is within Israel. Our current market cap is roughly $22 million US. For the size of our company, we're very proud of the team that we've assembled. Our founder and CEO, Mark Seelenfreund, has been in the industry for decades. He had previously founded a telecom distribution company. And likewise, across the board, if you look across all of our senior management team, a great depth of experience with decades of experience, both in the telecom industry as entrepreneurs and other venues. So terrific team in terms of how we are growing and where we are going. Likewise, with our management board and directors, I'll highlight here that on the far right, you'll see the various outfits that these board members have previously worked with. Again, decades of experience, many with some of our key customers, such as AT&T, Verizon, TELUS, and Motorola. So what is it? The market that we are going after is something called land mobile radio, or LMR. Think of that as the type of radio you would see in 18-wheel trucks and police, fire, and ambulance. On the bottom left-hand corner of this slide, you'll see a picture of a typical cabin, and it's usually a multitude of hardware solutions from multiple different vendors. You'll have a navigation system, a fleet management tool. Of course, on the very bottom, you'll see a land mobile radio. And this is a device that provides one-to-one or one-to-many communication. And then you'll typically have a separate device for connecting directly to your black box. All in, this is a very complicated solution coming from multiple vendors, so it costs roughly $5,000 to $7,000. The big problem with land mobile radio, and this is a technology that's been around for 40 or 50 years, and it works very well for communicating. However, it does have significant limitations. There are about 10,000 different LMR networks in the US alone. And oftentimes, much like your radio, if you drive too far, you'll lose connectivity because the power just simply doesn't provide enough coverage for you. So, and if you do drive across country, then you need to hop from one LMR network to the next. So it makes the network very inefficient, it makes it expensive, and oftentimes difficult to communicate between various jurisdictions or different counties. So there's numerous restrictions. It is largely an analog-based system. It is moving towards digital, but it is by and large for voice only with very limited bandwidth. What is the new technology that's coming to the market? And this is called push-to-talk over cellular technology. And this is designed to replicate exactly what you get with land mobile radio, but takes advantage of the 4G network that's currently in place within the US to provide high bandwidth communication. So you can make cellular calls, you can make push-to-talk over calls. So you basically push a button. It's much like a walkie-talkie. You can do one-to-one or one-to-many. And you can now download apps and all the various other things that are available within this market segment. So why is this coming to market? When 9/11 happened, there was a major problem with communication amongst the first responders. Fire, police, and ambulance often use incompatible LMR networks. Even police from different counties could not communicate with one another oftentimes because they were incompatible. So the US government decided to address this issue that they would set up a separate government entity. It was called FirstNet, which is an acronym for First Responder Network Authority. They put this out to tender, and AT&T won this contract, which is valued at $100 billion. So this is a very large public-private entity. And at the moment, AT&T has been investing billions of dollars to build out this network. They were given a specific frequency called band 14, and only first responders are permitted to use this, or at least they're given priority access on this network. They are now 80% complete in terms of building out all the infrastructure, the antennas, the radios. And what's exciting to us for a company like ours is where we're seeing the growth now is in the subscribers. Right now, they are at 1.7 million FirstNet connections. That's more than double year on year. And they have 14,000 public safety agencies signed onto this network. What I'm going to describe to you now is the product categories that we have addressed to this market. And we have three broad product categories. And what makes our company interesting, despite being relatively small, is that there is no other company in the world that provides these three product categories. We, of course, have competition in each of these verticals, but no one provides this complete portfolio. And what's also unique is all these product categories sell into our same channels and into our same end customers. So we derive a lot of leverage in terms of getting to our end markets. On the far left, you see our in-vehicle devices. This is our flagship device called the UV350. This is a direct land mobile radio replacement, addressing a very large market segment, north of 20 million first responder and commercial vehicles within the US and Canada. In the middle, you'll see our companion devices. These are rugged handsets that address the very same market segment. Think of most police, fire, ambulance, or any type of transport vehicle will have a dedicated device within the vehicle. That's what our first category provides, but often multiple drivers. So then our rugged handsets are a great companion to that. Our third product category is cellular boosters. And these come in multiple variants. They can go inside the car, inside your house, or in large venues like warehouses, et cetera. So all these product categories address very large market opportunities. Rugged handsets, as you can see there, almost 50 million in terms of enterprise and task and public workers. Cellular booster market is a multi-billion-dollar market and growing quite rapidly. I'll describe now in detail each of our product categories. In our first product category, this is the UV350. It is an Android device. This is hardwired into the car. This was the very first and only dedicated in-vehicle device for the FirstNet market, and we are FirstNet certified. We came into this market several years ago and still no competition, surprisingly. A very unique device. It is very unique in that it is hardwired professionally. It is always on. When the vehicle turns on, it immediately turns on, and when you turn it off, it turns off. It has a dedicated buttons for push to talk. It is Android based, so you can download the numerous apps that are available on the FirstNet network. But most importantly, it delivers incredible driver safety. It has excellent noise cancellation, and it provides a loud, crystal clear sound. You can use your phone in the car most of the time, but as you know, if you are moving to a more noisy environment, very difficult to make a voice call in those types of environments. In terms of the competitive situation, of course, you can use your phone in your car, but oftentimes you're not allowed to touch your phone. In the middle, you'll see a two-way radio. That's the market that we are going right after. And two-way radios, as we discussed, have numerous limitations. Rugged tablets are relatively common, but you cannot make cell calls on that. Oftentimes you can do push-to-talk calls, but not cellular calls. And modems require companion devices. So what makes our product offering unique is that it lowers the cost and it provides a massive increase in functionality and safety. A great quote comes to us from Fairfax County, which is the test bed for all things FirstNet. And when they replaced their LMR systems with push-to-talk solutions, that county alone saved over $16 million in upfront costs and $2 million annual. So massive reduction in CapEx and OpEx. And as we discussed with regards to functionality and safety and coverage, they saw tremendous benefits. So this is really turning the LMR network on its head. Our second product category is rugged handsets. We have two variants at the moment. We have the clamshell on the very far left, and we have a tablet style, and you can see the yellow dial on the second phone. These are dedicated to buttons that will be a channel selector, and you can have a dedicated push-to-talk device. These are all rugged devices. Same thing here, loudspeakers with noise cancellation, purpose-built, and very unique in the marketplace. Today, we're only selling these internationally, but we plan to come into the North American market with these devices as well. How we competed in this market, because it is more competitive. There are large players, clearly. There are Samsung, Apple, Kyocera, Caterpillar, and other players like Sonam. But typically speaking, these other players will take their high-end phones. Samsung and Apple phones are great examples that are $1,000, $1,500 devices, and they'll put a rugged skin and they'll sell it into this market as a rugged device. We purpose-built our devices to work specifically within this market niche. As a result, we can come in at a price point that is significantly lower than the marketplace, than our competitors. So we are a low-cost disruptor. We provide the exact same features and functions required for this market, which is a large and growing market. Our last product category is cellular boosters. And within this product category, we recently launched a new series called the Hero series that are designed specifically for the first responder market. On the far left, you'll see a picture of our in-building solution. In the middle, we have our in-vehicle solution, which is a smaller booster, which have an external antenna. And then on the very far right, we have the last variant, which will connect directly to our flagship device. Historically, we have been selling these primarily online to the consumer, both directly on our website, unitandcellular.com, but also through Amazon, Costco, etc. Our push now is to move into the carrier market. And as we continue to expand to the North American market, we want to leverage the relationships that we have established with all the primary carriers, such as AT&T, Verizon, and FirstNet. And we hope to continue to grow that channel with these new product categories. So how do we compete within this market segment? If we look at this product category, there are larger competitors within this space, but companies like WeBoost and SureCall are some of the larger players, but they are primarily consumer-oriented products that sell primarily online, and they do not work the carrier channel, whereas we do. So we provide a unique differentiation in that we leverage get tremendous leverage from our carrier partners. With regards to how we get to market, as I suggested, we continue to sell largely into the carrier channels. We sell internationally and North America. AT&T, FirstNet, Bell, Rogers, Motorola, and Verizon are our biggest customers. We're a small company at roughly 28 people, and we don't envision really adding that many more people to be able to leverage these channels. What we do is we deliver our products into these carriers. These carriers in turn then deliver through their end customers, through their dealers and their representatives, of which each of these would have hundreds to thousands of representatives. So we train the carriers and their dealers, and they in turn sell to their corporate customers. So we derive a lot of leverage by selling into these key networks. Of course, the benefit for all these carriers is that they will activate a SIM card. If one of their key customers, a trucking company as an example, had a land mobile radio, AT&T, for example, would not be generating a SIM. Of course, they are motivated now to move them over to a solution like ours, and they would gain a monthly SIM. Our sales pipe continues to be very robust and growing quickly, growing at roughly 2x year on year. Our current total opportunity of sales is roughly $31 million US, broken up by prospects and proof of concept, split roughly equally. Prospects would be customers that have shown early interest in our products. Proof of concept would be customers that have moved to trial, and we are actively engaged to moving them to purchase order. Our long-term goal for the balance for the long term, our goal is to get our opportunity pipeline to north of $100 million. How our revenue has split out, and one of the major themes that investors should be aware of how as we shift from our legacy portfolio of 3G products to 4G products, the margin profile and the revenue makeup of our company has been changing dramatically. If you look at the pie chart on the left, for the first 3 quarters of 2019, North America represented 1/3 of sales. Fast forward to this year, and North America now represents 2/3 of revenue. So you've seen a complete inversion. The reason why that is happening is our 3G sales have continued to decline in international markets. And as we penetrate the North American market, our revenues continue to ramp up very nicely. Why that is important is our legacy 3G sales have roughly a 25% gross margin, whereas our 4G sales in North America have 40% plus gross margin. So on a blended basis for those time periods, our gross margin has gone from the high 20s to the low 30s. And we expect that trend will continue as our mix continues to improve towards North America.
Hey, Daniel, we are coming close to time. If you could leave us with a few more thoughts here, and then we'll wrap up, okay?
Absolutely. Let me just fast forward then with regards to where we sit today. We listed onto the NASDAQ just at the end of September, and it was a $6 IPO. Our warrants were priced at $6.85. We have 3 million shares outstanding. We have roughly 11 million in cash, a little bit of debt, and our enterprise value today sits at $18 million. We have one of the other keys here is we became qualified with AT&T in the middle of 2019, with Verizon at the end of 2019, and we hired all of our sales teams in 2020. So 2019 and 2020 have been a year of build, and now we are primarily focused on growing profitability, and we now have the team in place to do so, and we're finding tremendous opportunity. The last point I would leave you with is, in my previous career as an analyst for 25 years, I made a career out of finding mispriced, undervalued companies, and that address unique niche opportunities with high growth, and Siyata shares all those attributes. We have a leading team developing great enterprise solutions into these great niche markets, which are significantly large for a company like ours. We're shifting towards our high margin product portfolio. Our total addressable market's north of $20 billion. Our backlog is building. COVID, of course, has created challenges, but has also created opportunities as our booster sales are seeing record demand. And we see tremendous operating leverage as we do not need to add very many people to our team.
Fantastic.
So with that, awesome. I'll wrap it up.
Yeah, Daniel, really appreciate you being here. Very cool company. It seems you guys operate in a very niche side of things, especially within that first product category. Interesting to kind of think about why there are no competitors there, at least at this point. But, very cool. Very much looking forward to seeing you all grow. Again, I believe it is NASDAQ, SYTA. Definitely check them out. Daniel, again, thank you so much, sir. Stay healthy, stay well, and we will definitely see you soon.
Terrific. Thank you so much.
Thanks again. All right, everybody. Oh, Luke is back with Rocky Balboa. That is how this day has gone. Rocky. Honestly, this day has been incroyable. I am super happy.
You know why Rocky's here, Elliot?
Because
it's not just because he's a cool guy or it's a good movie or anything like that. It's because the thing I've been saying all day is that if you really want to find alpha out in the market, these small cap companies are the way to do it. Just like when Rocky, he was up and coming in his boxing career, the guys who believed in him, followed him, did their due diligence, figured out what the next big thing is going to be, were absolute winners. I mean,
he got up those stairs.
Exactly. You can only get so far knowing and betting on the stocks that everybody already knows and bets on. Right? It's knowing what a lot of these smaller cap companies are, knowing what technologies are going to be disruptive in the future, what markets are being created that we don't even know about. And that's what this event is all about.
I'm laughing at Jason behind you.
We have an air horn.
We have an air horn. Air horn at Jason. Oh, man. This has been a fun day. Luke, you were a fantastic co-host. But guess what? We have a whole other day of content. And you and I will be back tomorrow for a whole other day of content. And ideally, we'll get Jason to get back here with us as well. But you know what, Luke? You know what I think we could leave our viewers with that I think would be really exciting?
What's that?
One more stock pick.
One more stock pick.
Do you have one?
I can do another stock pick.
Just do one. Leave us with one stock pick.
All right. So here's the theme I've been thinking about, right? What are some of these lockdown plays that people aren't thinking about, right? There's all the obvious lockdown plays like online shopping and food delivery and that sort of thing, right? I'm done with those. I'm over those. Just like the big cap stocks, everybody already knows the story. Again, that's why I like playing in the smaller cap arena or with stories that are less thought of. So here's my lockdown stock pick for you. Ticker NYT. That's right. It's New York Times. Here's the thinking, right? People are going back to work from home. They're not in the office as much. They're spending more time on the computer. They're not going out and about. And you have winter hitting, right? So everybody who was outside all summer, right? They couldn't go to restaurants or bars or concerts maybe, but they could still go outside. That's over. You live in the top half of the country. You can't do that anymore, unless maybe you're Rocky and you're tough and you'll battle it out in those cold conditions. So you're gonna have more people on the internet. New York Times business is driven pretty much exclusively by digital at this point. It's driven by their recipe sales. It's driven by premium subscriptions. And so that's why my pick is NYT. I think that they'll see a surge in traffic, and with that, a surge in subscriptions.
That's awesome.
That's the final stock pick of the day.
They're almost as cool as Benzinga.
Yeah, almost.
I'm just saying.
Wait till when New York Times gets a Rocky cutout in their office, then they can compete with us, I think. But we're on a whole different platform.
I mean, Rocky plus Seinfeld is really I think the kicker here. All right. We're going to have to come up with a nice ticker once we go public later on down the road in not the near future.
Exactly.
Awesome.
All right, guys, tomorrow, don't miss out. We're going to have more stock picks, more education, and absolutely more company presentations. Again, these are the companies that you can know about before anybody else does, before Wall Street does, before the hedge funds can invest in them. Know what these disruptive technologies are, get some alpha out there in the markets, and let's all make some money together.
Yeah, that's day one, y'all. We will see you back bright and early day 2, 9 a.m. tomorrow, track 1 and track 2. Luke, I'll see you then, sir.
And remember, first is the worst, track 2 is the best, second is the best, baby.
That's right. That's what I'm talking about. All right, everybody, have a wonderful evening. We'll see you in the morning.
All right.